What's up, Tasty Nation? Welcome to the show. We got a crazy day in the markets for you today. It is August 20th. My name is Mike Butler. I'm here with Jermal Chandler. Join us on the YouTube chat. If you haven't already, we're streaming live there. You can throw in your trade ideas and questions along the right-hand side chat. But this might be the turning of a coin for a little coin called Bitcoin.
It does seem like it. It does seem like yesterday meant something in Bitcoin, and whoa, it is on the move this morning already.
Yeah.
Amazing.
It's wild. It was, yesterday was probably one of the craziest days I've seen live trading. 7:32 Central. I'm just going to get that tattooed on my arm, just right on the inside here, because that's when everything ripped or dipped.
Yeah.
You literally, to the minute, you saw the markets rip higher, Bitcoin rip higher, crude oil sold off and then rebounded. Now crude oil is higher. The E-minis and NASDAQ are down 0.5%, closer to 1% in the NASDAQ, but Bitcoin up another 5%. And this is an absolute tear. This is the biggest 2-day streak we've seen for literally years, it feels like.
I open up Twitter and the first thing I see is Bitcoin is back. Crypto bros, you can quit your day job at McDonald's. It's over. Don't worry about it.
Yeah.
It does seem to be back. I mean, we saw a big move in there yesterday, and this is the follow through right here. This is exactly what you want to see when something has been down for so long. This seems to be a change for sure.
Yeah. And I think it's really interesting because it comes on the at the tailwind of Trump saying hyperliquid, trying to bring it to the U.S. market. That was insane. I was sitting there watching this. I'm like, what is going on in this world right now? He's talking about hyperliquid on the podium, like craziness. But he mentioned interest rates. He wants them down as close to zero as possible.
Mm-hmm.
QE. Ultimately, the result of yesterday's announcement as well. And I think the market is saying, well, if they're going to inflate the US dollar and reduce the value of the US dollar so much, why not go back to Bitcoin? And I think that's really for Bitcoin, it was always about having some kind of catalyst to remove the downside pressure and release the upside cap. And I think you're starting to see that is coming to fruition, at least right now.
Yeah, I mean, when something is just not moving for a while, I think you just gotta, when you're interested in it, you gotta make plays. It's gotta be further out to give yourself some time, and you just gotta play the waiting game. And there's nothing more than that. And so we've done that in different names. Similar to SpaceX, I think it's a similar type deal. That's something that's not moving the way that you would think or you would expect. And so you just try to make plays, but you push it further out. This has been a quiet trade. Excuse me. This has been a quiet trade for a while in Bitcoin. And now you're starting to see the fruits of some quiet labor, if you will. And so, yeah, this is a strong move here. I'll be looking for more continuation. Again, I put on plays in MicroStrategies. I put on plays in Coin. I put on plays in Circle. And they've been further out. It's been frustrating to some degree. But, if you put it far enough out and it's not that big of a drain on your portfolio, that works.
Yeah, I've had IBIT shares and ETH shares for a long time. And it's not like I'm playing for a catalyst to the upside like this, but I know that there probably will be a catalyst in the future. And that's really it. Like trading small enough to where you have the ability to hold positions through time, continue to reduce cost basis, and wait for the time where the product you're in can shine. Like that's really it. And to your point, MicroStrategy, that was also a trade I did for yesterday's trade idea. I put in a really wide call diagonal spread because MicroStrategy, one thing I know about MicroStrategy is that if you get a rally to the upside, and this is, again, layer on implied volatility on your bottom half of the chart here, just go to the indicators, type in implied volatility, and this just plots the 30-day IV index. So it's basically a visual of seeing where implied volatility is. It's also reflective of IV rank. You can see where IV rank is calculated from the high and the low. But the point is, when you see this rip higher, this is when it went from 100 to 500 in 2024. You can clearly see that into that rip higher, you had a massive implied volatility expansion, not a contraction. And then same story right now. You're seeing a little bit of a expansion in implied volatility from the lows, and we've gone nowhere but up. So I think this is a really interesting point in time where if you believe that MicroStrategy is going to go to 200, it's trading at 113 right now. If you think MicroStrategy is going to 200, call diagonal spreads, naked long calls, like these are all pretty cheap here up at these levels. And if you look at like the 200 strike, and this is for June of 2027, the 200 strike right now is trading for $1,000. It's not going to be trading for $1,000 very long. And this is an option that got all the way up to $6,400, literally 6x the current value. And that was in May of 2026 when MicroStrategy was just a little bit higher. So I think these are the types of strategies. If you understand that MicroStrategy is going to have increases in implied volatility on the way up, if the on the way up is an elevator up, not an escalator up, that is a position where you can really see nice positive gains. So went with a call diagonal spread yesterday and kind of long term, went to November. I bought the 110 in November, and then I sold the October against it at the 140 strike. So I got into a 30-point wide call diagonal spread for $1,000. And this will be a $2,000 winner if we get any kind of continuation here.
Yeah, this is for the crypto bros have been waiting on some type of move, and this is definitely something that you can sort of hang your hat on. So we'll see how it plays out from here. We got a great schedule for you guys today. Let's pull up the schedule for today. We got Chris Vecchio come up in just a second here. We got Morning Movers with Gus Downing at 8 a.m. We got Opening Bell, of course, at 8:30 a.m. Central Time. We got Live Trades with TP at 8:45 Central as well. That's the early part of the show. And then later on, we got 9:20 a.m. Tim Knight, Trading Charts, Tasty Research with Julia Spina at 9:30 a.m. Central Time. We got Confirm and Send with Chris and TP at 10 a.m. Central, and Risk and Reward with Gus and Errol at 10:30 a.m. Don't forget, Trade Ideas of the Day. I kick it off at 11:30, followed by Mike 15 minutes later, followed by Gus 15 minutes after that, followed by Errol 15 minutes after that, followed by Chris at 12:30 Central Time, and then Ilya at 12:45. So don't miss that. Tons of trades of the day. Trading like never before. But right now, oh, yeah, that's right. We have Mr. Henry Schwartz from the Cboe at 9 a.m. We have Karsan also at 2:30 p.m. Central Time as well. So lots of guests, lots of things to talk about. But right now, let's bring in Mr. Chris Vecchio.
Yeah.
It is 7:35 a.m. Chris is on the horn. I know he's ready.
We got multiple guests, but this one here got a little smirk on your face.
Chris, yesterday I went to the game. I talked to PCA. He said he was not made by the Mets. He was made by the Cubs. Just so you know, he just wants everybody to know that. Everybody's been asking him, "Where did you like playing better?" He said, "You know what? I really play for the Cubs. My time with the Mets has not been as meaningful." That's what he told me. I'm just telling you. It wasn't.
He was a 19-year-old who had a shoulder surgery in A-ball before he was traded. He was barely a Met.
Yeah.
Yeah. Cubs let me down yesterday.
They let me down too. Yeah.
I mean, I actually texted Vecchio with a picture of my tournament for DraftKings. I was in 7th place for $1,500. It's $50,000 to first place. And I was like, I might win this thing because I had PCA, Horner, Murakami, and
he's a big dude up close, actually.
Yeah. Murakami went 0 for 5. PCA went 0 for 4.
I know.
I had 0 points across all of them, and I missed the cash line by 5 spots.
Yeah.
So I went from elation to rage pretty quickly.
Yeah.
Cool.
Yeah.
Great defensive plays yesterday. Actually, Coleman and Jennifer Hudson were like 3 rows in front of me. We're like right there.
Really?
Yeah.
Common is...
I'm looking through the feed yesterday like, oh, what's moving these markets? And it's like, oh, here's Jermal in the box seats at the Cubs game.
He's good in Silo.
Yes. Yeah. I've only watched a couple of episodes. But yeah, he is. Yeah. So I didn't believe me. He's one of my probably top 15 rappers.
Yeah.
Last movie I saw Common in probably was John Wick, I think.
Yeah, makes sense.
Fair.
Yeah.
But no, he's good. You got to watch. Silo's great. Got to watch Silo.
Yeah, Jennifer Hudson, one of the few people with an EGOT.
Oh, yeah. EGOT. I know about the EGOT from 30 Rock. I think of Tracy Jordan trying to get his EGOT. It's hard for me to take it seriously because of that.
Tracy Jordan is, I got one of my favorite sayings from him one time. He was like, "Hey man, how you doing?" The guy was like, "I'm doing good." He's like, "Superman does good. You're doing well, actually." And he just walked away from him.
I've used that with
I think about that
with people on I did that with Westwater once. I've done it with Ilya, and I get these looks like, what are you talking about?
But it's true, though. It's true.
I
what
love
can
it.
you say?
It's still so quotable. It's so good to rewatch. It
holds up.
The test of time. It holds up.
What do you think about Bitcoin, man? What's going on?
The Secretary of Treasurer, Scott Bessent here. That's what's going on. I mean, look at the bond market reaction. Mike, can you just pull up the 10-year yield? Where 10-year yields are now higher than they were yesterday before the intervention. Oops. 20-year yields, 30-year yields are heading in that direction right now. 30 years are 2 basis points away from getting back to where they were prior to the intervention, because it's a white flag of sorts, right? They're really trying to keep the yield curve in control through election day, which is why this operation runs up until November 4th.
Mm-hmm.
I'd encourage people to go look at the video that Ilya and I put up on the YouTube page yesterday about how this is really QE. Traders are going to call it QE. They're going to call it yield curve control. It's really neither. Yield curve control, you're pinning price at a certain level. Fed would come out and say like, 4.7% is the line in the sand. We're going to buy bonds in perpetuity to keep rates below that level. That's not what's happening here. It's not QE because the Treasury can't create money and expand things. So this is not like reserve creation. It's a liquidity operation to help off the run treasuries at the long end of the curve, close the spread with the on the run treasuries. And so sure, compressing spreads may help liquidity conditions. It takes a liquidity premium out of the market, at least in a certain segment of the market, but that's really it. And so here we are. I faded it yesterday when bonds hit 110 again. This is ridiculous. This doesn't address any of the substantive issues. This isn't why Treasury yields are going up. Treasury yields aren't going up because of the liquidity premium in the market. They're going up because of the Iran war, because of the inflation, because diesel is an absolute mess right now. Gas prices are about to close in on their highs of the year, so there's no relief at the pump coming. We're running $40 trillion in debt now. Congratulations. We just crossed that threshold this week. Okay. Deficits are out of control. So, when you're the world's reserve currency with your exorbitant privilege and you have friends that are willing to finance your debts, that's a good thing. But when you piss off all your allies through tariffs and wage an unpopular war, and then you get this AI build out that's sucking up all of the money in the world for this debt issuance, treasuries have an issue. And so this saga is nowhere near over. I'm fading any intervention efforts by Scott Bessent.
Love it. Yeah, I think it's going to be a volatile future for these markets, but our fabulous production team actually has a clip from Trump talking about bonds. Let's check it out.
Should Americans be concerned about this volatility in the bond market?
No, I don't think so, because like I said, our country is doing so well despite interest rates. We have interest rates that are they're actually artificially high. They raise them for no reason. And you can't go out to the market when you have a Fed that's raising interest. You can't say, I want to pay 3 points less than what the Fed says you're supposed to be paying. So, no, I don't think so at all. I think we have a very powerful country, and we're powering through these ridiculous interest rates.
Yeah, at the end of that clip too, he was like, "We need to bring these as low as possible. If we're paying 25 points, or if we're paying 25 points, why aren't we there? Why are we keeping these inflated? It's crazy."
I can't believe a guy who is invested in real estate wants lower interest rates.
Right.
Look, Trump is a maximalist when it comes to policy. There's not a, stimulus, more fiscal spending, tax cuts, more spending for the military, and then also on the other hand, lower rates as much as possible, which we're going to be the ones dealing with these consequences a few years from now, because you can't, push on this string forever. The market reaction over the past month, really, truly, long and blowing out after the Fed, gold going up yesterday the way that it did with this bond announcement. The market's sending you signs that policy mistakes are happening left and
For
right,
sure.
which is a great reminder that last week, and now we're through VIX-piration and going to monthly OPEX, we are now in the teeth of the window of the year when volatility tends to rise the most. So as for me, I'm looking at an S&P 500 that's dropping below 7,700 today here. Whatever short-term long deltas I have in stocks, those feel like they should come off the board now. I'm not feeling too great about the setup. We had a chance to push to new highs. The bond market's the problem right now.
Yeah, and it's a testament to the market, regardless of what's being said on live television. The markets are just going to do what they're going to do. And I think with the remarks yesterday, with Trump saying he wants lower interest rates, we need lower interest rates, and then bringing hyperliquid into the realm. I think that might have been one of the Winklevoss twins. I'm not sure.
It was one of the Winklevoss. Right?
He was surrounded by the crypto people that he's working with. So, but yeah, I think with yesterday and today, and that live press conference was at like 2:30 when the markets were still open.
Mm-hmm.
But the markets were not reacting positively to that news. And now we're down another 0.5% in the E-minis, another almost full percent in the NASDAQ, Dow and Russell down, and then Bitcoin's ripping higher. What do you think of this Bitcoin reaction? Do you think this is kind of the turning of the tide in terms of people realizing again that like there's super inflationary situations at hand and people are flocking back to Bitcoin? Or do you think it's something else?
No, I think it's all tied to what Besant was signaling yesterday with this policy here. I mean, if the administration is truly going to move towards capping yields, the next step in what they're going to do is they're going to start cutting issuance at the long end of the curve. We already had the QRA, the quarterly refinancing announcement a few weeks ago. But if this is going to be the policy effort that they're trying to achieve, right? The goal, don't allow long end rates to go up, which they could just end the war and that would solve this problem. They're not going to do that. So here we are. Something has to adjust along the way. The adjustment is going to come via the currency channel. We don't need to overthink this. We have a real-time example of what happens when governments and central banks try to pin rates at certain places. And it's Japan in the post-global financial crisis era. I mean, we just got out of the yield curve control that the Bank of Japan was doing a few years back. But what was the net effect of it? With keeping yields in check, the market's mechanism for making the purchasing power adjustments was vis-a-vis the currency. So you want to keep the yields pinned and all this other stuff going on, the yen's got to get smacked around. And so the dollar reaction here is the most telling thing of all of this, in my view. The dollar's going to have to decline if you're going to keep yields where they are, because the market's going to need another mechanism to reprice risk. And so that means a weaker currency, which means more inflation in the system for everyone else. So forget your little rate cuts there, President Trump. You're pushing. This is actually making it more difficult to realize those rate cuts over the longer haul. So dollar down, Bitcoin up, gold up. I mean, it all tracks for me, not in a great way. Makes me real uneasy because equity should not like this. And net past 2 days, how are they feeling about more government intervention in these markets?
Not good. Not good. And I think what's really interesting too is both the NASDAQ and the E-minis had this massive gap higher with the Mag 7 earnings. So this was just like zero resistance. Let's rip it higher. And now we're kind of passing through that range pretty easily. Mm-hmm. So you could see a situation where we retrace back down to 7450, 7500 in the E-minis, which is 200 points lower. And then the NASDAQ, if we get down to a similar level, that is another 1500 points to the downside. So, and that could just perpetuate.
Then you get a deja vu here. I'm going to give credit to my friend Ilya. When the market was ripping in April and into May, he pointed out, like, okay, once we get through NVIDIA earnings, what catalyst do we have left to keep people focused on the fact that like earnings have just been so good? We went through the repricing. Like, what are the next things that drive us higher? And he made the case that he didn't think we were going to rally for a few weeks, months, possibly even top. Now, we didn't top. We ultimately did settle into new highs. But if you followed his view from May through July, it was ultimately correct. There weren't any catalysts until we got to the next earnings season. And that runs out next week, right? We're basically there. Coming into this week was 89% or 90% of companies have reported. By the time we get to NVIDIA, then the earnings season basically shuts the door. Yeah. And then we have to think about the CPI report, the NFP report, the next Fed meeting. Oh, and all the way we have Jackson Hole next week coming up too. So, I mean, it's then, okay, what's ahead of us? What can push us around? There's not those positive catalysts sitting there up immediately in front of us. So a wall of worry, sure, but we're in the teeth of this vol jump period for the year, mid-August through that second week of October. This is the window when vol historically past 5, 10, 15, 20, 30 years has shot up the most significantly. So buyer beware. I'm certainly being a little bit more cautious now. I'm going to be trimming things, including this bunk Walmart position, by the way. Their earnings were not great. Where are they trading right now? 106 pre-market.
Yeah.
Outside of the expected move, which, not nothing this week. put on 4 trades for the retailers here: Home Depot, Lowe's, Walmart, Target. Was 3 for 3 going into today. Now it looks like we're not going to be 3 for 3. So I'm going to take this off as soon as the market opens up. It's going to be below my short strikes because it's outside the expected move. And I even actually went $1 outside the expected move. And it's still well beyond that. So call spread side comes off. It's 1 day to expiration. I do not want to deal with assignment risk here. So it's got to go.
Yeah. Weak numbers, weak results for Walmart for sure. And it was really the only one out of the retailers that had such a big sell-off. I mean, Home Depot, Lowe's had big moves to the upside. Walmart, TJ Maxx, another one had a little weakness. So, yeah, I think it's interesting to see. But yeah, slightly outside the expected move, not the best scenario.
I mean, they beat on EPS and revs, right? They must have just said something negative. I'm just trying to look at the read through here. I mean, the numbers seemed fine, right?
For Walmart or for
Walmart? Looked like they beat on revs and they beat on EPS.
Yeah, but it was below consensus. They guided their Q3 EPS to 62.64 cents and their sales growth 3 to 3.75, and that was below what the street was hoping. The more interesting earnings were John Deere. They point to a significant rebound in their farm equipment going into next year, given how some of the spending patterns have played out. So that's kind of flat. The market's not impressed, but that's a disappointing trade for me. I was trying to get filled on a Deere short iron condor position yesterday in last call, and it just never came to fruition, but it would have worked out beautifully. Mm-hmm. So
yeah, this thing's up 20 points pre-market here, sitting just shy of 600 into this nice little rally.
I'm probably still going to look to get long Walmart into this fade here. I mean, look, we've still seen that sort of rotation back and forth between chips, between consumer staples, and this has been a good thing kind of to hold on to. I mean, this has worked on some days, I will say that.
This is a huge drawdown, by the way, for Walmart. It's going to be 30, 27, 28% off of its high just a few months ago.
Mm-hmm.
Mm-hmm. Yeah, this is going to bring us lower than the recent trading range for the entire year. So this will set us at new lows.
Yeah, that's interesting. Other than that, trimming hedges, trimming the hedges as like doing yard work, not actual hedges. We're winding down. I don't see any incentive personally to look to try to sell vol when it's in the middle of an upswing here, and the market is puking the bond curve after Besant because everyone kind of sobered up to what was happening yesterday. Very telling today that oil up and bonds are immediately back down. It's $4 billion, guys. Frankie said it yesterday. It's like spitting in the ocean.
Mm-hmm.
I think it is interesting,
sentiment, but nothing else.
I think it is interesting that after the news that came out and after the announcements and the press conferences, sometimes you do see a positive result in the markets, but the markets were just like immediately like, no, we're not doing this. This isn't how this is going to go.
Not enthused.
Like literally, like there was zero movement in the side of what President Trump was saying and Besant was saying. It was just like the market completely ignored the words that were coming out of their mouths and just moving the way that they were going to move. So I think it's a strong testament to Chris's point of like, this is the corner that we are in and it's not changing anytime soon.
Yeah. I mean, you just gave bears yesterday. It was like, oh, okay. So yeah, the shorter term put spread got knocked around a little bit, but you just gave me an opportunity to sell more bonds at a higher level. I took it. And like you gave me a chance to buy the 110, 109 put spread. Thank you.
Yeah.
Yeah.
Yeah, and even like yesterday morning, same story in crude. Like you had the initial sell-off at 732 exactly, but then it rallied right back, and now we're much higher. So, and
crude, I put a short iron condor on a few days ago. I got to kill this thing because we're starting to punch through 88, and if we're punching through 88 in WTI, my path forward is for 100. So I think I'm going to be flipping from directionally neutral in crude to looking for some out of the money calls right now. I mean, the fact that oil continues to go up and up and up, and like this is where we are in the war.
Yeah. And the backwardation is increasing pretty substantially here.
Yeah, it was $2 at the start of the week.
Yeah.
So supply concerns are beginning to come through the curve once again right now as vol is creeping up in the space. You got, when the market speaks, you got to listen sometimes.
Mm-hmm.
And so even if that means taking an L on a, recent position, I put it out at like 30 odd days, thinking that if this thing starts to break out, I need some time on my side so I can take a smaller loss. If it was like a 2 or 3 day expiration, this thing would be at max loss already. So no, we haven't touched the short strikes. I just don't like how the charts are shaping up. And when we sequentially set a new high, that says that we may be going back into breakout territory here because tanks are getting to lows. SPR is getting down to dangerously low levels. Gasoline futures, Mike. I mean, that is the story here. Gasoline futures have pushed. It's nuts. So
yeah,
when MPC and PSX and Valero, those start doing poorly, that's when I'll know this is over.
Yeah, it's a wild day. Equities down, crude up, Bitcoin and ETH up way more. This is, it's like we're back in 2020, 2023, 2024. It's craziness.
Crack ETF, we've been talking about this for weeks, guys, here as this sign of stress in the market. One of the reasons why I've been looking, fading rallies and bonds, it's going to open up at a new all-time high today. So the pressure is there. The pressure is there.
Sure. Insanity. But yeah, I think, markets, we got about 30 minutes to the open here. I'm going to be looking at closing this Coinbase position, Super Bowl there. I think this MicroStrategy position is going to be interesting to watch and see how it plays out. But I think this October cycle is going to explode in value. But still going to be a nice trade with a move higher. And then,
Mike, can I offer you some due diligence on MicroStrategy?
Sure.
Michael Saylor posted an AI video of him building a dam yesterday with beavers in French.
I did see that.
I don't know if that's part of your investment thesis, but
Well, I saw him. I saw a similar video of him speaking Japanese, sitting at a ramen bar, and then he pulls up the ramen bowl, and there's a little orange Bitcoin fish cake in there, and that's when I realized I had to get violently long the company.
Producers, please.
I'm not taking anything off. I'm not taking anything off in Bitcoin right now. I am letting these run for a bit.
Well,
I think Bitcoin can run. Just MicroStrategy is.
Yeah, but MicroStrategy is still like the VIX of Bitcoin. Like it'll rip higher if Bitcoin continues. If we keep getting $5,000 moves,
as shorted as I think it is.
Oh yeah, this thing could go right back to 200 easily. And currently,
how short is
I'm just reminding you guys, we are in a market where something can run 100%.
Yeah,
just like we said yesterday.
I think
it's not hugely shorted. It's 8.9% of the short float right now as of yesterday's close. Right, Moderna going into yesterday was about 13.5% of the float. SpaceX before it had that big move off of 100 was at 25% of the float. So could there be short covering? Yes. Is it like one of those? This is just like a powder keg waiting to explode. We just got to get the right catalyst. So just stay long, strap in, and just wait for it. I mean, I personally don't see that here. But yes, guys, Bitcoin looks great right now. It looks the best that it's looked in months.
Yeah.
So
yeah,
it's an anti-dollar move.
For sure. There you go. That was a good one too. Did you see that one? That one is amazing. It's incredible. These like laser beam ostriches running around, and then he's like, Bitcoin's classified information. Only the people that need to know will know.
That dude is walking around his house right now with his underwear on, checking the price every 20 seconds.
Oh my God. It's
I can't
insane.
Wait. They've been so quiet.
Honestly, the Japanese ones are very well done. I think it's full AI, but
likely.
Still nice. Still nice to watch.
You don't think he was building the dam with the beaver in real life?
Honestly, I wouldn't put it past him. I think he could. I think he's like one of those guys where he just like will do anything for the right amount of money.
I don't know if I said that correctly, but yeah. Goodbye. Yeah.
We'll see you later, Chris.
See ya.
Adios. E-minis down 30, NASDAQ down 170, Bitcoin up 3,500, ETH up almost 10%, 186 points. Crazy move here. We'll see if this can continue, but we are positioned for it in a responsible way. Defined risk, diagonal spread in MicroStrategy, and 100 shares in ETH, 100 shares in IBIT. So we are looking good in terms of delta exposure to the upside. Also Coinbase, Super Bowl there. So I'll probably take this off right in the open because this is going to gap another 10 points higher. Probably be a $400, $500 winner on a 50-cent credit. So there's the power of the super bull for you. Get some asymmetry in your delta. But we're going to take a quick 90-second break here. We'll be back on the other side of it. Join us on the YouTube chat if you haven't already. You're watching Tasty Live. What's up, everyone? We are back, and we've got Gus in the house. Gus, welcome back from your Alaskan voyage.
Thank you. Yeah, feeling rejuvenated. Long time in nature. Beautiful mountains. Could not have asked for better weather the whole time. Just mid 70s, sunny, miles and miles of visibility. So, it was a great trip, and I'm happy to be back.
Awesome.
Did you see any whales?
I did not see a whale. There was a moment where somebody said whale, and I turned and looked, but I saw just the residual blowhole stuff.
Gotcha.
But I did go to Vancouver last summer and had like the best whale watching you could ever ask for. It's like full breaches going on.
I love Vancouver.
I knew it was crazy because the tour guides on the boat were like, "Oh, I got to grab my camera," like running down to make sure they got pictures of the whales. So I've done some whales in my time, but no, caught some salmon though. Saw a number of porpoise while we were catching the salmon.
Poor pie.
Yes, poor pie, perhaps poor people. I'm not sure. But the fishing guide was very upset with the porpoises because they chased the fish away. So we were kind of running from the porpoise the whole time. That was the deal. But great trip, great wildlife, and happy to be back here in good old Chicago.
Yeah,
nice.
It is a nice welcome back, right? You go on the L. People sleep on the L.
Yep.
People are smoking cigs inside the L.
Blue line. Yeah, took blue line home from the airport. I was like, I missed this so dearly. I was thinking the whole time I was in Alaska, why doesn't it smell like sewage? So I was really happy to come back and get a taste of that. We got all kinds of exciting stories to kick things off today. First one I had planned, I see Chris Vecchio kind of beat me to the headline on this one, but Bitcoin and all Bitcoin-related products are flying today as Trump urges Congress to pass the Crypto Clarity Act. He has said that he is going to buy sizable amounts of Bitcoin himself. He wants the United States as an entity to buy sizable amounts of Bitcoin as well. Crypto, obviously Bitcoin specifically, had been pinned at that 60 to 65,000 sort of ballpark for what feels like months and months, was more like 6 weeks in all actuality. But we are back over 70 in Bitcoin now. If it has anything to do with crypto, it's up this morning. MicroStrategy, Circle, everything under the sun. I am deeply long some IBIT in a position that is pretty much dead, but this is going to get me at least a little bit back today. So, when something's at 0 and then it goes to 100, it feels pretty good even if you bought it at 1,000.
Yeah. We're long IBIT shares, ETH shares, MicroStrategy. So we're in the boat and we're rocking it.
Yeah. So exciting day for the Bitcoin bulls. Michael Saylor can breathe for a day for the first time.
He's breathing.
In a little while.
He's breathing really easy.
Yeah, they the leverage they have there is immense, and the debt was growing as things continue to sink. So I guess happy for him. I don't know, how happy can you be for a billionaire? It's like I hope he's able to eat tonight. Next thing on the docket, I have Alibaba. Alibaba shares are sinking a little bit. Look at this little guy they got in their corporate headquarters, by the way. Love it. Alibaba shares
have a name?
set to open down about 3%. They said that their AI spending increased by 75% in the June quarter. And as such, very simple math, their profits decreased by 75% in the June quarter. Revenue did move up, pretty much moves up in every measurable facet except for net profits. They're not really getting hit as hard as I would think on this news. We've obviously seen the market react very adversely to high AI spending as of late, and particularly with this driving down net profits 75% year over year. That's far from insignificant, but the market not reacting as adversely as I would imagine, but yeah, still set to open down about 3%.
Jack Ma, I didn't know he was still. I thought he was still missing.
I think he is still missing.
Oh, okay.
I threw a
wasn't
picture
sure.
of him in there in memorandum. I do know. I see his
My God, what?
his son. I see his son on Instagram all the time now. He said NYU or some bougie school up in the Northeast, but I constantly see videos of him on Instagram. He has like a team of private drivers, like a 3 Rolls-Royce caravan pulling up to drop him off at his
Ma,
college classes
R.I.P., bro.
and stuff. His son, his name escapes me right now. It's obviously something Ma. But,
Yeah, that's wild. I would imagine if you're trying to keep it low key, maybe you don't have all the security drivers.
yeah, no, he's not trying to keep it low key. He's hopping out in full Birkin fur suits out of a Rolls Royce and strolling into his classes. So does he need a degree? That's really the bigger question.
I
don't know, but good on him, I suppose. Look at it. Yeah,
I love
there we go.
Taobao. What is Taobao?
They just
How
Tao doll.
Tao
This
doll.
is Tao doll. Okay,
How about?
I don't know.
Is that like a type of bow?
Doesn't give us too much further
I
information.
do love
bow?
myself some
Yeah,
bows.
bow is-
Yeah, I figured you would.
You know, we did a bow eating contest once. We filmed it.
Oh yeah.
Yeah,
I feel like I
Me
heard
and Nick
about
did
this.
it, and it was my first like actual eating contest where you dip it in water and you just like swallow it as fast as possible.
Like who could eat the most?
Yeah,
Oh, it was
I think
for
I got
speed.
down. I got 8 down in 2 minutes.
Dang.
But then it was the craziest thing. The next day, I felt literally hungover because my body was going through
yeah.
it. I'm like, I had 0 sips of alcohol, but I felt like I had a fifth of vodka.
I-
There was a friend yesterday who said he was like he had challenged himself once to do 9 hot dogs and 9 beers.
Yeah.
in the game.
Yeah.
And
And at first I was thinking, oh, okay, he was just going to do it like per inning. He was like, no, he's like, I messed it up. He's like, I did like 3 hot dogs and 3 beers within an inning and a half. And I was like, wait, hold on, what? Like, what are you doing? Like, why there's no way you're going to do that. He's like, no, I've actually had 12 hot dogs in a 12-minute span before. I was like, wait, what?
Well, we've talked about this. Like the strategy might be front loading and then going smooth.
Yeah.
But then if it starts to expand, then you're
I think you
You're in
gotta
trouble.
backload the beers. You gotta get through like 5 or 6 hot dogs real
Yeah.
quick. The beers
Yeah.
are gonna take up all the volume.
Right.
So you gotta do hot dogs first, rotating
There you
the
go.
beers. Yeah, this is provided. It escapes me what stadium this is at. Maybe they can tell me. One of the teams in the MLB has rolled out their own personal 999 challenge.
It's funny.
Yankees
It's funny you say this because I was thinking it would be Cincinnati. This is San Fran.
that looks
Yeah.
like San Fran.
But this is depressing. This is a weak man's 999 right here. Okay, we're talking about 9 pigs in a blanket and 9 shots of beer. All right, you gotta really do it if we're doing the 999. This is the please don't get too drunk at our ballpark 999.
Yeah.
Keep that. I say.
I feel like this is a lawsuit waiting to happen.
It does seem like that.
Like
Yeah, why
they're
would you endorse
selling
this?
the challenge, which includes 9 beers. Like this could be a lawsuit. Be like,
Sure.
it wasn't
It could
my
be.
decision. They told me to do this.
Yeah, they offered it.
Yeah.
But anyway, yeah. So Alibaba's sinking. Not sure. Not sure.
$55 for that?
That's actually a steal. We got to go do that right now.
God, I'm gonna
9
date
beers
myself.
and
There's a
9 hot
movie
dogs?
called The Great Outdoors. I don't know if you guys have ever heard of it. It's with the late great John Candy. But there's this movie where you have to eat like it's like if you eat 20 pounds of meat, I think, or something. It was like this huge steak. They call it the Great. Actually, there's a name for it. But it's like huge. And it's like in the movie, it's like if you eat the whole steak, gristle and everything, your family eats for free. And it was like 40 of them. So he was like, okay, we'll try it. And he eats it, but he didn't know it was gristle too. He ate it. He finally did it. And like, no, you got to eat the fat as well. It's disgusting. It's like the worst.
I did a sashimi eating contest one time, but it was for pure corn.
Yeah, there it is.
Oh, there we go.
I love our team. They're all over it. It's great. It's a great scene. Look at the lady in the background.
He's just smiling. He's like, I got this.
You just see him at the end though. He's like, The old 96er, that's what it is. Yeah, thanks, Ben. Yeah, it was great. 72 ounce. Oh my God, it's
Love
crazy.
It's a cool steak right
We've gone way off the rails here. Sorry, guys.
No, it's good. It's good. Next on the docket, I have Walmart. This is going to be a trade for me. I'll tell you right now, I'm going to get long Walmart off the open. Walmart shares are sinking. They beat revenue estimates this morning. They also raised their full year outlook on every single measurable metric, it would seem. Net sales, they raised. EPS, they raised. Revenue guidance, they raised. However, they're set to open down. Oh, yes, perfect. There we go. Card up for you here. But they did lower their comparable sales growth came in at 2.6% below the estimate of 3.5%. So they're down 6% on that news. It feels like too much for me. So this isn't trade of the day, but I will be getting long some Walmart off the open here.
I'm with you.
Feels like a move. We could move down a little bit on that comparable sales growth, but 6% on a less than 1% miss on one metric when revenue comes in where it's expected, when they hike everything else, this feels like a pretty automatic long to me.
I'm with you.
Yeah, I agree with you. I'm going to do the same thing. When you think about it, just if you take a step back, we're going to be opening at 2026 new lows. So this will be an annual low, year-to-date low, and you have an IV rank that's going to get crushed. This is going to open at around, I don't know, 25% implied volatility for an equity.
I think.
So you'll be able to get, like, these are dirt cheap. You could go long November, short October, and do a 10-point wide diagonal spread for less than $500. Like, that's where I'm going to go. Just straight up diagonal spread. And I'll just.
I might
right
go
at the
no
money.
too. Like, this is just a staple to put in the portfolio.
Yeah, I mean, I might do a put ratio. I mean, this I could get to 2-by-1 on this. I think. It just feels really attractive. Big tariff refund coming through for them too. It's all good except for this one metric that we seem to be overvaluing. So yeah, I'm happy to add some Walmart to the account.
Mm-hmm.
Love it.
Last thing I have on the docket for today, SK Hynix shares are moving up slightly in the American market, up massively in the Korean market after they announced a $28.7 billion share repurchase and cancellation program. I don't know why more companies don't do the share buybacks. It's so free. You just, you're spending all this money on everything else. Just buy some of your shares, automatic increase in share price. But yeah, just under $30 billion of shares they're going to buy back up, take out of circulation off the Korean market. Obviously, that will be reflected in our market to some extent as well, but should put in a pretty meaningful floor for the share price here. Additionally, they announced a investment in a new memory chip manufacturing plant of about the same amount. That's 54 trillion won. I don't have a conversion on that. 40 trillion won is $28.7 billion. So you can do that calculus. $36 billion, something like that, for a new memory chip manufacturing plant as well. So all sunny skies for SK Hynix right now. It would seem plenty of cash on hand. 38.7. Thank you. Beautiful. Yeah. So exactly $10 billion more. So they're shelling out over $60 billion this morning. That's a lot of cash laying around. Market likes it.
Yeah. Yeah, this came in and jumped about 10 points, 12 hours ago, something like that. So yeah, nice little rally here in SK Hynix. And this is probably good for those people looking to get long this thing or have been long since the IPO. So we'll get a little gap higher. Looks like right at the top of this range that we've sold off from a couple days in a row.
Yeah, SpaceX and SK Hynix, the two most hyped IPOs of the year, just continue to hang below IPO price here, but both of them on a nice little run over the past week. SK Hynix obviously a lot more recent. So exciting times for the 2026 IPOs.
That's for sure. Well, Gus, appreciate it. Love having you back.
Yeah, man.
Welcome back.
Yes, thank you.
Flawless. Oh, the mustache is back.
Yes. The mustache is intact once again. We are back in full force, and it took more like a week. I thought it would be more like 3 days, but we are all good.
Yeah,
Look at that. Nice.
zoom in on that
Yeah,
thing.
tight
Yeah,
zoom.
that's right.
Show
Incredible
it off.
stuff.
Yeah,
Yeah.
take it in. That's right.
And on that note, we're gonna take a quick 90-second break. We'll see you on the other side of it. But yeah, join us in the YouTube chat if you haven't already. We'll take a look at your trade ideas, questions, and we'll see you soon. You're watching Tasty Live.
Let's celebrate, dance to the beat. Forget the wars and stop the feet now. The fun and games and memories I love to share with my family. And everything is better when we get together. Everything is better when we are side by side. Hey, side by side, side by side, side by side. Hey, side by side, side by side. When we are side by side.
What's up, everyone? Welcome back to the show. We got lots to talk about today. E-minis and NASDAQ down, Bitcoin up in a big way. Got some earnings results as well. We've all decided we're going to buy the dip in Walmart. Low implied volatility at annual lows after the earnings result. And it's just one of those products that when you get a price extreme, maybe it's time to take a stab at the upside.
Yeah, it does seem so. And again, we've seen a lot of back and forth between the chips, between the consumer staples. That's one of those names that has been moving around. So I think it's an interesting long here, especially with shares down. I did close out a super bear this morning, by the way. That was one that I put on yesterday morning. Yeah, close that out for I think $800
$980.
Yeah, $980.
Don't sell yourself short. $980.
Yeah, yes, exactly. So that worked out. I also just posted something. I traded this late yesterday. I was trading at the game, and this was one where I was trying to work. I was working this all day. I talked about it. I eventually paid up for it, $9.70 for a upside call butterfly. We're back in it, folks, and we went further out this time. Let's see if this thing can make another stab at 2,000. So we went further out to September, paid up a little bit, but it's a $150 wide call butterfly. We'll see what happens.
Yeah, love it. These have been nice trades historically because SanDisk just goes crazy and has 200-point ranges every day, it feels like. But yeah, nice win on that super bear yesterday. Had 2 days in a row of continued selling here. And really, I think it's going to be interesting. We're coming up on another butterfly that could work out really well. 29,000, 28.8, 28.6. And we are sitting right there. We'll open 100 points off the long put here with 8 days to go. So next week, if we keep chopping around here, we can have ourselves another nice butterfly win. Same thing with SPX. Downside 75, 74, 73. That one's 100 points wide. So this could be a really big hedge if we get some continuation to the downside.
Could be, yeah.
USO is going to open about 4 points higher. We are going to be at my short call strike, the 120, 135 call diagonal spread. I put this on 2 weeks ago exactly, playing for a continuation in crude oil's price to the upside, playing for a continuation of the backwardation getting infused into crude oil. And that really is benefits the most USO because you get that backwardation that lifts this price higher since USO is made up of a basket of futures crude oil contracts. So yeah. Love to see that. Probably close that on the open. Probably look to close Coinbase on the open. And we'll revisit anything else that's moving.
The story's changed so much in this market, man. We've talked about the movement that we've seen at times with the semis. We talked about the consumer staple stuff. Now we're seeing what's going on with Bitcoin. I just noticed banks. The move from banks yesterday, they did not love what happened with the 30-year yield. You look at JP Morgan, you look at Goldman. It doesn't matter what bank chart you pull up. Things were not good for those banks yesterday. That's something to keep an eye on. If there's going to be more continuation here. I do have a couple of bank positions. I got Citi, I think was one of them I did. That might have been a former trade of the day as well. I know I did Citi at one point in time. I'm glad I didn't get too big for that reason. And I did I think I did a diagonal. I did a Citi diagonal, October long, short SEP. I think I did another one as well. I can't seem to find it right now in the book, but Whole point being, this bank space is something to keep an eye on with this move in 30-year yields. Again, banks lend at the longer end, so they were loving it better when yields were 5.3%. If they're going to come in some, they're not going to love that as much. So something to keep an eye on, but could be an opportunity at some point.
Yeah, I just looked at all these banks here, and they are all down from yesterday. Pretty big here, to Jermal's point. So, yeah, crazy day yesterday. And again, I think the biggest takeaway yesterday was the lack of movement in the favor of what was being said in those press conferences. Whether it was Trump, whether it was Besson, it was completely ignored and really just like it didn't move the needle at all. If you look at the CME FedWatch tool, the interest rate probabilities are exactly the same as they were 3 days ago. So like literally no movement, craziness. But Bitcoin, the story of the week, all of a sudden, 2 days in a row, we just gapped up 10K in the Bitcoin price. And if we continue to see that, I would expect to see Bitcoin's implied volatility increase, MicroStrategy's implied volatility to increase, and we could see some huge moves to the upside here with the reinvigoration of the dollar weakness resulting in Bitcoin strength.
It's crazy. I mean, it's amazing how this happens each time, but I mean, it looks like the next level is 75K.
Yeah.
In Bitcoin. Yeah.
Yeah. I think this will be, I mean, it really, when you look at IBIT, you could easily see this thing just take off because this selling here was, again, another scenario where it's just not met with any support. It was just continued selling all the way down from 50 to 30 in 2 weeks' time. And now we're just gapping through that range pretty easily. We're going to open up around 40.75 in IBIT, which is right about here, about halfway through that range. And it took 2 days. But we're seeing implied volatility creep up higher on the bottom part of this chart here, which again, if we continue to see these big moves, 5% a day, then these moves are going to get larger from a monetary value and implied volatility is going to keep creeping up higher. So I'm here for it.
Part of trading is putting on a position. The other part is just sort of going through and analyzing that position every now and again, even when it's not interesting and there's nothing going on. And this is a good example. I mean, I don't think my affairs were fully in order like a couple weeks ago. And then one day just sort of looking at the book, looking at what's going on, I was like, I need to fix some things in here. And this was one of them. I don't know what I had, man. I was like, I was short. You know, I still have 100 long shares. I was short to put in a near term. I had like these calls. I think I had put on a SpaceX-like position that we had, like you still have, short to put and long some upside. I think I did it when stock was like 38 and it was on the way down to 35 at the time. And I was still long these like upside calls at 44 and short to put whatever. I had to fix it. And so I'm currently short to 38 put. That was something that I had to roll to the September. I had it in August. I rolled to September. I'm so short that. I am long 2 of the 40 calls. That was part of that position. I had to roll those calls down at one point in time. And then I'm still short the 40 call in Jan, and I'm short the 45 call in Jan. Again, I think I moved that 45 call out further just in case we did get a move, because I might have been short like the 42, I feel, at one point in time. And I just had to fix the position. You know, sometimes it happens. Sometimes you have something on, the stock moves away from everything that you have, right? And you forget about it, you don't think about it, and it's not moving. And so it's just an idea of keeping the position, like moving things around, because you just never know when you're going to get the move, and that's what happens.
Yeah. And I had these in IBIT too. I had this Super Bowl set up, sold the put, 35 put to buy 2 of the 45 calls. And now this is going to pick up some steam here because these calls are worthless like 2 days, literally 2 days ago. And now they're gaining a ton of value. Short put basically went instantly worthless after being in the money. And now this package is going to be printing today, but still 30 days to go. If we continue up higher, this is the asymmetry is pretty wild here with just this small position. If we look at the theoretical risk graph here, because I collected $100 to get into this trade. So if you look at just the short put to finance the 2 calls, collected $100 credit in the middle. But if we get a rally up to 45, this will be a $500 win just by itself. Of course, if it happens over the next couple of weeks, we'll lose some value in those calls because they're 28-day calls. But still, if this thing continues, we're going to be looking good from this overall position.
Now I just got to think, as much as I do believe this is an interesting point for Bitcoin and the way it's moving, now I got to think there's something I want to like fade in the meantime. Is this going to be the day where it's like a little pull back and fade? You know? Do you want to play that? Or do you just say, nah, let it rip?
Good question.
I don't know if I fade here or fade at 75K. If we get to 75K, I fade for a little bit for sure. I think that's a resistance level.
Yeah.
Much like we saw with gold recently. 4,500 was resistance. Broke through, and now it's staying above.
Yeah. Gold is down a little bit right now, but nothing too crazy. Just a couple points, but had a huge rip yesterday. Big rip yesterday from the low of 398 just the prior day up to 413. And we're going to be sitting around 410 right now. So still well above the recent retrading range. Just that gap higher yesterday was crazy. But yeah, another one. I've got a 20-point wide call crab trade there, long the 400 October call, short the 420s, long the 440 in the September cycle. So longer term crab trade, it was up $100, which wasn't enough profit for me to take it off, especially because as we get closer to expiration in the September cycle, you can see here the short options are trading for $1,900. They're basically double the value that I sold them for, which means even if we chop around here at 410, 415, I'll continue to make money with this position with the decay of the shorts. There's about $1,500 of value to come out of this short component position in my favor over the next 29 days.
Yeah, gold is up. It's holding that level of 4,500. You can even see this morning it dipped as low as 4,505, but it can't break 4,500. That is strength right there. That means it's holding on to gains. I think we see a higher price in gold for sure. Yeah, everything changed as of yesterday.
Yeah. 2 minutes to the opening bell. Why don't we scan through the YouTube chat, see if anyone's got their eye on something, any trade ideas, questions, we can ponder it. But yeah, I think on the open here, you're going to look at closing Coinbase. Coinbase is up $12 right now pre-market. That's going to be a big win here with the Super Bowl.
Indeed.
And then ETH, I mean, the only thing I could really do, I have shares that at a basis of 18. You can see that on the platform here. If you pull up the options train, you can see my 100 deltas at 18. So we're going to be trading right around there. My break even, I think, is around 16. Yeah, I sold a put at 18 for $3. So my break evens, we're below my break even now, or above my break even on this position. So I could just take it off, or I could look at selling some premium if it makes sense around that 18 strike. I would need to see this value get to like $1 though in the 29 day. Otherwise, I'm just going to leave it with the naked longs, especially into this rally that we haven't seen in many, many moons.
Many moons. It's been very quiet. I mean, God, majority of this year, I feel.
Yeah. It truly has.
Exciting times. Exciting times.
But yeah, I think right on the open, I'm going to look at closing Coinbase. I'm going to look at closing USO, and I'm going to look at getting long Walmart with a call diagonal spread, especially after the vol crush and the depressed price point.
Yeah. Yeah, that's the move for sure. Yeah, I mean, this market continues to impress, man. Every day we come in, there's something new. There's the last couple of days you expected it to be quiet, and oh no,
Mm-mm.
it had other designs. It had other designs in mind.
But yeah, E-minis, NASDAQ still down. They haven't come up at all. They've been just sitting down 30 points. NASDAQ down 150, 0.5% for both. Dow's down the biggest here of the four, down 0.75 percentage point. Russell right behind it, 0.75 percentage point. But Bitcoin up 5%, ETH up 9%, and crude up 3% as well, with backwardation getting infused into that. There's the bell. Yeah. All right. Let's look at Walmart here. I think people are going to want to buy this Walmart dip. I'm going to get into this first. Let's see. Can we get... So the November at the money calls at 105, 110. At the money, November calls trading for $7. December trading for $8. So I'm just gonna go to December. Why not pay another $1, less than $1 to get another 40 days, 30 days of time? December 745 call, and then October 115. Yeah, let's do this. Can I get $6 for a 10-point wide. Yeah, here you go. $6. 105 December, 115 October short. 10-point wide diagonal spread, super long term in the long option for $6. Love to see it. It is selling off a little bit more.
It is. Now I'm looking at the 100 since I didn't do it.
Well, I got plenty of time, so I'm
You do.
feeling good about that position. Coinbase up $9 here. I'm just going to get out of this position. $400 winner. 450. Do I have 450?
450. Do I have 450? 450.
I'm going to leave it at a $4 credit. Let's work it a little bit because this is a long-term position. I don't really need to get out of this trade, but I do like to manage this win. We've been in this for 3 weeks or so. And again, this is the nice thing about these Super Bowls is you route it for a credit. You give up a little bit of premium to buy this wide long call spread. And now you're making way more than you would have if you just sold the short put spread into this rally that you wouldn't have seen coming, but you're prepared for an outside move to the upside. And then what was the other one that I wanted to close? Oh yeah, USO. I got to get out of this one. This up $4. USO's up $4. This position is up $650. And this was just let's play for a continuation to the upside and see if we can get that move. So let's work that for a $650 win. And that's another long October, short September call diagonal spread. And we got that big move to the upside with the reintroduction of backwardation. And this is a great trading vehicle, especially as crude oil markets continue to be backwardated. Or even when they flatten out, you get really depressed prices in USO, and then they just rip higher after we get some more turbulence. But
I did the diagonal in Walmart. I ended up doing the 100 long call in D's. First D's position. First D's. Long the 100, short the October 115. I got it for $8.45. I also just rolled my IBIT short 38 put to October and sold the 40 put. And then the calls that I was long, the 40 calls. So now I'm long the 45 calls in October. So
here you go.
Rolling
Here you go.
up and out, up and out.
Up and
I'm
out.
going to roll up and out.
Yeah, this is a very interesting morning here. MicroStrategy, the call diagonal spread from yesterday, up $165, but I'm going to keep this one on. Long November, short October, really long-term one. And I think we could easily get back to 140 and above if we continue to see Bitcoin rally. IBIT up $200 today. 70 cents of that is from that Super Bowl setup. Short the put to buy the 2 calls for $100 credit in the middle. Currently getting a lot of value back in the 45. 29 days though, if this thing continues, this could be a really nice win. What else we got? Coinbase, not filled on that closing order yet. It's dropping slightly, which you don't love to see. But again, these are longer term positions. If this was a September position, I would chase the fill.
Be aggressive, yeah.
But because it's October and with 60 days left, we're getting we're getting the move that we want. I don't really have the closer we get to the call spread, the further away we are from my risk, which is the put spread too. So we're in a really good spot with this position. So I'm just going to let that simmer and not chase the fill since we got 60 days on that one. NDX, downside butterfly.
Yeah.
Like I said, looking good today. Up $400. If you wanted to close this, like if you were in closing mode and you were trying to get rid of long equity positions and getting rid of the hedge, I think closing this hedge makes a lot of sense. But I'm going to hold on to a lot of these positions. So I want to keep these hedges on, both NDX and SPX to the downside here. But this 100-point wide, 8 days to go, 170 points, 190 points from being at the money on the long option in the E-minis. Could be something there. Could be something there.
It is certainly a Bitcoin day. When I look at the things that are moving around, coins moving, ETH's moving, Ripple's moving, MicroStrategies and Bitcoin itself. Those are some of the top gainers.
Yeah, I mean, ETH, I've got these shares into this rally. There's just nothing to sell here. Like I'm not selling a 60-day at the money option for $1.
Mm-mm.
There's just no, I would rather just not have that premium. And really, we talk about cost basis reduction all the time, but at a certain point, you need to recognize this is a product that's up $1 today, 8% move today, and the next dollar move is projected for the next 30 days. So like, if I can't sell good amount of premium here, to reduce my upside profit potential, I'm just not going to do it. Like, why sell a call for $1 when I could just leave it uncapped and make another $1 tomorrow if we get another $1 rally?
Mm-hmm.
You know, it's just like, these are the kind of situations where implied volatility is not meeting realized volatility, not even close. So I'm not going to sell anything against that. I would have, if we had like a call ratio spread we could do that was like super wide, that'd be great. I would do it, but this premium is not here yet.
Yeah, it's for this reason. A lot of times, this is why we don't trade, names under $20 a whole lot. For that reason, you just don't have a whole lot of options of things to do. So,
Yeah.
AVGO making a bounce. I actually put on the Super Bowl in here yesterday in October. Sold a 350, 340 put spread to buy the 420, 440 call spread. I did it for $1.05 credit. Stock's been getting rocked recently, so figured it was worth doing.
Yeah. I have a position that's going to be worthless here. The 500 strike call. Sad. What was that from? I don't even know. 500 calendar spread in June.
Was it earnings probably?
Yeah, it had to be earnings, and it just tanked. Yeah, there you go.
Oh, yeah. Yeah, wow.
Yeah, I had the 500 calendar spread right up
What
here.
a time to be alive.
Unbelievable. Hey, you win some, you lose some.
Yeah, you know.
But we've been doing well in this portfolio for sure. With the hedges specifically against these positions, I think that's really been the key this year, is just having these low monetary risk hedges on that have a ton of upside profit potential. Because then you don't have to worry about the hedges. You know you have it on. You can confidently place other trades. And if you get the move right, you're going to be hedged. And if not, you're making money on the other things that are neutral to bullish. So that's been a really key driver of this portfolio, is just making sure those hedges are much smaller than the max profit on the upside for other positions.
It's how to be.
Mm-hmm. I'm now about 50 cents away from getting filled on USO, also Coinbase, about 50 cents away. But again, those are longer term positions. I don't feel like I need to close them right now, but I want to have those orders in just in case we get a little gap higher, take off some risk and book some wins. MicroStrategy up $6, 110 points. Craziness. Selling off a little bit as the market grinds higher. The Minis and NASDAQ trying desperately to erase the losses from today. I don't know if it'll hold. Just don't know.
Yeah, I don't know. I'm not sure.
Yeah.
I think I'm going to try and get back into SpaceX now. I was out of that trade for a little bit, but I'm going to try and get similar trade to what you have. I'm trying to sell the 125 put in Jan to get long the 200. Is that basically what you have?
I have the 300.
300, yeah.
But yeah, you could do the 200 now for credit.
Yeah.
Much better setup for sure. It's almost the same credit I have. I think I had $370.
I'm
like that.
filled.
There you go.
Did that.
Yeah, these trades make a lot of sense, especially if you have an assumption that aligns with long-term upside. Because this type of strategy, what's your worst case scenario? Well, your worst case scenario is you pick up 100 shares of SpaceX at 125 with a basis of 121. If you pick up $400 of credit in the middle here. Best case scenario is you get an absolute rip to the upside in SpaceX. And just like MicroStrategy, I really think SpaceX is another one of those things where if you get some news in SpaceX, it gaps up 10 points and another 10 points, and another 10 points. You're going to see implied volatility increase in SpaceX. It's not going to decrease. We're sitting at an IV rank of 3 at the lows pre-IPO or below the IPO price. So this thing could really explode in implied volatility. And in that environment, you would want a naked call on, but you're financing it with a short put. So this is a great trade. If you get a move up to 200 right now with no change in implied volatility, it's a $5,000 win. And again, your worst case scenario is taking shares at 121 with the basis of, or 125 with the basis of 121.
Mm-hmm. Yep.
So I like it. Same story could be said for MicroStrategy. If you wanted to go undefined risk in MicroStrategy, I like that too. Again, going to like Jan, the 200 strike call, trading for $200 or trading for $600, the 200 strike call in Jan. And you can sell an 80 strike put to finance it. Like this is the kind of stuff where if you have undefined risk ability and you want to deploy it in MicroStrategy, it's not for everyone, of course. It's going to be super volatile, but it's just one of those trades where we know that MicroStrategy will increase in implied volatility if it continues to gap higher. We've seen it historically. We're seeing it right now. If you look at the implied volatility on the chart, it's gapping significantly higher. 2 days ago, we were at 75% implied volatility for the 30-day cycle. Now we're sitting at 90% implied volatility for the 30-day cycle, and the stock price has increased 20%. So another strategy where how do you benefit the most from an increasing stock price and increasing volatility? You own a naked call. Simple as that. So finance it with a short put. That's how you create a high probability trade from a low probability situation with just the naked call. And you've got that credit in the middle. So love these strategies.
Yep. But darn is down $30 after the crazy move yesterday. Still short the put in here in October. Rolled that out yesterday.
Nice.
Yeah, big move in here. There's more option strikes now. Yesterday only went up to 120. So they added a few more.
Very nice.
Yeah.
Do you sell the shares or did you get?
No, I got rid of them. I bought them back. Like
Yeah, this premium is insane. I mean,
$25 higher.
yeah, this 1 day premium, because of this move, this 1 day premium is still insane. It is 17-point implied move for the next day, eight days away, 30-point implied move. So like this is a scenario where, and we were talking about this with Liz. I think we were talking about this with crude oil, where we're just selling like the 1 days. The implied volatility is so high, you can sell the 1 day. Even if you sold it, if you're willing to get involved in Moderna, of course it's super high volatility scenario, but you could sell the 1 day for $300 at 130, for example. And hey, if you get tested, you can buy it back, move it to the 8 day cycle. The 8 day 130 is trading for $400 more. So you're just aggressively reducing basis by taking risk in here. But again, it's not for the faint of heart. This thing could drop right back down to 60 or 70. It's had these crazy moves over the last couple of days.
Oh, yeah. It's been wild.
Still not filled on anything here. Coinbase, about 50 cents away from that working order. USO, about 50 cents away from that working order. We did get filled in Walmart, though, both of us. So Walmart at annual lows now. Yeah, well below annual lows, sitting at 104. The recent low point where we reached this price point was back in November of 2025. Craziness. So implied volatility super low here. 29% in an equity is low. Anytime you're under 30% in equity, it's super low. So we went with the debit side of the coin here. Went to December. Jermal has the 100 strike. I've got the 105. And then we both have the October 115 against it for about $1. But again, long-term diagonal spread, we're both at well under the width of the spread in terms of debit paid. So any kind of rally here, you'll be golden. And you've got plenty of time for that thing to work out.
Sharp 8.7% drop in Walmart marks the retail giant's worst single day decline since July 2022.
There you go. Price extreme. Nothing more,
Awesome.
nothing less.
Buy it.
Smash. Smash.
Love headlines like that.
Yeah, real quick, let's look at some of these NASDAQ 100 movers to the upside. We've got MicroStrategy leading the way again. This is the first time in a long time where MicroStrategy's led the way to the upside in the NASDAQ 100. Walmart, same story to the downside. So we're long MicroStrategy already. We're getting long Walmart into this big move. S&P 100, let's check it out. Down 8%, Walmart in there as well. John Deere, we talked about this earlier with Chris. You got Dow, you got ConocoPhillips, XOM. So we're seeing the gas majors move in a big way to the upside here, which is not great for our gas prices. Not great.
No, not great, Bob.
Not great. But yeah, we are going to pass it along to Mr. TP right now. We'll be back in a little bit. But TP, take it away. Ooh, nice to meet you.
Thanks, Chris. Sorry. Thanks, Mike and Jermal.
You got it.
So, the guys are looking at a bunch of stocks that are moving a lot right now. Tom Preston and checking out the market this morning. And Walmart is the big news, I guess. For me, it's not the why, it's the what. Yeah, they had earnings coming out today. And stock's down 8%. I'll have to figure out a standard deviation move for you at some point when I get back on, maybe when I'm back on at 10 a.m. with Chris Vecchio or 1 o'clock when I do the live trading show. This is the whole reason why I like to do defined risk trades around earnings. Yes, you can do short strangles ahead of earnings, things like that. But when you get into individual names, and go back to, and again, this is all of the same big ball of wax of the discussion is with the VIX. Let's go to the VIX. With the VIX at 15.5. Oh boy, it's up 65 cents, right in the middle of the 15 handle. Great. Okay, whatever. You start looking around at some individual stocks for higher implied volatility. That's what I do. Understandably, you want to collect some premium. Individual stock options might give that to you. You look at Walmart. Let's go into, let's just check something out real quick. Not the VIX. Let's go into WMT. And this is the, okay, here's the chart of Walmart. Yeah, big deal. Okay, drop. We all know that. But volatility dropped. The overall volatility was, if I can get the cursor around here, about 31%. Now it's 25. Does that mean you can't sell premium in Walmart anymore? Not necessarily. But this is why traders are looking at selling premium in individual names ahead of earnings. This is the reason why. This is why I would suggest using defined risk trades. If we go back in here, can we see? Yeah, the expected move, it's hard to go back and see the expected move prior to this. But again, it was probably a couple of bucks, maybe a little bit more. This is a huge move to the downside. Probably broke through the expected move, almost certainly, with an 8.75% price change, having a 30% volatility, which isn't particularly high. So anyway, the nice thing about Walmart is that it has decent liquidity in the options. Who am I kidding? It's great liquidity. I mean, for an individual stock, you have thousands and thousands of contracts of open interest in these 1 days. Let's go out to the 8 days. Let's see. Open this up. Yeah, again, lots of open interest across the expirations, relatively tight bid-ask spreads across the board. I'm going to be looking maybe at doing some, I don't know. Let's check the skew in Walmart, 104.32, right in between 104 and 105, down $2, up $2. 102 puts at 90, 107 calls at 71. The skews to the downside. I'm going to have to evaluate that, whether I want to go with the flow and I hate that term. Go with the flow and sell some call spreads in here, or maybe even buy a put spread in here. Don't know. Let's see if we get for a credit. Just for the sake of argument. So a 2-point spread with 8 days to go, a 2-point call spread, selling the 106 calls, buying the 108 calls, 53 cents. I'd like to get about 65 for that. So this is a little bit low for me for this call spread. If I advance this, and this is the advantage of using this platform, all I have to do, okay, I'm in 8 days. 8 days grid. I'm just going to kick this out to another further expiration. Now with 15 days. Oh, now it gets up to 65. But again, my probability of expiring worthless just dropped to 61%. That's how I manipulate this stuff. I fiddle around with these controls until I find the trade that I'm looking to do. So that's Walmart. The other big one, did Baba report? I think Baba reported also. Baba is down on the news. Baba is also has fairly liquid options. And if I were going to do this, did Baba, let me see, if they come out, did Baba, it says here on my earnings calendar, Baba is before market open. I don't know if anybody on the YouTube chat wants to come in and take a look at that. When do they report Baba? But anyway, Baba is, if Baba came out, I might sell, let's go down here, just right at the expected, right outside the expected move, 33 cents here. Let's do this here, a little bit of skews pointed to the upside. Yeah, it's not bad. For 1 day, collecting 40 cents for that trade, I'm going to be looking at that a little bit later. Let's go in, take a look at bonds. Bonds are selling off today. I bought this put spread in here, the 109-110 put spread as just a contrarian bet on bonds yesterday, because I thought Bessent's quote unquote intervention, or his suggestion, whatever the heck it was that drove yields down, bond prices up. I didn't think it was going to last. That was just a hunch. Am I plugged into what's going on in DC? Of course not. I don't know anything's going on there, but I'm just kind of bearish bonds anyway. And I was going to sell any rally, and true to my word, bought a put spread in here. It's up a little bit of money. I am also short. I was never able to cover my short call spread in here. The 109, 109 half, and the ZNs in the 10 years. Right now it's trading for about 5 cents. I sold it for, I'm going to have to check my trade. I want to buy that back if I can capture at least 50% of the max profit. If I can, I'm going to cover it and move on. One of the problem children in my account is Southwest Airlines. I'm short the 45 puts in here. It's a disaster. I don't even know. So, okay, the stock is just crashing. I'm long it. Yay. Yeah, see what kind of genius I am. What's crude oil doing? I can't even blame this on crude oil. Crude oil, all right, well, crude oil's up. Okay, fine. I guess whatever's going on in the Straits of Hormuz or Strait of Hormuz isn't bearish for crude oil. So crude oil is rallying. I guess that's just putting kind of a nail in love. Let's check out Jets. Jets is the ETF that tracks airline stocks. Yeah, it's down. Okay. So everything's getting hammered, and apparently, so the argument would be, I guess, why are these things dropping? Inflation, the summer travel season's over, maybe, I don't know. Take your pick. But the bottom line is, I have to go and find some way. I don't necessarily want to take, I could take delivery of this stock here, 45. I could roll this out. So the way I would think about this, and the markets kind of stink. And this is why I've been doing this for a long time. And so I understand how to get in and out of trades relatively efficiently. But this is why I do not like to enter trades that don't have good liquidity, because it makes it hard to get out of them. Okay. One of the most valuable lessons I learned when I first started trading on the floor, trade came in, it's like a 9-way options. Oh, there's bond up is here, buy this, sell that, blah, 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 blah. I don't know what the heck it was. It seemed complicated. They were coming in size. Whoever it was, the institution coming in to do the trade was doing it in size, and called my boss upstairs and say, hey, Jerry, what do you think I should, should I do this? Looks like a decent price. How many of these should I do? And he said, this is stuck with me. Do as many as you can get out of. Okay. That was probably the most valuable lesson in trading that I'd ever learned in 30 years. So here's the point. I can roll this out maybe and what I'm looking at here, there's almost no extrinsic value in these calls here, which means that these puts don't have much extrinsic. This is all intrinsic now. The delta is, switch over to delta. Where's my delta? There it is. Yeah, I'm 100 deltas. I'm long 100 deltas of love. So I could roll this to almost any other put out to, let's say 29 days even. Go out to, maybe sell the 45s out in 22, 29 days and collect about 40 cents a premium. So I'm going to probably do that. Just roll this out, collect some premium, and then maybe sell a closer call, sell maybe like the 42 half call. Let's see what the liquidity is. Anyway, that's what I'm dealing with right now. Another winner though, was General Mills. Earnings are coming out in a month or so, September 16th. I'm short this put. It was up some money when I looked at it earlier. As soon as it's profitable, let's check my positions here real quick. GIS, where's my GIS? GIS, right here. Yeah, I'm up 45% in my P&L. I sold it for, where's my trade price? 82 cents. So if I can buy this back for 42, let's just try it. 42 cents. See if anybody bites. I doubt anyone will, but hey, no harm in trying. All right, before I get in here, before I move on, let's do the SPX Iron Condor. Let's see, the weeklies. No, the AM's 820. So, okay, let me explain what's going on here. When you see these SPX options with, you know, they have the days of expiration down the middle with the strikes, right? These AUG 20 weeklies versus the AUG 21 AMs. The difference between them is these AUG 20 weeklies were introduced however many days ago and expire at the end of today. So whatever the settlement price is at 3 o'clock or whatever, 3:05 at the end of today, they settle, they turn into cash. These AMs will settle off tomorrow's opening settlement price. I think it's called the VRO. I think it's still the VRO. Is it the VRO? Yeah, I mean, don't hold me to that. There's another, SET, excuse me. I was thinking about the VIX. SET, SET is the settlement price for the S&P 500 in the morning. So these settle tomorrow morning. I wouldn't necessarily trade these. These are the ones I'm looking at for the zero DTEs. Let's go down, find my $2 put, $25 away, 7605, $2 call. It's close enough here at the 7720s, 7745s, $2.70. You see, you know, I was able to sell these a little bit richer yesterday. Can't do it today. Let's try 275. See if it gets filled, ship it. Ship. Corn, I sold a put spread in corn. That's 36 days. I'm up a little bit of money on that right now. Not enough to close the trade yet, but that's something I'm looking at. Let's see what else we have. John Deere, speaking of corn, John Deere came out with earnings, rallying up $26. Let's go Deere. I have a John Deere tractor. I have a John Deere mower. So yeah, full disclosure. Okay. The problem is the markets stink. John Deere is not a particularly liquid trading product. Even the 8 days, zero open interest, a lot of this in the hundreds, and it's just, 5 point wide. This is, if you want to practice price discovery, go for it. Yeah. It's like, where am I going to get filled between 540 bid and 1070 offer? Okay. Take your pick. Not bother with this. Like I said a couple of minutes ago, if I have trouble getting into a trade, I'm going to have trouble getting out of it. I don't want to get into a position in DE that I can't close quickly. So I'm going to skip DE. All right. Anything else? We talked about BABA. Let's see. Any other problem children? The VIX. Like I said, I've been saying over the past week or so, I'm just building have a long position in VIX right now. I'm short a put spread in the SEP expiration. The VIX up 1582. Let's see what the futures are doing. So pick a strike, 17 halves. Buy the call, sell the put. Do not route this as an order. This is for information purposes. The debit of this trade is 29 cents. Okay. And so I add that debit, 28 cents to 17 half is 1770, is about 1780 or 1780 or so. So that's up a little bit today. So the futures are looking a little bit strong. That's good for my position. Remember, these SEP options will settle into the VIX cash in 26 days. But right now, they're priced off that September future. With that, I will send it back to Mike and Jermal. I will see you again with Chris Vecchio at 10 a.m. to do confirm and send. If you have any questions for us, send them off to research@tastylive.com. And I will see you folks this afternoon at 1 p.m. for some live trading.
What's up, Tasty Nation? Welcome back to the show. E-minis down 30, NASDAQ down 180, Bitcoin staying afloat here, up 3,300. The story of the week so far. Kind of an insane move there, but we've got a very special guest on the line, Mr. Henry Schwartz, VP of Market Intelligence at Cboe. Henry, how are you doing?
I'm doing great. How are you guys doing?
Thriving.
Fantastic, man. Fantastic. A friend of the show. Good to see you again, man. I'm trying to think of the last time we talked. I feel like it was during some of the throes of summer. Things were crazy. Things have quieted down, but it looks like they're picking back up this week. As Mike mentioned, we got Bitcoin going a little bit nuts, but markets are still very interesting. Yesterday was an interesting day. You talk about bonds, and you saw the move that happened in the market. What kind of flows are you seeing over there at the Cboe?
Definitely, we had a couple slow weeks there in July after, in the beginning of August after a blockbuster June. The numbers coming out of June, 72.5 million contracts a day on average. And the retail stats were really mind blowing, well over 50% of that activity being retail self-directed traders, which, we love to see. And it just tells you how different this market is and how things have evolved. Right now, the macro picture is kind of what people are keeping an eye on. And as you mentioned, the crypto, which had just been kind of, plugging along. And I think some people were starting to get a little stressed out. We got some life yesterday, certainly after the press conference. And then, also the long bond, long-term interest rates, certainly has kind of become a top of mind, topic on kind of most of the things that I listen to, and it's a very interesting time, right? Markets really, and we hit new all-time highs, a few days ago. We're kind of bouncing along near there. More dispersion than we were seeing, right? It's not just the super, the Mag 10 stocks blowing us higher. Those, those really actually kind of, some of them come back a big chunk. So I think it's actually very healthy to kind of see, a big rotation and, just kind of a lot of capital flowing, into some of these less appreciated names. I think last time when I was there, we were talking about, the Russell being up, outperformance, the small cap stocks, which is pretty rare. And in fact, when we saw it at the beginning of the year, I talked to my colleague, Mandy Zhu, who puts out a great weekly volatility and macro note. And she said, this small cap outperformance, it's been something people have been looking for years, but it always fades. And, this year, this is not the case. Russell's up more than 20%, way above what we're seeing in S&P, which is still up a pretty healthy, 12, 13% year to date. And it's only August.
Yeah, it is wild. I mean, we've been trading these things pretty aggressively with the rotation in mind. But to your point, there was a point in time where we saw RSP, the equal weighted S&P, at all-time highs, while the Mag 7s were way down. So to your point, it was not the Mag 7s driving the all-time high narrative, which is typically the case. But yeah, I'm going to throw up the difference between SPY, QQQ, IWM, and the diamonds. We can see just how much those things have been moving. But we have been trading SPX global trading hours quite frequently, almost every day.
Yep.
It's been a really nice trading vehicle, especially trying to get the morning gaps in either direction. It's been fun.
Well, that's interesting because these global trading hours, which I believe they start around 8:15 p.m. New York time, and they run right till 9:25 the next morning. But as you mentioned, kind of the true excitement is usually in that hour or hour and a half before the open. We actually are looking to have global trading hours, at least that morning session. So starting at around 7:25 in the morning, or 7:25 till 9:25, for a number of single stocks, all the big ones, right? Apple, Nvidia, Tesla. We filed for about 20 of them, and that really is moving forward. This has kind of been on the table for a long time as the underlying overnight activity has continued to get more liquid. But it's finally happening, and Cboe's not the only exchange kind of involved in getting these off the ground. So we should see that really in a couple of months. It's waiting on some filings, but it looks like we should be able to see that early October. It's not far off at all. And those will trade right through earnings for names that have pre-market earnings. So this will be a little bit different, and certainly it'll certainly be really interesting to kind of see what kind of pickup we get there. But a number of kind of the retail platforms are going to give their customers access on day one. And we have, great commitments from the liquidity community as well. So, for some of us who like to kind of, relax until that 9:30 bell and also go home right after that 4:15 bell for New Yorkers, it's definitely shifting. The day's getting longer, and people are going to have to adapt.
Well, a great man out in New York once said, "Money never sleeps." And it appears that that's the case going forward now, for sure. It's been also a somewhat quiet time. We've seen VIX, we've seen VXX getting to new lows or whatever, but there's been clearly some activity still, as you stated. There was a big trade sometime recently in the past week or so, right, in VIX?
Yeah. On Monday, we saw one of the biggest VIX option trades of the year, which was 160,000 lot of the September 16th. Okay, so contracts that expire in about a month. The 24 strike calls, a big customer, a big institutional money manager, paid up to 73 cents for that. So now it's interesting, VIX calls are kind of equivalent to SPX puts in terms of the scenario where they really pay off, right? Is some sort of sharp correction or an explosion in volatility is kind of what you're really looking for. These are interesting because they're not super far out of the money. We're not talking about the 50 strike or the 80 strike, right? Which is sometimes where we see some of these tail hedges. This is a pretty meaty trade. The other thing that was actually I thought was really interesting, it traded electronically in the auction process. Usually these big blocks are negotiated and kind of traded in the pit by hand, as you guys know. But this is a big electronic trade.
So this trade on the screens.
It trade on the screens, and it tells you something in terms of the way it executed in an auction means that the firm bringing the order is okay letting other people participate. So it's a little different than, kind of a pre-match trade where they want the entire other side. Now, the truth is, the VIX futures are basically kind of where they've been. So the trade hasn't moved much. They're still trading around 69, 70 cents. But it seems to be a very large hedge into the early fall.
How about it?
It is wild. And yeah, I think it's it's kind of shown already in the VIX futures where we have this lull, this dull point, but then we jump to the 20s and it's basically flat. The curve is flat all the way through the end of this year and into next year, basically. Very little contango there relative to the near-term contracts. So yeah, that'll be interesting to see if it plays out the way that they're playing for. But I mean, E-mini's down, Nasdaq down 2 days in a row. It seems like things are changing here in the landscape of the markets.
Yeah, Henry, does it seem weird that there's no like kink in the VIX curve for like the midterm elections?
Well, that's really interesting. I was just talking to our floor manager, and he pointed out that we now have the SPX November 3rd and 4th expirations. So we actually do have contracts out there. There is the open interest is starting to build. I think that it is a little interesting. There's no kink. Yeah, they're there now, and they're starting to. They've only been there listed for a few days. But it'll be actually very interesting to see kind of how the positions build. This time around, the traders and investors, there's a lot of different ways for people to kind of put their capital out there. There's specific event contracts available on some of these platforms for individual races, right? So you're going to see a lot of kind of interesting positioning. The nice thing about kind of looking at what's being accumulated in SPX is, that's what we're familiar with, right? So it's kind of the beginning, but it is a little interesting to me. I guess, what it's telling you is that the market's actually, whichever way the election that goes, and maybe there is kind of a significant shift in the landscape. Market doesn't seem to be, very concerned. And actually, Mandy, my colleague, had a note last week that, what we're seeing is, VIX at 15-ish, maybe a little bit closer to 16 today. That's kind of a low range, right? And as you said, VVIX is also kind of at the low end. So we're certainly not seeing a lot of concern. This has kind of been the story, right? Even with these kind of, even with oil where it's trading and, the situation, the geopolitical pressures that are out there, the market's not in any sort of panic mode. It's a little bit, like I said, what we see happening is a lot of capital, moving. And, you mentioned, the equal weighted. Actually, we have the SPEQX, which is the index options on the equal weighted index. So that tracks the, say the RSP ETF.
What was that? SPX what?
SPX EQ. So it's an equal weighted S&P. I've traded it myself. It's it's a very different feeling. But it really does kind of, it reflects that dispersion, right? It is not dominated by NVIDIA, Tesla, Apple. In fact, because they're equal weighted, it tracks very differently. It's certainly gonna move closer to kind of what you see in Russell or a mid cap kind of index. But it's been a nice kind of tool to kind of add in terms of, I'm always kind of looking at what's out there to trade. We also have DJX, Dow Jones Index options. Those are interestingly, they're not the most active out there. They're one of the lighter traded indexes. They are available though, and as because they're cash settled. Yeah, because they're cash settled. They're less messy if you are carrying things into expiration or kind of making some of these shorter dated trades. There's zero DTE. As well. So, there's a lot. And earlier you asked about new things. We also have these XSP binaries. So XSP is the SPX index divided by 10. So if SPX is 7,400, XSP is 740. It's, which actually puts it pretty close in price to SPY, but it's cash settled. That's the XSP index options. These XSP binaries, the ticker I believe is XSPBW or XSPBX. Those are contracts that I might have mentioned them last time because they were getting ready to launch. Basically, if you buy a call and expires over your strike, you get $1. So they're nice and simple, and it's kind of the beginning of this binary option complex that Cboe is rolling out. Also expected in the fourth quarter, or possibly even the end of September, we will have KPI binaries on single stocks, and what that means is traders get the ability to make a trade based on a KPI, a key performance indicator that is released by the companies in their earnings calls. So think of the number of cars Tesla sells, or the number of iPhones Apple sells, or simple earnings per share, and you'll actually be able to trade those as well. So this has been it's a really interesting kind of new product out there, and there are versions of these things on some of the prediction markets, but Cboe as a regulated exchange, brings something kind of new to the table. And I think it's going to be really interesting because, traders that might have said, listen, I think that, the metrics are going to be great, but the stock, I don't know what the stock's going to do, because the stock can be very subject to kind of the whims of the market and guidance and everything else. To have the ability to specifically place money on, I think they're going to sell this many units, will be something new. And I think it's got a lot of potential to get interest from both the retail segment and from kind of the institutional side, where an analyst might say, listen, I'm very, very confident that this is the performance of the sales this year or this quarter. But I'm not exactly sure how the stock's going to be.
35, 140.
A lot of products. That's amazing, man. That volatility newsletter is awesome too. Tell the people where they can find that at, because I actually get that every week and start my week off with it.
Okay.
Just Google Cboe.com, market intelligence, or Mandy Zhu. The last name's XU, and it's great. I wait for it kind of every Sunday night, Monday morning, and very high level content, but it's easy to understand. So check it out.
Love it. And yeah, the future of trading is instant, really, and that was pattern day trading going away was the precursor to global trading hours. Global trading hours is the precursor to equities, and then now you have the KPI. Like, if you were to ask me what's the most frustrating thing about trading earnings, there's two things: that you can't trade it after the market closes, and you can't trade the KPIs. Like, you could be spot on the KPI, and the market just dumps the stock or rallies the opposite way if you think it's going to fail. So that's an amazing product introduction, because now you can have the ability to really just trade whatever specific thing it is you want to trade, or book that winner if the market rallies or sells off, and then you don't have to worry about the reversal, taking those gains away with the closed market. So love it. Well, appreciate your time, Henry.
Good to see you, Henry.
And we'll see you soon.
Thanks, guys. Talk to you soon.
Thank you. E-minis down 33, NASDAQ down 170, down the Russell selling off as well. Bitcoin up 5%, ETH up 8%. Feels like nothing really has changed all that much. But yeah, it's another red day in the markets. Markets completely ignored the press conference narratives that were happening yesterday. And I'm very interested to hear what Mr. Tim Knight has to say. So let's bring him on. Tim, how you doing this morning? You're good. It's the classic.
Now you can hear me.
Yes. How you doing?
How you doing?
What's going on?
Better. That's my answer right. Better.
Yeah, better.
So yeah, this is I made an allegory yesterday on my afternoon show, which I think is fitting given what we've woken up to. And I was delighted to see the result, because I was just a bundle of nerves all night long.
Why?
So the allegory,
Why a bundle of nerves?
Because the government ceaselessly interferes with what should be an organic market for the past 18 years, because bulls don't have the backbone to deal with reality, so they need bailouts all the time. Because Besant hurled a $100 billion QE to help the poor darlings, you friggin' snowflakes. So, as the only bear on the planet,
that was a great
amidst all of you panty wastes, it just pissed me off. And so, yeah, I was nervous all night. Shall I go on?
Yeah, I would love you to, but definitely do what you feel.
Say pecan wrong now. Okay.
You can.
So, better, I'll mute myself again. The allegory was this. I felt that what was going on was akin to a young man who wanted to impress his girlfriend's parents. He wanted to ingratiate himself to them. And he was already deeply in debt, didn't have a job, etc. But he managed to get a loan, buy a nice car, and dazzled the aforementioned parents. And that is what I kind of felt we went through yesterday, because Besant, deploy, 40 trillion in debt. Let's go deeper in debt, buy securities that nobody else wants to own because, and then that'll, make the old man happy. And he did that. It was a shocking move. And, if you don't believe it's shocking, just look at the immediate reaction from ZB, GC, BTC, on and on and on. And it worked. The parents were dazzled. It worked. And this morning we wake up and his car's stolen. And so what do we have? He still has the debt. He still has the payment that he has made, the worsening of the situation, and yet the benefit is already gone. I did not expect this to happen so quickly. I thought eventually the market would kind of wake up, but I was stunned to see the entirety of that ZB rally just poof.
Yeah.
So yeah, that's kind of interesting. That's where the allegory is right now. And I was wondering, mercifully, I had like no crypto exposure, and I didn't even notice until a few moments ago because crypto's very big. And I guess Trump said something or another about how he's going to buy Bitcoin and how he's going to support crypto, et cetera, et cetera. So do either of you gentlemen know what that was all about, what the news was regarding that statement?
Yeah, in the press conference, he mentioned Hyperliquid specifically. And that's been something that our crypto friends have been talking about for a long time, just the product Hyperliquid, getting involved in it for something like this. But I did not have that on my bingo card that he was going to go on stage and talk about Hyperliquid. And
yeah, I thought the crypto thing had been sort of abandoned because, fell by half. But luckily, the one asset class that was raging this morning, I had almost nothing to do with. Yeah, so can we look at a chart or two? Would that be all right? Sure. Okay. So let's look with the basics here. Let's just kind of juxtapose the ES and the NQ. The ES, and this is subtle, the ES is slightly dipping below that blue line. Now, what's the blue line represent? It merely is anchored to the prior high set back early in June, which we took many, many, many weeks to best. And then after we had this mega 4-day rally, we finally shunted that aside and hung out for a couple of weeks above it. Even the selling here and here and here, we respected that line. But right now, we're sort of teasing a little bit. We're getting a little bit below that. The support's not seeming quite as solid as it was. And more importantly to me, who's really focused on tech on the short side, the NQ is down modestly, about 0.5%. And we have our 5th red bar in a row. And I know I've mentioned this before, but it bears repeating. At the maximum level of strength, we did not even kiss the bottom of that resistance line, the descending trend line. And so this all lines up quite nicely with the short side of tech because it's all about context. We are in the midst of an exceptionally supportive equity market. Not a day is going to go by when something positive isn't said to try to goose things. And even with all that, we are subtly slipping lower on the NQ. And of course, the next big flag, the big marker is going to be what happens with NVIDIA. Because a week from this very moment, we're going to be experiencing those results, whatever they may be.
Yeah, and NVIDIA has held on to its implied volatility. I think a few days ago, we were looking at a 13-point implied move with the $220 stock price, about 5%, and it hasn't really budged at all. So we should continue to see implied volatility stay bid in the 8-day cycle, which encompasses that earnings announcement, especially with the turbulence in the market that we've alluded to.
Yeah, well, these days, your worldview definitely depends on what you read, and there's some definite publications you can read related to AI, related to that whole AI revolution, and you'll read it and be like, "Oh my God, this is the whole world's going to like burst into flames with this catastrophe." Or you cannot read those things and read other things, and things seem optimistic. But I just read that OpenAI. Sarah Fryer, I guess yesterday, had all hands when they said, yeah, we're going to be a public company next year. And so we all looked forward to the SpaceX IPO and what that would do. Anthropic is going to, I think, have almost as much attention because it's so important to see, like, how do the public markets regard Anthropic as a public entity with real numbers that you have to examine.
I saw a picture recently of what looked like Jenga blocks. And there was all these different names, Meta and Microsoft.
I'm sorry, the picture was of who?
Jenga blocks, like Jenga, the game Jenga.
Oh, yes. Oh, yeah. Yeah, well, just like they
had all
in,
these, each they all had like ticker symbols on them, whatever. And at the bottom, it was only
at
two
the bottom
of them holding it up.
That's right. I saw that.
And OpenAI, right? Yeah.
That's exactly right. Yeah,
that's exactly the image.
Yeah, just like The Big Short, that the metaphor they use there. Absolutely. At first, I thought you were using a cultural reference I didn't know, which are Legion, but luckily I do know that one.
I think you know most of my cultural references. That actually makes me feel good on a daily basis.
I mean, anything with Star Trek, the original series. I mean, I'm unbeatable. Anything from the 70s.
I was talking this about with my father-in-law. I don't watch The Next Generation. Like, if I see Star Trek, I've never watched one episode. No chance. Like, not happening.
Captain Kirk is mine.
That's it. James C. Kirk. That's it. Only.
Yeah. That's my captain.
That's my captain. Agreed.
Absolutely.
There's the image. Yes.
Yeah, and listen. You cannot show me Wrath of Khan and the Death Scene without me. I will tear up every time. I know it's coming,
man. For sure.
I will tear up.
The needs of the many outweigh the needs of the few.
Outweigh the needs of the few or the one. Yeah. Don't do this to me.
You started it. We're here, man.
Oh my God.
We're here.
Anyway.
Oh yeah. Look at that.
So
that's a sexy man right there. That is.
Huh?
That guy has made it with him. He's made it with humans. He's made it with people that were green.
No,
he's done it all.
Do I have any Star Trek? I've got a lot of Star Trek stuff here in my office, but I'm not gonna. Tomorrow when you're on, you gotta have. I will reveal how old I am. I was born the year that Star Trek was created, so I think there's a special cosmic connection there. A lot of good things happened in 1966. So yeah. Wanted to contrast a pair of miners ETFs here, which I've been yakking about a lot lately.
Like gold miners, you're saying?
ERS, yeah. The kind we can talk about. The GDX is the precious metals. I think specifically the gold miners, and those are having a grand old time. GDX had a huge pop yesterday. It's up today. Is up today again, modestly, but up nonetheless. And I have nothing to do with that position. What I do have is yesterday morning I shorted XME, and I'll just I say this every day, so forgive me. I'm bullish on precious metals long term. They may have gotten away from me at this point. Gold may not ease back to the 4,200 price level that I'd wanted to see. It may just be off to the races at this point. But given any disposition towards shorting miners, I do not go near GDX. It's strictly XME because long term, the cyclic chart, the ratio chart that I've looked at, is strongly in favor of XME, vastly underperforming GDX for a long while to come. So I'm short GDX, I'm short XME, and will continue to be so.
Love it. Yeah, it's been a wild ride the last couple of days in gold and the gold miners. We'll see if it reverses or holds, but yeah, lots of.
I hope so. I'd love to get in.
Yeah,
I don't know if I'm going to get the shot.
Yeah, it's going to be crazy to see, but.
And as far, I haven't even looked at Bitcoin. Yeah, goodness gracious me, look at this. So this is kind of cool. Here's Bitcoin, and what I've noticed about this, and this is not teased out to perfection, but I'll just broadly speaking, up here, this was the tippity top. This whole distribution top for Bitcoin was the peak, and we got to almost 130,000. Not only, 10 months ago. Mm-hmm. And so it got sliced in half and then some. But in the course of doing so, it's been undergoing this interesting phenomena where we fell hard, and we fell really hard, got a lot of attention, and then spent many, many weeks, really a couple of 3 months climbing. So recover. It doesn't quite recover all the way. And then something else happens and big plunge and recover. And something else happens and big plunge. You kind of see the trend here. And then lately, we seem to find a happy home at around 60,000. And what I'm witnessing here, I believe, is no different than what we saw here and what we saw here. And so at some point, it could be 80,000 because people love big round numbers, or the high 70s, something like that. But at some point beneath the peak of this pattern here, I think we'll once again get a cut lower and finally complete the superset of all these, which is everything above 60,000. So I'm kind of heartened to see Bitcoin rally like this because I'm at a safe distance, but also because I think it may take a few more weeks, but we're going to get set up here for another really nice blast lower.
Yeah, could be. And yeah, I think if you've been waiting for a short, seeing a rally like this, of course, is a better entry point than 2 days ago.
Absolutely. Yeah. I mean, not to jump the gun too much, but I decided to give strategy a go. I shorted that earlier today. It's not a great chart at all because it actually busted above this basing pattern here, but fingers crossed. We'll see how it goes. It's not a huge position, but that's my one exposure to crypto now, and that's really it.
Cool.
Yeah, MicroStrategy is going to continue to be the volatility product that acts like a volatility product for Bitcoin. It'll be the biggest mover on the upside, biggest mover on the downside for sure. So playing the dips and rips in MicroStrategy could be the way to go.
And there's a whole slew of attendant products, I think, that have been created around this thing. I've never counted them, but if you look at just Ethereum and Bitcoin, there's got to be dozens of ETFs whose sole purpose in life is...
It's almost too many to count, honestly. Like the longs, the shorts, the whatever, the other product they have that's like a bond product for Bitcoin. I forget exactly what it is. It's
STRC.
Yeah, that. Yeah, I mean, there's so many. My God.
Yeah, and there's an equivalent of that for Ethereum, which is ASST.
Wow.
So yeah, I've never been in the business of creating financial products, but there must be a certain magic to distinguishing them because after a while, it's like, what's different among any of these 30 things? They all look the same to me.
Yeah, agree. Totally agree.
Well, Tim, appreciate your time.
Good to see you.
Yeah, good to see you. And we expect to see some Star Trek memorabilia tomorrow.
Live long and prosper, everybody.
Yeah. See you, Tim.
There you go.
See you guys.
E-minis down 27, NASDAQ down 150, down the Russell down about 1% each as well. But Bitcoin staying afloat, up 5%, ETH up 8%. Crazy day so far. Haven't been filled on anything that I've been working yet. The USO call diagonal spread, trying to close that for a $650 win. And then Coinbase, the Super Bowl out in October, about 50 cents away from a $450 win. These are both longer term positions, so I'm not going to chase the fill on those ones. But solid day so far with these market moves, and we'll see if they can continue here.
Yeah, indeed. Bitcoin is the story of the day. Those names are kind of sitting in the same area. We're going to keep an eye on it, but that has definitely been the bigger mover.
Yeah. We're going to take a quick 90-second break here. We'll be back on the other side with some research with Julia. You're watching Tasty Live. What's up, everyone? Welcome back. We got some tasty research, which means one thing and one thing only. We got Julia on the line. Julia, how you doing this morning? We were talking about Star Wars, Star Trek,
Yeah.
You were a different breed. What were you watching?
I saw Star Wars. I wasn't a Star Trek kid, but we watched a lot of, like Gilligan's Island, Bewitched, Monsters, Land of the Lost, which was horrific.
Land of the Lost.
Like,
Wow.
Land of the Lost
That's
was
damn near older than Star Trek and Star Trek.
nightmare fuel. And then the Boomerang cartoons. So like Tom and Jerry and Looney Tunes.
yes.
And those were fun. They were, 90s cartoons were like violent.
Yeah.
You know what? All of those are very good shows. If you're raised on those shows, you're raised a certain way. And like, nobody wants to punch you in the face. Honestly, like if you don't watch those type
I'm
of shows
going to
growing
disagree
up,
with that respectfully.
I'm telling you, if you like, all right, just watch. I just said it on there. I said it for everybody to hear going forward. If you run into somebody who didn't watch any one of those shows that we mentioned, like a Star Trek, a Gilligan's Island, those cartoons, like things like that, they're kind of, deplorable people. I'm going to be honest. I'm just going to put it out there.
It's okay. Yeah.
Sure.
Yeah.
Those cartoons,
I'm not
you learn a lot from
disagree.
watching those type of family wholesome shows and cartoons.
They're so wholesome. They're so wholesome.
Well,
and then
I shouldn't say wholesome. There's a lot of
they were pretty
interesting stuff in those. There's a lot of interesting stuff in those type of shows and cartoons for sure. It's very subtle, but
I wouldn't say the cartoons were especially wholesome. Yeah, they were pretty violent. The cartoons were like racier than the live action shows.
There's nothing violent about Tom and Jerry. Nobody dies. There's
no, no, there's
no real blood.
bludgeoning.
No.
Nothing like that.
None
of that. And then I remember, my parents.
There's no blood.
There's no blood. I mean, yeah, it's network television. Yeah. There can't be blood. I remember my parents were way more into the Lucy show instead of I Love Lucy. So I watched that one more. I think that was like now it's a deep cut. Yeah. There's a household of deep cuts, I guess. But yeah, I thought those were pretty wholesome shows.
Sounds like a good name for a band, a household of deep cuts.
The household of deep cuts. Everyone can relate.
Yeah. Everybody can use it. You guys can use it. Go ahead.
It's like 5 for fighting. The hockey penalty.
There they are.
What?
Who is this?
This was the Lucy show. That's
yeah, the Lucy show.
That's her friend Ethel. I didn't realize that.
That was her friend Ethel, and they were just being goofballs together. I think it was pre-Ricky. I don't remember Ricky in like any of the.
It was probably after they got divorced. So yeah, they came on air together, but they got divorced, and so yeah, she still had her own show afterwards.
I think wasn't like the famous chocolate factory scene from the Lucy show.
Yeah, 100%.
Yeah.
I don't know if it's from the Lucy show or I Love Lucy. I feel like that would be a I Love Lucy thing, but
no. It was from,
and it was going, and she's eating it, and it's going, and she's eating it, and she's supposed to be like putting them in, but she's like it's going too fast, so then she just starts eating them. Yeah, I think that's from I Love
just start
Lucy.
eating the shot. Yeah. That no, you're right. It is from I Love Lucy, but it's also with Ethel.
Yeah, Ethel was her. Yeah, that's her home cook.
Oh my god, it's colorized. I've never seen it colorized before.
You don't want to play this game with me in TV shows. You really don't.
I'm going to lose. The only one that I might win on is Faulty Towers, which is a John Cleese show. That's the deepest cut that I'm aware of.
That is very deep. I've never even heard of that.
Never heard that.
I know who John Cleese is.
John Cleese and his wife run a hotel in the English countryside. And it's one of the funniest shows that I remember as a kid.
Sounds like a good setup.
It's a good setup. I don't even know where to find it. I have it on a DVD.
I've never even heard of it. Wow.
Nobody has. Yeah, Faulty Towers.
Okay.
Crazy. Well, what do you got for us
So
today?
anyway, want to get into some overnight gap research?
Absolutely.
Sure.
Let's do it. So we're going to be covering this piece today from God. If you want to follow him over on X, do overnight gaps predict the day ahead? So today we're going to be looking at the size of overnight gaps, what sizes are typical versus ones that are large, because overnight movements and intraday movements have different, typical degrees of volatility. So we're going to be looking at that. And then sort of like how predictive the size of the gap is, and then what it actually, is it predictive of direction? Is it predictive of a fill or reversal? We're going to be kind of going into those statistics a little bit today to understand like what is a little bit more of a reliable signal and what is not. Make sense?
Yep.
I like it.
Okay. So let's get into this study. So here we're going to be looking at SPY from 2017 to 2026. There's about 2,400 occurrences. We're going to be looking at the gap. So today's open versus yesterday's close. And we're going to understand, did it fill? And then did it close green? We're going to be breaking down those occurrences by the size of the overnight gap. So here we're going to be using smaller percentages than what you would typically use for daily returns. Here our percentages are going to range from -1% to 1%, just because the size of those overnight movements tend to be smaller. And then we're also going to be looking at how implied volatility levels impact some of those statistics. So we're going to understand like what's the typical distribution of overnight movements. And then is there any kind of directional or fill predictability based on the size of the movements, and then how sort of like volatility plays into that as well. Make sense?
Yeah.
Yeah. Why traders believe this? The big gap you brace for barely happens. The study lives where the days actually are, a tight band around unchanged. Okay.
Yeah. So we'll take a look at exactly what it means for a gap to be big when we're talking about overnight movements, and sort of, like what that means in terms of predictability, at least based on historical statistics. So here's the distribution of overnight movements of like those gaps basically for the S&P 500. And you'll immediately notice that the size of these moves is significantly smaller than what you'll look at when you're talking about like daily returns, where like a standard deviation for daily returns for SPY is around like 1.2, 1.3%, depending on the look back range.
Wait, pause
but
for a second.
here, yes.
When we talk about move 1%, are we talking plus or minus? So we're talking about in any direction. So we're talking about a range, or are we talking about in one singular direction?
We're going to be breaking down by direction, but here, this distribution that is shaded here is between -1 and 1%. So here's that kind of like band of where most of those movements fall. It's rare for an overnight move to exceed 1%, either to the upside or to the downside. And it's surprisingly even, although we can see there's some periods of like tail movements as well, but that's a good question.
Okay.
But those movements that are larger than either positive or -1% overnight happen about 1 in 10 trading days. And beyond 1.5%, those are incredibly rare. It's about 9 days a year on average. So it's expecting or trying to plan for days like that, or trying to waiting until trading, for example, around days like that. They're just incredibly rare. The majority of occurrences really happen between 0.25 and 2.5, -0.25 and positive 0.25%. So that's about 44% of those occurrences. And then 90% land between -1 and 1%. So generally much smaller than daily returns. But that makes sense with like the nature of overnight trading, right?
Yeah. So about 20 days in a year, over 1%, and about half that, or 1.5%. Got it.
Right. Where we can certainly get those tails, and we'll get into that in a little bit, and how kind of like volatility levels overall sort of tie into that. But overall, about 44% of those occurrences land between 0.25, positive 0.25 and -0.25%. So generally pretty small movements overnight.
Mm-hmm.
Yeah?
Mm-hmm.
Indeed.
Okay. So then when we get to the next slide, and we're trying to understand the probability of the underlying assets of the S&P closing green, depending on the overnight move that it experienced. And just because there's positive drift in the market, typically, daily moves or the S&P closes up about 55% of the time. So what you can kind of see here is that unless the moves are very large, and especially large to the upside, there's not really directional strength, I can say, unless the moves are very large. So here we can see that even with large moves to the downside, it still closes up 54% of the time, closes green. And we're hovering really around between like 49% and 57%, which is fairly close to chance. We don't have probabilities of closing green upwards of 60% really until we're having large moves to the upside. And by then there has been just such strength that it makes sense that we would close the day green in those cases, right?
Yeah, I think it's interesting because you have so much narrative and so many talking heads where you feel you feel that this would be greater in terms of the gap risk up or down 1% and like the direction, but it's really not. It's kind of wild when you just boil down the numbers.
Yeah. It's just, directional, getting kind of like directional, especially like we're talking day by day. It's different when we're talking about like directional tendencies over a 5-day period, over a 10-day period, where you have a little bit more strength there. Here we're talking about like day by day. And so even when the market opens up 1% from an overnight move, there's still 40-ish% of occurrences that flip, which is quite large. The most upside that we're kind of seeing, or the most upside from chance that we're kind of seeing, is like maybe 10%. And that's on days when the market already has opened up to such a strong percentage to the upside, basically.
Yeah.
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 And it's even like day to day. I'm just looking at a chart of the E-minis right now, and it looks like year to date we've had just as many red bars as we've had green bars, but we're still up on the year, of course. And I think that just speaks to, like you said, there's more lean towards specific numbers blowing out of proportion when you have like the 5 days in a row, 6 days in a row, where you have the immense strength to the upside. But there's definitely a lot of red on this chart, even though we're up on the year.
Right. And it's because we're talking about like day by day movements, and those on a day by day basis are generally quite difficult to predict. We know like long term S&P usually closes up 55% of the time, so there's a little bit of a tendency to the upside. But when we're talking about longer time horizons of like 5 days, 10 days, 20 days, that's when you generally see a little bit more statistical strength around direction. Noting that the market can really change on a dime. But what is interesting is that when we look at the smaller gaps, that's when the likelihood of those gaps getting filled at some point throughout the trading day become quite high, upwards of like 80%. So 80 to 85% when we're talking about the small gap ranges of about 0.25%, either to the upside or to the downside. And then that gap fill percentage really drops when we're talking about the very large moves overnight, which I thought was pretty interesting, actually.
Yeah. I like it.
Yeah.
Makes sense. And then we go to the next slide, so we get into volatility. So that's when it becomes quite interesting. So when IV is elevated, intraday range, at least during the backtest period, actually tripled. So it went from 1% to 3%. So when we're talking about the probability of a gap fill happening at some point throughout the day, that goes up a lot just because the swings become so dramatic when IV becomes elevated. And here we're talking about implied volatility over 30 versus under 30. So we're using a pretty high benchmark for like what we're considering high in this case. So when we're talking about moderate gap fills of 0.5 to 1%, that happens about 33% of the time in call markets, but 67% once IV is over 30. So that becomes significantly more likely with volatility, just because intraday volatility also increases when overall volatility is elevated.
Interesting. Yeah.
Makes sense for sure, though. Yeah, saying like the ranges get bigger when volatility increases.
Yeah.
Yeah.
Love it.
Tripling was surprising to me. I would have kind of, it's pretty big.
I mean, yeah, especially statistically speaking. Yeah, tripling the range is kind of wild. And I think when you have the big gaps, even with the big gaps, you might feel like there's going to be a fill, but not all the time. Still 40% is still decent, but like this says, a large gap is usually real repricing versus just like a one and done type situation. But we also see the one and done type situations as well.
Yeah, that was surprising to me because 0.5 to 1%, that's pretty big for an overnight move, but it's not as big as they've gotten. And even those only fill when IV is elevated like 2/3 of the time. So just when IV is elevated, you're seeing chop really in both directions. You're seeing chop just kind of everywhere, but it's still not necessarily guaranteed. You can still see sort of like trending behavior, even when volatility is elevated, not just sideways chop, in a lot of cases. But yeah, that's kind of the interesting takeaway from this as well. So yeah, thought that was cool.
Love it.
And I think we got some takeaways. So interesting study by God. He's going to be writing about it as well if you want to check it out over on Twitter. But days with directional edge are rare. That's just really the nature of the markets. Predicting directional behavior on a day-by-day basis is just very difficult to do if it can be done consistently. So closing green is really a coin flip for most gap sizes. It's really only when we have very large gap sizes to the upside when we're seeing a higher probability of closing green. And that's already because the market is starting with significant strength. So small gaps behave more consistently, specifically when it comes to fills. Those get filled about 55 to 85% of the time at some point throughout the trading session. So those big gaps, it's not really would you say it's not really the same kind of like moderate sideways movements that we're seeing in small gaps? Those are closer to actual like pricing corrections, although those can also come with high volatility conditions where just a lot of things are being repriced sort of in the market. And volatility can be used to size those moves. So when IV is elevated, and here we're using an IV of 30, that really triples the size of the intraday range. And so those gap fills much more often. Those gaps are filled, I should say, much more often during those conditions. It's a fill signal, not a forecast. So when we're talking about like directional usage, it becomes quite limited. But when we're talking about gaps being filled relative to nearby moves that we're seeing, the day before, that becomes a little bit more reliable, specifically when the size of the gaps are small. And then when elevated volatility is taken into account. I think that's all I got.
Yeah, I like the last takeaway here. I think this one speaks to me the most. Fade small opens towards yesterday's close. Respect the rare ones as it might create a new level, and let volatility set how far it travels back. So from my perspective, when I'm looking at a downside move in the E-minis and NASDAQ, especially like a 1% move or somewhere around there, before buying the dip, the first thing I do is look at volatility. The volatility curve, the VIX, because if the VIX isn't moving and the volatility curve's not moving into a 50-point or 100-point move to the downside in the E-minis, then I'm gonna buy that dip because the volatility curve isn't changing. Nothing new is nothing's telling me that this is a new regime of volatility and we should expect more downside move. But if I see a 100-point move and then another 200-point move, and then all of a sudden the VIX pops and the vol curve flattens, to the point of the takeaway here, like that could be a new trading range. Like it's no longer we're in dip buying season. It could be continued selling. So I think pairing your directional decision with a look at volatility and seeing how volatility reacts or doesn't react, I think can be a sharp way to go about it.
Yeah, that's like core, especially of a lot of options trading, which is that volatility is just a more reliable predictive indicator. Like it's more directionally, reliable when we're creating predictions around volatility versus price, unless the price moves are really big. That's when price tends to have like a little bit more predictability, but even that's more around volatility than the direction of price itself. So vol is just in a lot of ways a strong indicator. And I think it kind of shows here, even when we're talking about relative to price signals.
Love it.
Yeah, good piece of research here. I like that one.
Yeah, it's a fun one, right?
Yeah.
Super fun.
Good time.
And that's all I got.
Cool. Appreciate you. We'll see you a little bit
Thanks,
later
guys.
today.
Peace.
Adios. E-minis still down 20. NASDAQ down 130. We've only got about 7 minutes left here. So why don't we'll stay on until the 10 o'clock hour. But just a real quick recap. We have been trading today pretty actively. If we isolate our trades from today, we've got a bunch of positions that you want to walk through. Why don't you walk us through them?
Yeah. Super Bear closed that this morning, $980 gain. Put that on yesterday. SanDisk. I did this late yesterday, but was able to finally posted it. If you saw when we talked about it this morning, you were actually able to get in at a better price than I got in yesterday. But call Butterfly further out in September. You doing that? Walmart is. We went as soon as the stock again that had earnings this morning. Stock was down. It was trading 104 and change. Not sure where it is now. Of course, it's a little bit lower, but. Did a diagonal in there going out to D's. First D's position we got going on there. IBIT rearranged a couple of things. Moved my September long calls further upside to October. Also had a short put that I rolled to October as well. And SpaceX, I did a similar position that you had. So I initially had one of these. I had it in September. Took it off in the big move, but now reestablished another position with it down here. And so, yeah, just selling a put to finance, buying a call to the upside. Because guess what? All of a sudden, you wake up one day and people love something, just like they love Bitcoin all of a sudden. The news travels in that way. And so we're traders, or we trade news. I mean, that's how it is. So that's what we did there.
I like it. And yeah, I think SpaceX, like that's the way to play it. If you're playing for a big upside move in a vol expansion, you want to have that long naked call by itself, similar to a VIX style move. But financing it, creating a credit in the middle, $700, nice and big credit there. Basis below 120. Love to see it. And then Walmart, I did the same thing. Went to the 105 strike instead of the 100, and then sold the same 115 call in October. But first position in December. But yeah, this is the one of the things that low implied volatility affords you is when you have a sub 30% IV product, you can go to December and buy this option for $600. Like, it's a no-brainer versus going to a more near-term contract, especially when my risk tolerance for these trades is under $1,000 or around $1,000. Like, I'm going to go as far out as possible and just inventory that delta with low IV and then sell something against it still to reduce basis. But 10-point wide diagonal spread there for $500, which is really, really low, $600, but still really low relative to the max profit. And then I've got these working orders in. So USO call diagonal spread, the 120, 135, put this on when crude oil was much lower and backwardation was more flat. Now we've got crude oil much higher and backwardation coming back into this market, which is what brought USO from 100 up to 130. And we're basically right at the money here on the 135 call. But long option out in October, so I'm not going to chase this fill. Sitting at 1194, trying to take $650 out of this thing. And then my other working order, Coinbase, getting closer. I'm looking for $450 even, which is a $4 credit after selling this thing on the open for 50 cents because Coinbase was significantly lower when I opened this trade. So my put spread was worth 50 cents more than the call spread I bought. And now my call spread is worth about $400 more than my put spread that I'd have to buy back because we got this rally closer towards the 190, 210 call spread. But this is also in October, so I'm not feeling the pressure to really chase this fill either because the higher Coinbase rallies, the further away we are from this risk on the downside. So yeah, I'm just going to let those simmer and we'll see if we can get that move. But looking good right now, as you can see. If we keep getting the rally higher, we're looking at $1,000 winner if we get up above 200, which is just a few more days like this away.
There it is. So yeah, if you're tuning in this morning, Walmart had earnings, stock is down. Deere had earnings, stock is up. Advanced Auto Parts, stock is down. How are these guys still around? I'm not even sure. Stock is down, struggling today. Those are some of the earnings movers. Bitcoin obviously is the big story here today. Big moves in Bitcoin. Big 2-day move. We'll see if they can make it 3 tomorrow. But obviously a lot of tailwinds currently. And you know what? It's been really quiet. It almost seemed like it was a matter of time before it had some catalyst to make it move. So Bitcoin making big moves, all the things that are associated with Bitcoin making big moves to the upside. Coinbase, as Mike just mentioned, MicroStrategies, ETH, IBIT, all those type of things moving to the upside today. So that's a strong move. Yields are up again. Nobody seems to believe in what was said from the Treasury Secretary and Besant yesterday. And so bonds are reversing lower. Yields are back up. We're getting a little bit of volatility with perking up here. The September contract is a little under $2 difference between September and October. But nevertheless, you're seeing positive in the VIX futures here.
Yeah. And big move in John Deere intraday. This thing opened at 590, kind of a flat open. A little bit up from the previous close after earnings, but massive intraday rally here from 590 up to 625. I can't remember if Chris was bullish on this or not, or if he was bearish, but I think he said he was exiting either way. But yeah, big move there. Huge move relative to implied. $43 now, and there's only a 13-point implied move for the rest of the week. So we have blown through the implied move here on these options. Even after the big vol crush, but craziness.
Those options are pretty darn wide.
Yeah.
Drive a truck through those spreads.
You could drive a tractor through those spreads.
Tractor.
A John Deere.
A tractor there through those spreads.
A tractor
through those there spreads there.
Yeah.
It's amazing. Gosh darn.
Ain't it true? But we are about 30 seconds away from passing this over to Chris and TP. Jermal, it's been a fun morning.
Yep.
As always. And the market is giving us something to talk about. And I didn't think that was going to be the case, especially when we opened on Monday. We were talking about lean hogs and how that was the big mover of the day. But everything has changed. The landscape has changed. So love to see it. But if you want to reach out to us on Twitter, you can certainly do that. I'm at Trader Mikey B. Jermal is at Jermal Chandler. We're going to take a quick break, though. We're going to pass it to Chris and TP on the other side of it. You're watching Tasty Live.
Let's party all night. We gonna build it up and then we tear it down. They gonna know our name all over this town. We gonna stir it up and do things our way. So if you wanna move, get out of our way.
We're back. You're watching Tasty Live. This is Confirm and Send. You send in your questions. We confirm that we know how to answer them. He's Tom Preston, TP. I'm Chris Vecchio. Tom, how are you today?
I'm doing well, Chris. Thanks for asking. And we're getting a little sell-off on our bond positions. So, yeah, looks like the market, said, Besant, whatever. We don't care. They're jacking rates back up, pushing bond prices down. Again, it was just luck for me. But, Chris, I don't know what you attribute the sell-off to.
It's just, what's an additional $2 billion in the grand scheme of things for a debt management liquidity operation? Does that fundamentally change the trajectory of the reasons why yields are going up? No, not at all. It doesn't matter though here today, TP. The market is at a level where it was basically this time 48 hours ago and maybe even 24 hours ago. We are bouncing a little bit here. We touched our 1 month average 76.84 and boing, right off that June high as well. So some stability. Not a great day for stocks, off by 0.2%. The NASDAQ off by 0.3%, but holding up at that 1 month, that 50 days so far. Russell is taking it hardest as we see those rates go up, TP. Notes. There was a point today where they were actually weaker than they were at any point yesterday. Same thing for bonds, not quite all the way there, but that's a decent bounce today, TP. I was feeling much better this morning when this was closer to 109.
Yeah.
And feeling a little more smug about things. Now it feels like a bit of a reality check, but I'm going to hold on tight for now.
Yeah, I mean, I'm not worried about being short this stuff, short deltas right now. Hey, everybody is losing trades. I get it. I hope these aren't losing for us, but you know what? If it happens, it happens. Personally, I'm going to hang on to them. I'm long a put spread in IWM. So that actually, again, one of the reasons I did that, Chris, I put this out in a cherry bomb a couple days ago, is that if interest rates go up, if there's a bias or the expectation of higher rates, that can, at least historically, hurt small caps a little bit more. We hear all the stories about, these trillion-dollar companies borrowing money to build out their AI dreams. Great. Yeah, they're doing it. But they have some cash to spare generally. Smaller cap stocks, not so much. They actually need that cash just to build out whatever the next product is, to support their sales efforts, whatever, right? So higher interest rates can lean on the small caps a little bit more. That's why I was bearish on IWM, where I wasn't necessarily bearish on the S&Ps. But that's just my excuse for getting short deltas in IWM.
With that stock divergence today, TP, I can't help but notice what's going on in the world of crypto. Here's a fun stat for everyone. Yesterday, with the move that we saw yesterday and what we've seen thus far today, data from CoinGlass shows that the ongoing crypto short liquidations right now are at a rolling 2-day run rate, August 19th, 20th, of $3.1 billion. This is the largest single day wipeout for shorts in crypto ever right now. Okay. Bitcoin, according to CoinGlass, and this is per a report in the Cointelegraph, all of this has been summarized here by Zero Hedge, so credit goes to them. CoinGlass shows Bitcoin accounting for just over half of the total short liquidations at 1.65 billion. It is worth noting this is not the largest crypto liquidation event ever, because that was a long liquidation cascading event, a $20 billion long liquidation cascade in October 2025. But this is the largest short covering move that we've seen in crypto so far, TP. Has the game changed here?
Who knows, Chris? And yeah, if you look at IBIT, because I don't think you can see volume on Bitcoin itself, but IBIT, the ETF that tracks it, saw a huge spike in volume yesterday, and that fits exactly what you're talking about, Chris. This is not always the case, but I think this is the case right now, where you see a spike in volatility on a big move up. It's people panicking. It's traders who are short deltas in Bitcoin, IBIT, who are panicking and need to buy. Stock ticks up a little bit more. Oh no, we got to buy a little bit more. Starts ticking up again. I got to buy some more. And before you know it, Bitcoin is up, or IBIT is up 10% in one day, right? And it gapped up today. And you're seeing fairly strong volume again for 10 o'clock in the morning in IBIT. I'm going to check the skew really quickly. I'm long a call spread in IBIT, but 40. Let's see.
This call skew. I'm at 29 days. The 46 down to 36 because we're trading at 41. We'll call it, so $5.
Yeah, absolutely.
48 on the ask versus 34 on the ask call versus put.
Yeah, I'm long, and I have to deal with this at some point. Let me check my P&L on it. Yeah, all right. So I'm right now, in those 29-day options, I'm long the 35-37 call spread right now at whatever its price is, $1.90 or so. I'm at 66% of my max potential profit. I'm going to take that. And if I want to reestablish another bullish trade, I'll close this and do another one. But I'm going to sell this at $1. I'm going to try for $1.90 on this and see if somebody gives it to me. I doubt they will, but let's just try it. Let's just try. I'm offering it $1.90. It may have to go down to $1.85 to see if I'm going to get filled on that. But yeah, has the regime changed? I have no idea, Chris. I really don't. I'll leave that up to you. You're much more in tune to what the big pictures are saying. For me, though,
Looks
Chris,
like it to me.
The skew is telling me everything I need to know.
That skew is not here in IBIT for long portions of its decline, TP.
Yeah, right.
Right. Here's the chart. It's a downtrend from the high in October. Bumps into it in May. We're now breaking out of it. Is this a bullish falling wedge? Looks like it on my eye. What's a big swing level? In IBIT, it's up near 46.5, the lows that you had last November going into December, and then the swing high that you had here in May. What does 46 look like? Because it's only a 29 IVR, and you look at the raw volatility. These are raw volatilities in the 40s still. That is pretty low for Bitcoin in the grand scheme of things. I'm looking at 29 days TP. You're telling me that those $45 calls right now sit on the outside of the expected move and only cost 62 cents?
So I'm also telling you, Chris, that there's a 40% probability that IBIT will touch 45 between now and 29 days.
Yeah.
So it's going to get up there. So, and this is the way I analyze that trade. And again, Chris, I don't love buying out of the money calls, but let's just do this exercise so people can see how we look at this stuff. Chris is saying that option is worth about 60, let's round the number. Let's say 60 cents, the 45 calls. If IBIT rallies up to 45 kind of soon, okay, the 45 calls are going to look an awful lot like the 41 calls do right now. Okay. So those are trading it at about $1, $1.83, $1.84. About three times what you could buy the 45s for now. So, and then if you do this, and I don't want to go too deep in the weeds. Yeah, you can go through the other expirations and look at the 41 calls in the other expirations to see how much, if it happens in a week, 2 weeks, that sort of thing. But yeah, you've got a 41% probability that it's going to touch 45 between now and 29 days. If it does, you have a decent chance of making some money on that trade. Again, sooner it happens, the better.
TP, I wanted to start here with Bitcoin because we do have these questions that came in from Confirm and Send for today, which you can always get in touch with us. Research at tastylive.com. You send those questions to us. We put them here up on the screen. Let's just go to that first question now for this Thursday, August 20th. The dollar hit a 3-month low while gold, Bitcoin, and oil all rallied at the same Treasury headline. that looks like a debasement trade, not risk on. Is that distinction real? And what does it change, or does it change what you'd want to own? TP, I want to take this here. Yes.
Please do.
The distinction is exceptionally real, right? Risk on is when investors are looking to own things like growth, credit, equities, high beta stocks right now because the economy is looking better. There's more stimulus coming into the market. The Fed's easing for the right reasons, so to speak. Debasement is entirely different. It's investors are looking to own things that are scarce, like real assets, because the confidence in the currency is waning and the value, how would we watch it? The value of paper claims is deteriorating. And so when I look at what happened yesterday with gold up, Bitcoin up, the dollar getting smacked around, and bonds then turning around and not really holding it today, it tells me that the market is not really seeing this as a risk-on move. This is more of like a debasement. If we're going to do binary, those are the only two outcomes. We're closer to the debasement side of price action than we are to, a risk-on price action. So own things that can't be printed, TP, would be a debasement trade thesis here. Maybe hindsight's 2020, but if you were long gold, oil, and Bitcoin going into yesterday, as I know Ilya was basically doing that, you had a tremendous day, and you're finding more run in that favor today here. So that's part of the reason why I'm short bonds, why I just put on the IBIT trade here on the show, because it's now looking like a great chart. Be ticker agnostic. That's a bullish falling wedge, and we have an intermediate swing level with which we can target. Done. And I actually have a story to tell with it now, thanks to Besson's hijinks on Wednesday.
So those are sort of the big, again, Chris, this is your wheelhouse. So those are sort of the big macro trades. If I were going to trade IBIT, the volatility is pretty high, 43% overall. I'd sell the 29 days. I'd go out and sell like the 36, 38 puts. No, that's awfully cheap. That's too cheap. I'm going to buy another call spread in.
There you go.
I'm going to buy the 39.41 for $1.17. And you get positive theta. So that's the way I would, and I'm not out of my 35, 37 yet, but the point is, I don't buy out of the money calls. Just sort of, it's a little like, oil and water for me. I just can't do it. I just can't mix that in my portfolio. Yes, there are long calls in my portfolio because they're part of another strategy. But yeah, you can buy those 45 calls if that's how you want to do it. You see how I look at them. Those are the metrics that I look at, and I quantify every decision. Yes, I can agree or disagree with Chris's analysis. A reasonable person can come on and say, no, Chris, you're wrong. Okay, whatever. Fine, put on a bullish trade and IBIT. But quantify why you're doing that trade purely from a trading perspective. That's all I ask. All right, let's not spend too much time on this because you and I go off the rails, Chris.
We do. So let's get this trade back on track. Alibaba dropped on a 75% profit decline caused by AI spending. Google, Meta, now Alibaba have all been punished for the same thing. Is that consistent enough to position around, or does the market change its mind on CapEx every quarter?
I don't know. I mean, CapEx is what's the word? It's the number du jour. Okay. Back when I was trading bottom of the floor, it was the unemployment number. And it still kind of is unemployment, but that was the big, no, unemployment, blah, 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 or jobless claims. So it's right now in the summer of 2026, it's CapEx. Oh my gosh, what are you doing on CapEx? Is this, and I was just arguing with my wife about this, about data centers, and it's not really arguing, it's whatever. We're married for 25 years. We have different opinions on things. But my point is, this is building out stuff that's kind of important. I use Claude every single day, and I've been running into, hey, we're overwhelmed on our servers a little. I get those requests. I have the pro version, all that stuff. It gets slow. It reminds me of AOL back in like 1995. Okay, will the investments today solve that? 1, 2, 3, 5, 10 years from now? If so, yes. So just like I have, just a kind of a consistent bullish trade in the VIX right now, yes, putting in consistent bullish trades on these stocks beaten down by their capex spending, yeah, I would do that. That capex is an investment. The market doesn't like it because they think, oh my gosh, they're paying too much in interest and all this stuff. Personally, I don't care. That if it's going to, they're smart people at these companies, and they're going to build some cool stuff. I have no doubt about that. And if this is the entry fee to do that, so be it. And I think the stocks are going to rally long term.
Yeah, TP. I mean, look, this is a timing question here. It has been consistent for the past 2 earnings cycles, where if you've been spending a lot of money, it's not just assume that it's automatic value creation, which in 2024 and 2025, when companies said, oh yeah, we have AI this, AI that, the stocks went to the moon. There are still winners in the space with all this hyperscaler spending, but it's more like the memory cooling power side, not necessarily the platforms themselves. So Microsoft is a great example versus the rest of these. They demonstrated to the market that they're able to monetize the money that they're putting into it. So not all AI capex is bad or created equal. It's just if you're throwing money into something and you have yet to turn $1 into it, think of it like standing in a line. Every additional dollar that is spent goes to the back of the line that now needs to be repaid back to investors. Mm-hmm. And so the amount of time it's going to take for these investors to realize a profit because of, the current run rates, it's now not 3 years or 4 years, maybe 5 years, right? And so do you want to hold a company where like every dollar you give them, it's going out the door and they're bleeding free cash flow? Probably not. It makes their equity seem a little less appealing. So the demonstration is on an idiosyncratic individual basis. Some companies are doing it better than others.
But right now, if you're looking at a stock like Google, $339, it's not at its lows, kind of in the middle of the range it's been in for the past 4 or 5 months. But looking at these options, and I'm already long a call spread in there. It's out of the money, so I need a rally. But if I were going to go in and look at go to 29 days, that's even 43 days. Yeah, I could look at the open interest. Looking for liquidity here, Chris. Yeah, there's a lot of liquidity in pretty tight markets in the 29-day options. If I go out to the expected move for that, again, that's just a benchmark. I might actually. I'm going to say, what do I get for selling the 325 puts and buying the 320s? $1.20, not quite enough. If I go up to the 330, so buy the 325, sell the 330s, $1.57. That's a little bit closer. I want to collect about. I don't know. Well, yeah. I mean, I want to collect about $1.60 for that spread, and that's fairly close. If we get a little bit more of a sell-off, I'd get $1.60 for that spread, and I would maybe wait a little bit. But yeah, that's how I would trade Google long term. Same thing. If you want to do Microsoft, you like Microsoft? Microsoft's only down $3. Do the same exercise. Volatility is a little bit higher than that. I'm going to go to the 465 puts and buy the 460s. $1.38, not quite. I'm going to drag it to a higher strike to this 465, 470. $1.58 credit, very similar to what I just saw on Google. That's how I would trade this stuff. Sell put spreads, defined risk trades. First of all, selling naked puts in these stocks, they're too expensive. I don't care how big your account is, they're too expensive. You don't get a good return on capital when you're putting up that much money to sell a put. Sell a put spread instead, and you're collecting a relatively high amount of theta versus the buying power you're putting up. That's why I like put spreads in these stocks.
DP, I'm with you. Microsoft's an interesting chart. Broke out, settling up here. It's not really giving up its gains, consolidating, holding above major big levels. I kind of like it. You got me thinking here. But yeah, no, listen, there's the pattern that you're pointing out here in this question is very real, right? There's definitely a pattern to this over the course of the past 2 earnings seasons. Will it hold forever? No. people's motivations and the object of their fascination changes from time to time. So it may be in a quarter, maybe 2 quarters from now, where all of a sudden a bunch of these companies figure out how to actually get money out of their investments. And then this is no longer a catalyst for us. And so you can't base trades around this idea anymore. So just, regimes change all the time. Maybe debt actually going forward immediately. Who knows?
Well, and yeah, just to put to wrap it up, I don't think the world quite knows how to monetize AI yet. Some people are doing it in small, sort of medium ways, and there's a lot of pushback to AI. There's a lot of resistance to it in the culture, and I understand that too. But eventually, they will figure out how to monetize it, just like they didn't know how to monetize the internet 40 years ago.
Can I make a point
or
to that?
25 years ago, and they figured it out.
I saw a survey yesterday on data centers, and people weren't just polled on data centers. And I probably should, producers, maybe you can bring this up. Go find it, which is a fun little search. But the poll was like, how do you feel about data centers? One of the other things they polled about were Amazon warehouses.
Mm-hmm.
Would you want an Amazon warehouse in your town? I remember that being a really thorny issue a few years ago. Amazon tried opening up that warehouse in Long Island City, and you had AOC and a bunch of other people come in and say, no, no, no. And so AOC did not open up that. Amazon did not open up that distribution center.
Yeah.
So it was deeply unpopular. But you go back and look at the polls around that time in the mid 2010s, it took 2018, 2019 I think this is occurring now, TP. And what goes on? Warehouses, Amazon warehouses in the community are like 30, 40, 50 points underwater. Now they're like plus 30, plus 40, right?
And I understand that. Do I want an Amazon? And Chris, I don't know how many acres those things take up. Do I want one across the street from me? No, I don't. Okay, fine. I'm a very typical NIMBY kind of guy. Okay, but I do understand it's not just the jobs that Amazon provides. Yeah, and maybe they're not the best jobs, and maybe they suck. And okay, fine, but they're jobs, and it supports all these auxiliary businesses surrounding it. Lunch places, coffee shops, tire rotation, tire places, oil change places, et cetera, et cetera, et cetera. And that's growth, that's development. It's hard, but hopefully it helps more people than it hurts. Same thing with data centers.
We have the next question here. I close winners at 50%, but I have no rule for losers. Everyone talks about managing profits, and nobody defines the other side. What actually decides when a losing trade is done? TP, I mean, I think simple. When the original reason for why you put on the trade is destroyed, it's eliminated, you can't do it. You always say this, and we say this when we're taking off positions, and maybe even it's with winners. Like, TP, would I put this short put spread on trading at 5 cents on a $5 wide strike? No. So why am I still holding it? Mm-hmm. Ask yourself that same question. At the current levels in this market, would you put this trade on again for the same reason, given your current IV, the current deltas, the current days to expiration? And if the answer is no, then take it off, right? That's all there is to it. I don't set a specific percentage to these losers because I understand that some things take a little time to work out. There could be an issue of the day, a tweet, something that derails the idea temporarily. But as long as the rationale remains in place, the market's breaking out, momentum's there, the options pricing is still decent. Mm-hmm. I can ride it out. But other times, I'm going to go to oil here as a very specific example to this. Mm-hmm. I have a line in the sand on my short call spread, or short iron condor here at 28 days expiration, not at my short strike at 92. It's if oil gives us a move through the July 23rd high, because then this looks like an inverse head and shoulders pattern to me. I don't want to be holding something that's directionally neutral when a market looks like it's getting ready to break out. Mm-hmm. So there's going to be 28 days left. I was planning on writing this down to about 13 or 14. I'm just going to get rid of it if the chart changes, because this is not a trade that I would have put on given those circumstances again. And so I don't need to wait to expiration. I don't need it to get to any sort of a percentage loss. The chart's changed. I don't want to do it again. I wouldn't do it at these levels, so I'm out.
So Chris and I are traders, and we've been trading for a while, and we don't just talk about this stuff, we live this stuff, and I have losers every single day. I have to make these decisions all the time. Generally speaking, and this is the whole argument for how we do this at Tasty, Wall Street has been telling you the wrong stuff for the past 100 years. The standard mantra is cut your losers short and let your winners run. None of our statistics show that works. That benefits Wall Street banks. Okay, they're selling their own. They're selling their own trade. All right. What I like to do is take winners, capture winners, and then worry a little bit more about how I manage my losers. If I have an iron condor on, if you're talking about, selling an iron condor and you have a losing iron condor, almost always let the defined risk nature of the thing stop me out. Okay. In other words, the loss isn't going to keep growing and growing and growing because it's a defined risk trade. If I'm short a strangle, I might, or if you want to quantify it, something like when the loss becomes 2 times what your credit was, that's something to consider. So if I sell a strangle for $10 and now it's trading for 20, maybe I cover it. Maybe I say I don't want this trade anymore. The loss is going to get too big. I'm not comfortable taking any bigger loss. I want out. Okay, fine. That's and I don't mean to be, this is not an insult. That's an emotional approach, and that's okay. Get out of the trade you don't like. But yeah, the miserable trade right now is love. I'm short the 45 puts with 8 days to go in Southwest Airlines. That's killing me. It's a bad trade. So like I said, guys, I have losing trades all the time. Okay. So how am I going to deal with that? Well, I'm going to roll it out. How do I think about that trade? Those 45 puts, in 8 days, they have almost zero extrinsic. I'm not collecting any theta from those things anymore. They're all intrinsic. I'll roll those out to a further expiration to capture some more theta. That's how I think about that trade. Maybe it makes money long term. Maybe I can scratch it. I don't know. But at least I'm going to collect some theta. So we all have losing trades. How we manage them depends on outlook, overall risk, and opportunity.
TP, open interest clusters at round strikes, and people say that creates a magnet. If that were reliably true, someone would have arbitraged it away. So what's actually happening here? TP, I'm going to take this quickly because we're at the end. Round strikes attract open interest because traders naturally cluster there. People like to do this. It's just what us human beings do. We like things that are easy to understand and divide by 5 or 10. I mean, I'm not going to go further. There's a lot of research to show that. So institutions use them. Retail traders are using them. Everyone and their mother uses the round numbers. But I think when you talk about price being drawn towards a particular strike, it's usually because of dealer hedging. If dealers are short options near, a high open interest strike, they may have to buy weakness and sell strength to kind of operate around it, which can dampen movement and create some of that pinning that we often see. But it can't be arbitraged away, right? You really don't know much more. Open interest tells you where the positions are. It doesn't tell you who's holding them or for what reasons or for how long they've been in that position, right? What their overall portfolio structure and capital financing needs are. So you can trade towards them. And often you talk about those call or put butterflies. We tend to do that. Show me something at the expected move with a big round number. Maybe the market gets pinned there, right? Yeah. We can talk about that, but beyond that, it can't really be arbed away. TP, you have 15 seconds before Ben gets in there and kicks us off.
So ARB has, all right, strictly speaking, ARB has nothing to do with open interest. It's all price-based. So, but I understand what the question is about. Wouldn't trading activity drive those prices to an unattractive price? Possibly, but it's not a reliable thing. A reliable trading indicator. So people are going to disagree about what's going to happen, and the price is what it is.
TP, we are done here and confirm and send research at tastylive.com, research at tastylive.com. You send them in, we answer them. We're going to take a brief break here on the network. We're going to be back in about 30 seconds, maybe 60. You'll have Errol Coleman here. Ben, is Gus here too? Is that the word on the street? Gus is back?
Nice.
Oh, Errol and Gus up next here. More live trading ahead.
Nice.
Love me, yeah.
was holding down the fort the whole time.
Yes, sir.
Errol, how we feeling? What's going on?
We kept it down. We tried to keep crypto down, but crypto's popping a little bit over the last.
Crypto too strong.
Too strong. No, I mean,
tried to hold it down, but the Trump admin is too strong.
Way too strong. No, I mean, I'm doing pretty well, bro. It's good to have you back, first of all. I was just telling Gus here, I was like, you know what, it did feel a little bit lonely out here. So it's really nice to be able to chop it up with these markets. But I hope everybody else is doing well. Let us know what you're looking at. Let us know what you're trading. We're going to discuss a little bit about this Alaskan cruise trip here in a little bit. Then we're going to get into the market, do a tour of the market, see what volatility's been up to, see what Bitcoin has been up to. The oil market has been popping to the upside. We briefly had touched 86 at one point. So as we get into everything for the day, again in chat, let's give Gus a warm welcome back, and also let us know what you're looking at.
Thank you. Yeah, happy to be back. Sorry about my unprofessionalism here. I'm trying to actively get some pictures to our wonderful production team so that we can get them up here. Ben, I am texting these to you. I don't know why I can't get them to send through.
No
Teams,
texting in class.
There you go. Godspeed. they'll figure it out, I'm sure. He says, bet in my ear. So yeah, we're looking good there. But yeah, I was pretty unplugged from the markets for this whole time. Just occasional checks on my positions to make sure that everything was still in order. Moderna cured cancer yesterday, apparently.
Isn't that a crazy headline?
I'm seeing. I know. And I'll tell you what, that headline really frustrated. Maybe we can jump on the platform and look at some charts here. That headline really frustrated me when I saw it come up. Because, as some of you may know, I have been deeply long Novo Nordisk for a little while now, basically just on the logic that these weight loss drugs are really catching on, and Novo is so beaten down off the highs. If we zoom out here and look at a bigger picture, we've seen 150 out of Novo Nordisk before, and we've been hanging below $50 for months and months now. So I've been long Novo Nordisk for a long time. This position is so dead. Where is it here? Right here. I have two naked calls for January 15th of next year at the 105 strike. This was pretty much a pure gamma play at the time that I put it on. I was seeing the gamma, and I was seeing that if Novo could have any positive headline break over the course of the next year and a half, at the time that I put this on, just about half a year now, that we would be in a great spot. Novo would take this big, jump up, and gamma would cause these premiums to go through the roof. That's why I chose to buy the calls. And then, I've actually been joking the past few months since these have been completely dead in the water, and I'm not even exiting them at this point because I might as well just hold on and see if they cure cancer too. But I've been joking for the past couple months that, oh man, Novo Nordisk would have to cure cancer at this point for me to actually make something happen. And then of course Moderna comes out with the headline instead of Novo Nordisk. And obviously I'm being parabolic here. I believe that it's melanoma, and I believe it slows growth in phase 3 of melanoma or something like that is the deal, or it's a vaccine against melanoma or recurring melanoma. Somebody can tell me in chat that knows.
I need to recheck the details.
Better. Like I said, I've been unplugged. But it's not a full cure. I believe it's more preventative. But we saw 177% jump in Moderna share price as a result of that. And I just wish that it was Novo Nordisk instead.
Yeah, no, I mean, I need to check through the details on what exactly it was. But I mean, that's exactly what the market heard. Cancer cured. And I think it's reflecting in the stock price right now. We're getting a little bit of a pullback, which I was actually a little surprised about, because I can imagine a lot of shorts were trying to hop on top of this move with how extended it was. It had ramped up so much to the highs to where we were running out of option strikes at the highs. And that's definitely how we got a bit of a surprise in the market.
Yeah. I would have, this actually would have been one of those shorts, happy to step in front of this move. I mean, the logic that I would have employed was, this is a giant landmark thing, but it's just recurring melanoma. It's just in one phase. And even if they cured melanoma, is that prevalent enough to justify a 3x in the share price, which is basically what we were talking about at the top? I don't know that it is. And the market clearly responding that they don't know if it is either. Shares currently trading down around 140. Down around 140. It was a $60 stock at the beginning of the week. So, you got to take the wins where they come. But yeah, remarkable run out of Moderna. Only trade I've made so far today is in Walmart. I got long some Walmart, which has been working against me to this point. I got long at about a 105 spot, 105.22, I believe. Oh, look at that. Got a nice line on the account, 105.88 to be more specific. Trading down at 103 now. 103 now. This is another one where, like I have a lot of times over the past month or two, I'm content to not be perfect with my entry here. I just think Walmart will fill this gap sometimes in the next 90 days is basically the sentiment that I'm expressing. And I don't even need them to fill the gap. I actually did something a little bit reckless here, a little bit more reckless than I would usually do. I am undefined risk, way down here at the bottom of the portfolio. I am undefined risk, just short a put. I sold a put. The 105 strike for November 20th expiration. So I don't even need the gap fill. I just need us to stay above the level where they opened today, more or less. Decided to fire on the short put. I was going to do a put ratio here, centered around the 105 strike, but the put ratio was something like 240 of credit, 240 max profit for $2,400 of buying power. And I was able to just sell this put straight up for $493 max profit at $2,000 of buying power. So I figured, why not just, go all in on just the short side of this. Obviously, the risk is undefined. You're paying a little more buying power to define your risk when you do the put ratio. So putting a pretty hard stop loss in this one at the 100 level. I think that psychological support should be enough to keep us elevated, if nothing else. But Walmart, this was a great earnings call by my interpretation. Comparable sales was the only miss that they had. They beat revenue. They raised guidance for EPS. They raised guidance for revenue. They raised guidance for same store sales. They said that they're going to get $2.9 billion in tariff refunds, and they've only gotten $100 million of those right now. So they're about to have a bunch more cash on hand. Seems like a bullish setup into the rest of the year for Walmart. Market disagrees, and it continues to slide today, currently down about 10% from yesterday's close. And I don't care. I'm happy to step in front of this one. And it's basically a binary thing that I've done here with this short put at 105. I am just saying Moderna above 105. Let me close this Novo position because it's also a 105 strike to not confuse anybody. I'm essentially just saying Walmart above 105 90 days from now. Walmart better than it is right now in 90 days. And I think that that's a pretty attractive position against the lows of the year, is what we're talking about right here. 2026 lows. Walmart is putting in.
Pretty big move in Walmart. Walmart's one of those stocks where you don't mind owning it if you were to be assigned into something like this, right? I think Walmart's too big to fail at this point.
For sure.
And now that speaking of Walmart, I don't think we've seen a Walmart in Chicago. The city of Chicago doesn't have a Walmart.
They took all the Walmarts out, I think.
Oh, is that the case?
I think that was a whole thing. Somebody can correct me if I'm wrong, but yeah, I'm pretty sure that was a whole international incident.
I need to do my history.
Within the last decade, they took all the Walmarts out because of severely unprofitable,
really,
due to theft was like one of the main reasons. A lot of slippage happening there. So but there is one. There's one in Cicero that I've been to. There's a few around close in the burbs, within 7 miles of us right now.
Yeah,
but there's just
what's the difference between Walmart? What's the difference between Walmart and the theft at a Walmart rather than a Mariano's or a Target? What's the difference in terms of security?
That's a good question. I don't know if it's a difference in security. I think it's probably a difference in goods to an extent. I don't know. I mean, Target, I guess that's a good point. There definitely are some Targets, but I don't know. Walmart's got
interesting
TVs and a lot of electronics.
Yeah. I just had noticed. I was like, you know what? I actually haven't really seen a Walmart in the vicinity. It's kind of nice to walk into a Walmart sometimes, and I've been in one in a while. So
it is.
Anyways.
There you go. Target has more locked glass cases. We're being told, which is
Errol
certainly
proof.
True. Those, no, those Targets in the city though, it's crazy. I got to go ask somebody to unlock the deodorant. I'll just stink, man. It's,
I don't need a shave.
I'll give Jeff Bezos my money instead, man. I'm sorry. I'm not asking for a key to get some deodorant.
That's real.
But anyway, so happy to get long some Walmart there. You mentioned assignment. You want to talk about assignment? You want to talk about not properly managing your portfolio while you're on the road? I got assigned on some TLT. Big time.
I don't hate that though.
I got assigned 600 shares.
Oh, that's a lot. TLT's been booming though lately.
Yes.
At least over the last 24 hours.
Some bad bond news yesterday and caught a down move into today. Actually, a pretty considerable down move for what we usually talk about with TLT. 85 cents or 1%, which intraday for TLT is quite something. Here's a look at it on the charts here. You see the drawdown today after the big up move that we got the previous day. But yeah, I'm assigned 600 at 84.33 is my spot here. So currently down pretty much exactly $2 per share. And like you just said, I don't care. I'm actually just content holding these. And I should be more specific. I was already assigned 200 shares of TLT, at which point I decided to go ahead and get long again. And I've now gotten assigned 400 more shares. So this is actually just 3xing the size of my existing TLT assigned position. I can't win with the bonds right now. But obviously, bonds, very cyclical vehicle. My logic for getting long in the first place continues to stand. We're talking multi-year lows on bonds right now. And obviously, they could continue to move down. The economic environment is a fickle one. But if I'm ever going to get long, if I'm going to get assigned 600 shares, I would greatly prefer it to happen at 5-year lows rather than somewhere in the middle of this range. So just gonna wait. And it's just the shares especially. I'll just liquidate these at break even. I mean, maybe I'd like to see them slightly green, but I'm not going to sit here and wait for this to turn into a giant profit. However, I am very confident that I will be dealing with a smaller loss than what I'm looking at right now
Yeah.
here pretty soon. So
I'm curious to see what some of those calls are going for. 600 is a handful, but when I think about 600, I'm like, well,
if
you can sell 6 calls against it.
if this was just about any other product in the market, I would be racing to cover these.
Yeah.
In some way.
100%.
Or find some downside protection. But with something as cyclical as bonds, especially off these lows, I'm content to just keep holding it. It is an immense capital requirement I have
US
right
debt
now.
ain't going nowhere.
It's a lot of buying power, but yeah, I think that's well put. The U.S. is certainly going to continue to need to raise money. And yeah, I just, it's a cyclical vehicle. I'm not looking for 90. I'm looking for 85 and we'll dip.
No, I feel you on the bonds. And mine was coming really close down to the wire. I had a zebra on, and it's not a stock position. So it has expiration date, and it was going to expire within 2 days. So I was going to take a pretty big max loser on it. And then we got that pop out of nowhere. So I was able to at least close it for break even. But I was just about to capitulate on it because, the volatility in there, gold to the upside is not helping the bonds performance for sure, but gold just has seen some pretty good days.
Yeah, and you make a good point. I got to think about my framing here because it's not. I got 600 shares. Really, it's just 6 synthetic zebras.
Exactly.
When you think,
and honestly, since it's 600
no
shares,
time horizon.
Yeah. I mean, since you have 600 shares, you could sell 6 calls against it. Since one call for every 100 shares. It's a bonds.
Yeah,
bonds.
Yeah, but it's bonds. I'm not super concerned. I don't know. Maybe it's over for bonds and I wind up holding this bag all the way to the ground. We'll see. Should we get something, I don't know, something particularly crazy like below 80 or something, I might look to cover or just take that on the chin and keep it moving. But at this time, I'm not super concerned about this position. If there was anything to get assigned on it, I'm content being assigned on bonds.
I got you. Big Deal says what's up. Sergio said what's up, Gus.
What's going on?
Rand said what's up. Welcome back. It's good to have you back, brother.
Thank you. Yeah, happy to hear from all of you guys. I missed you dearly while I was on the boat.
Whenever somebody goes missing for 2 days, everybody's like,
sure.
I seen a comment that said, "Is Beth still with us?" I'm like, "Did something happen to Beth? Like, why are we wording it that way?"
Beth is still good. I just spoke to Beth this morning. She's all good.
Yeah.
But yeah, so that's pretty much the rundown for me. Otherwise, just holding. I do still have these VIX longs in my back pocket that I didn't necessarily intend to hold for this long. We have gotten a little bit of movement in VIX that would have presented a favorable exit for me over the course of this position. Kind of forgot about them, but as I always say with these VIX longs, it always serves as a good hedge against the broader long bias that I have going on. Should we get some tail risk event to the downside, VIX will explode. And I got long calls hanging out in my back pocket or a long call at 20.
I am glad you're back because volatility has been absolutely dead since you've been gone. But with that being said, I'm curious to see some of the scenery that you had seen whenever you were out there on the water, Gus.
Yeah. We got photos ready. Here we go. Okay. So first
That's
day,
fire.
Juno day, did some dog sledding. Here's me playing with the wonderful dogs. This is Loki licking my face. He was my favorite. 11 dog team. 3 of them are former Iditarod dogs. The rest of them are just regular sled dogs. I guess not professional sled dogs. They're in training. These dogs range widely in age from 1 until they want to stop running. They're very good to the dogs.
Until they want to stop.
Yeah, whenever they stop being into it, they have some that are as old as 12 or 13 on the teams. Sometimes they get to 4 or 5 years old and decide that they're done and they won't force them. Very interesting economy with these dogs as well. Something that I didn't know existed.
How so?
These dogs, they lease these dogs from all over the country. They said Montana, Wyoming, and Minnesota are the 3 heaviest states where they lease these dogs from. But the dog owners send their dogs up to Alaska so they can be comfortable during the winter and they can run and stay or during the summer rather. They can stay comfortable. They can run, be in good shape. And then in the fall, they ship all the dogs back to their owners and then they continue to do their work in their respective home states through the winter. But yeah, so it's like pretty much a scratch. They said that they'll do like $75 or $100 per dog for the whole summer. But the trade-off is that the owners don't have any liability. They don't have to cover any vet bills or provide any food or anything like that for the dogs throughout the summer. They said the average savings for the owners is like $10,000 to $12,000 because these are all super high performance dogs.
Yeah,
I
can imagine the dogs are like when fall's rolling around, they're like banging their fists on the table, like no, vacation's over.
Yeah, the dogs are amped. These dogs love to run. They could not wait to get in the harnesses and take off. And then we showed them some love after. It was a very, very warm day. I was actually too hot.
I was just about to ask because it looks like the sun's shining pretty bright in your face there. I was going to ask how was the actual weather?
This picture is Yeah, I did get sunburned. This picture is very misleading in terms of the weather that we had. It was 10 feet of snow on top of 1,000 feet of ice. This is all glacial. You're on top of the glacier here. But
10 feet of snow?
Yeah, it's 10 feet of snow and then 1,000 feet of permanent ice. In the glacier underneath. But it was like 60 degrees. We were
You're chilling.
Yeah, I was too warm. Actually,
Literally.
wore long underwear in preparation because we didn't know exactly how cold it was going to be up on the mountain. But yeah, we were plenty warm. So that was excellent. Next picture we were going to show there is I went on the White Pass Railway in Skagway, Alaska. This takes you way up. Old mining route up way into the mountains. Some great views from there. I didn't get a great picture of the train itself to show off, but just some views from the train that we had happening. And then went on a nice hike with my dad around Dewey Lake, just outside Skagway as well. Very pretty. Yeah, better picture. You can kind of see the shadows of the train happening in the bottom left of this one. But it was just gorgeous the whole time. And much to our pleasure, they actually turn the train around at the top, like you hit a loop and it turns around. So both sides of the train get to see everything, one on the way up and one on the way down. But really cool historic railroad, some very sketchy bridges on this thing.
Sceneries are nice. So was there like a trail, or was the railroad kind of the trail that you were following when you were out there?
Oh yeah, railroad the whole way. You never get off the train at all. You're just you ride up and ride back down. There are routes where you can get off the train. It's actually interesting that you're cutting between Alaska and Canada the whole time. So if you're ever going to get off the train, you have to bring a passport with you. But on our tour, we were staying on the train the whole time. You don't need a passport, even though you do enter in and out of Canada. So
some nature, that's nice. Was it really nice to see some nature? We're kind of in a concrete jungle, not like New York City, but we're still in one.
I love the mountains. Get out to them anytime I can. Alaska's been on the bucket list for a long time, and it was just immaculate weather. I mean, just mid 70s, total sunny. I mean, you can see miles and miles of visibility the whole time. And then the last thing we did was we went and did a Ketchikan at our last stop on the cruise. Did a little bit of salmon fishing. So here are my two prized salmon that I brought in. Huh?
You caught those?
I did. Yeah, one silver, one pink is what I'm holding in the picture here.
Nice.
Took the right one back to the boat with us, and they prepped it for us for dinner, which was awesome. I should have sent a picture of the fish on the plate as well. But yeah, we
before and after.
Yeah, great day of fishing though. I mean, it was hits the whole time. It was me and my dad, and then there was another family of 4 that was on the charter with us. But yeah, just had a blast with this. Got the 2 that we were going to keep, and actually only wound up keeping one of them. The other family that we were with was shipping a bunch of fish home, so we caught our 2, and then we kind of let them take the reins until they bagged out. You can do 6 per person per day. I think they took like 8 total between the 4 of them. They were going to bag up and ship home. So wound up donating one of our fish to that cause as well, because we realized we were only going to need one to feed us for the night, and we weren't shipping any home ourselves. But yeah, excellent trip.
I see some people are familiar with it. Dip Enjoyers says love the white Pass train ride. And then I see we got a couple comments of the fresh salmon going on right there. Nice catch. So Money Wandering shouting you out.
Yeah, shout out to Autumn, our ship captain. She was fantastic. Was very happy to have her. And yeah, great trip overall. Good time in nature. Nice grounding experience. Bring you back, and I'm rejuvenated, hitting the ground running.
I love it. I love it. It is nice to unplug from the markets for a little bit. Again, you really didn't miss too much. I mean, from yesterday, maybe we had a little bit more volatility in mRNA. Bitcoin popped yesterday, but for the most part, really not missing too much.
Yeah, I got out right at the end of earnings season there. So not a whole lot of binary events going on to mess us up too much. But yeah, fantastic trip. Pleased to be back.
Yeah.
I picked up a little bit of a cough on that boat as well. That's you guys might hear me coughing a little bit here. I did forget to bring a cough drop in here with me, but I got some Dayquil going on. I'm feeling pretty good.
New trade segment, catch of the day. Let's run it.
I don't do enough fishing to sustain that for very long. We need to crowdsource a little bit of fishing there. But anyway, that's enough about me. Anything new happening in your portfolio, in the market for you?
No, nothing too crazy. I guess we could jump right back into the Tasty platform, take a look at some of these other underlyings. If we take a quick look at oil right now, I believe those oil contracts are still sitting in backwardation. And I know yesterday, for one of the first times, we're starting to see that curve get a little bit steeper with those front month contracts getting more and more expensive, and those back contracts, or those back month contracts getting a little bit cheaper there. But you can see oil is really rivaling those all-time highs, or those previous swing highs that we had put in. I know last time we had briefly touched just below 90. I can't exactly see where that all-time high is at the very peak right there. What is that?
This mic too close to my mouth, like 91,
about
91.30.
Yeah,
is what we're looking at.
It looks like we could get a potential breakout in oil. I had gotten out of the oil trade just a couple of days ago, given the momentum that we had seen. And it was just one futures contract, so we didn't have too much flexibility on being able to I guess get creative with the management of the trade. It's either take it on or off or add to your position. So with that being said, it seems like this oil and the geopolitical conflict is going to be extended a little bit longer. I know Trump said the other day, Americans are going to have to, get used to the higher gas prices just for a little bit longer. So just trying to read between the lines there. It looks like this isn't going to be ending anytime soon. Maybe we get a breakout. Maybe it'll be a massive fake out. Either way, oil is in play for the day. A lot of volatility in there.
Yeah, we need a term for this. Like, how in during World War I we switched from hamburgers to freedom sandwiches, or what liberty sandwiches, I think is what we went with, to avoid giving the German words any credence. We gotta call this freedom gas or something. Liberty gas.
Yeah.
I don't know. We can
figure it out.
Workshop that. But somebody throw some ideas if you have them. Just difficult environment in oil. I mean, tough to read this entire time. Just totally headline driven market. I don't think I continue to have my USO shorts on here. If I don't, it would be because they've expired. Yeah, I guess I actually do. Just getting hammered on these. What are you supposed to do? But do have a little bit of time horizon left. I don't like the comments from Trump, but I do have one of these dated out to March 19th. So if into the new year we get some turnover here, get a return to normalcy, I might at least be able to recoup one of these two positions.
What do you call cheese that's not yours?
Serious question.
Way too easy, is it? Nah, we got a comment in the chat. Said it's nacho oil.
Yeah,
so that's what we got.
Nacho oil.
Nacho oil.
There we go. I like it. What do you call oil that's not yours? I'm a fan.
No actual chance Hormuz opens. Yeah, no. And I mean, with midterms coming around the corner, coming in the fall season, that's going to be extended as long as possible.
Yeah. And the midterms, it's looking at this time like we're gonna wind up back with a split. We'll have some backwardation happening in the checks and balances of our government, if you will. It's likely. But that's the other thing too, is like it would be a giant slam dunk if he were able to get this resolved before midterms. So that's
100%
something you got to be considering in the back pocket as well. But
he's throwing the ball off the backboard to himself right now. And he's
But at this current time horizon, I don't see that as particularly likely. So we'll see. Not feeling good about my USO shorts, but I'm in too deep at this point. might as well see it through.
Yeah, might as well see it through.
I'm not going to try to get too creative, and both of them were fairly cheap as well.
Yeah.
I see Rivian putting in a little bit of green today. This one I haven't.
The EV space has been pretty quiet.
Itching to talk about Rivian always.
No, Tesla's been quiet. Rivian's been a little quiet. EV for sure.
Yeah, the Rivian channel though continues to play out here mid 14 range. Continues to be strong support, getting a pretty confirmed bounce off that level right now. And I'd bet my bottom dollar we run right back up to 18 or 19, and then start coming back down again. So always one to keep an eye on there. Aside from that, there's not really anything new that I'm itching to open. I've started to have some thoughts about SK Hynix recently. I'll get the ticker first try. I know Errol has some trouble sometimes, but SK Hynix starting to log a little bit of momentum off the bottom here. They did just announce a just under $30 billion share buyback on the South Korean market. So those shares over there were up 12%. Again, and I understand this isn't very professional. I still don't really understand perfectly the relationship between this and the South Korean product. It feels like it should be perfectly correlated, but obviously it can't be, or it'd be way too easy to front run the market just based on what the South Korean shares are doing. I was told at the beginning that we're 1/10 the size of the South Korean shares. Obviously, we're all trading the same company. But if they bought that float back on the South Korean exchange, not on our exchange, then our float didn't change. So it's all very, very tricky stuff with SK Hynix here. But that shows they have some confidence in the company. Obviously, they're also building a new semiconductor manufacturing plant for another $38 billion on top of the share buyback. So SK Hynix throwing around some of that cash they got laying in their coffers.
Yeah. It's nice to see some volatility in SK Hynix. I know we started to see a pop to the upside in SpaceX. I forget if you were here for that, but SpaceX tried to recover a little bit, which was really nice. That was another max loser within 24 to 48 hours of putting it on. And then we had seen that reversal off the lows on SpaceX there. But it's nice to see the volatility start to sustain in a lot of these IPOs so that we can kind of continue that auction process of price discovery and figure out, the ranges that these markets want to trade in right now. But tons of volatility. I don't think I've traded SK Hynix yet myself, but very pleased to be able to get out of SpaceX IPO.
Yeah, I haven't traded it yet myself either. Yeah, SpaceX, obviously, funny that these companies who are nothing in common just kind of wind up tied together. We can't talk about one without the other because they're the two big IPOs of the year. But yeah, SpaceX finally logged a little bit of momentum last week into this week, but sagging again today, down about 5.5% currently. I still am long my SpaceX. This is a much longer dated position, 301 days, June of next year. Looking for the 200 level by then. It could happen. I'm feeling less and less confident as time goes on, but happy to see at least a little bit of momentum coming through. And, being this far from my strikes, only down $153, I really don't think that's that terrible. I'll take it myself.
Yeah, no, 100%. Got some more time on those contracts as well.
Outside of that, IBIT, as you said, we touched on crypto there at the beginning, but to circle back, you can see my irresponsible, insane IBIT position I have going on here. I got January 15th, 105, June 17th, 100, December 17th of 2027, 125s, and then January 21st, 2028, 135s. So I'm always happy anytime Bitcoin takes a move up. I'm just continued basically cost averaging down on this position as things continue to get worse and worse for Bitcoin. But the winter might be over. It might be. It might be crypto springtime.
It could be the spark to something new. I know yesterday after the pop to the upside, I ended up selling a strangle. And then we get another leg to the upside. So I was debating on potentially rolling that untested side up, that put side up a little bit, maybe collect an additional maybe 50, 60 cents of credit. But I'm going to give it a little bit more time, not reduce that range too quickly. And I'm very distracted by that platter of food. I'm hungry too. My stomach legitimately growled while I was... That's the fish you had?
Yeah.
No, that's
that's
one you caught?
Yeah,
right there?
that's the same fish. They spun it up for us on the
It looks
boat.
good. Wow.
Yeah.
Nice catch.
Shout out to our production team getting that turned around so quick. I sent that to
I was literally
90
just
seconds
staring
ago.
at it while I was talking about this. I was like, wow, that fish looks amazing.
But we will we'll leave you guys with that today, with that glorious fish. We did some good damage to it too. I had about, I don't know, maybe 8 ounces of it left when we were done. We ate almost that whole thing. So pretty pleased with me and my dad's performance on that one. That's going to do it for me and Errol today. Thank you so much for taking the time out of your day to watch. We dearly appreciate it and never take it for granted. Do be sure to like the stream, subscribe to the Tasty Live YouTube channel if you haven't already to see the wonderful things we have coming up next. I will be right back here in 15 short minutes for trades from the research team with Kai. Nice close-up of the fish there to close us out. And that's going to be all from us today. Thank you guys so much for watching. See you guys next time.
Yeah.
What's going on, everybody? Thanks for watching Tasty Live. I'm Jermal Chandler here with Marty from the Trade Desk. What's going on, man?
What's going on, brother?
Not a whole lot, bro. Not
Busy.
a whole lot, man.
Busy today.
Yeah,
a little.
Busy times.
Yeah.
Yeah, we've seen this Bitcoin thing really take hold here, take flight in the last two trading sessions here. Bonds been moving around a whole lot. Gold and silver.
I saw Ethereum was up like $600 or something.
Yeah, how about it? Up 10%.
Crazy.
But
I mean, the
something-
SPOOs are kind of, they had that number in the S&P, and I think it was like, I don't know, it was like 77.15. And I think it bounced there like literally yesterday 20 times, and then it kind of went through. And now again, I think that if they're not going to get back, if they don't get back above 77.40, I don't know what's going to happen with it today. But it seems like they make a move, and then they kind of, what was it down when I left, like 30 handles or something?
Yeah.
And it just kind of trades sideways a little bit for like a length of time, like that they were trying to rally it a little bit earlier, and then it just kind of trades. I mean, I guess that's kind of sideways, but looks down anyway. But yeah, it's been busy at the desk, busier than normal. Well, Mondays, obviously, as we've discussed. But yeah, it's an interesting move in that Ethereum. It was interesting today.
Yeah, it really is. I mean, it's on the heels of, I think, this bond news or whatever about them buying 30-year treasuries.
5.2 or something I saw.
Huh?
5.2% yield at the end of it.
Yeah, right.
Do you have crypto? Do you feel like you have to have some in your account? A little? Do you have to be a little bit vested? I get questions about it all the time.
I have so in the show account, the trading account, I have a lot of trades on related to crypto. IBIT, MicroStrategies, Coin. I just felt like
not the actual coins or something.
No, I don't have the actual not in this trading account. I just felt like it was really I like to do mostly options related stuff in here, sometimes futures and futures options. But I just feel like for me, for Bitcoin, it's easier to trade those names than to trade Bitcoin itself.
Trade the actual coin.
So that makes it much easier to do. I do have in another account that I don't trade every day. I have Bitcoin that I bought like some years back. Like I bought the first time I might have been 2021, something like that. And then I think I did it again in like 2023.
Right.
Yeah. So those are the last time I bought it.
I just came, in dealing with clients that have, multiple accounts that might have a SEP account, a retirement account, and their trading account. Find a lot of them that are long-term, even the guys that are kind of more long-term vested here that aren't trading, as aggressively as they would in their regular account, always seem to have like a couple actual Ethereum or Bitcoin in it as an asset base. Mm-hmm. I don't know if you need it in like in a long-term, investment account, but it's an interesting concept.
Why wouldn't you? I mean, you and I have been around long enough where you remember a name that was doing nothing, and then 10 years later, you're like, hold up.
Oh my God.
This was a $5 stock. This trading $100 now? Like, how did that happen?
Yeah.
I know a name like that for me was Exact Sciences, EXAS.
Yeah.
The Cologuard name company. I remember when this stock was, we got to go to custom range here. I guess
you might have to go back.
You're right. We got to go way back for sure. See if
tell anybody about that.
I remember, it was definitely 06. Yeah, I was trading $1 and change. I remember somewhere in 06, 07, I started getting into it. I mean, you can see the highs here was $6, $2, whatever, right? And then I remember I left Peak 6 in 2014. I think the stock was trading in the 30s. I just remember around 2016, 2017, it was like trading $80. Like, when in the hell did that happen?
It was kind of like, if you think about it, back right before COVID and COVID, like Palantir.
Yeah.
Like,
I have learned to at least dabble in some of the things that nobody seems to like at the time being for a long-term play. Let's just see what happens. If I can do it in a risk-defined way, why not?
Right.
Because you just never know what happens. The way sentiment changes.
Yeah.
Changes so fast.
It's interesting because yesterday we had a bunch of Peak kids from the
Notre Dame.
Yeah.
God brought them
Irish, right? And they were, it's interesting.
Shout out to Notre Dame, something I never say. I can't believe it just came out.
We got to do it just to.
I'm a Miami guy.
Upset all the Michigan.
I'm a Miami
all the
guy,
Michigan grads.
I'm a Miami guy, so I don't normally say things like that. And my graduate school alma mater plays them week 1 this coming year. I actually was. I purposely didn't talk to them yesterday because I was going to be like, we got big game coming up. we're gonna kick y'all ass. That's why I was gonna say something like that.
Crazy because I was.
That's why God didn't have him come over to me.
I'm like a huge Notre Dame fan now. You know how the Jews like to follow Notre Dame over there, right? So anyway, I had never been to a game, and I remember taking my son. I remember taking Aiden when he was like 6, right? And I had never been to it, and this is before like they redid. They'll put $600 million into that stadium. They still had like the wood slatted seats, and you're looking down at it, and you're like, "Oh my god!" And then it kind of it works though.
I'm sure it does.
But the way they treated my kids when I was there, it made me a fan for life there.
Yeah.
Talking about hockey games or football games or whatever.
Yeah.
Getting more to the point of they're in economics. They were in an economics graduate program there, I think, in finance.
Yeah.
And they were so interested in what we do here because I think that even at that stage, maybe they get this big macro view of economics, and then you actually see how the minutia of what you guys do on the show and what we actually works and forms that base for how this stuff is done, even on a retail basis, right? So it was really interesting.
And people like them, I mean, it's just, just whatever little bit money you accumulate over time, just put it into a few stocks here and there, a few things, maybe some crypto, because you just never know. They have time on their stuff.
Yeah, I mean,
they really do.
Put your, $400 a month in your retirement account when you wake up in 25 years, with that and your Notre Dame education, you'll probably be okay.
You'll definitely be okay for sure with both of those.
Yeah, what are you trading?
Well, let's take a look at this top 20 list.
Yeah, let's go
I
with
imagine there's some Bitcoin related names in this top 20 list today. Have to be,
Sure.
right?
Yeah, let's go over it. Let's do it. All right, at number 20, we have Marvel at 56, 19 SOXL at a 48, 18 AMD at a 29, 17 Amazon at 17%, 16 Meta 34, TQQQ at 51. Here we go. We have one coming up at 14, Coin at 48. Number 13, SanDisk at 30. 12, GLD at a 36. 11, Intel at a 33. MSTR 10 at a 45. That's a wild ride. That's a PG 13 ride, that one. Number 9, SLV at a 29. All right, now the top 8, mRNA at a 132. That I like. NVIDIA at a 34. Apple at a 44. Micron MU at a 34 at number 5. And now the top one. Oh, here you go. Number 4, iBit at 29%. Tesla at a 14 at number 3. Top 2, Walmart at a 30. And SpaceX, again, at 4%. Because that Moderna move yesterday was impressive.
It was really impressive. So
I literally talked to 2 clients yesterday that had purposely, for whatever reason, into that shorted like stock in it.
Yeah.
Like
I shorted
400 shares.
I only shorted like 100. I shorted 100 yesterday morning.
Brave young man.
Yeah, $20 later I got out. I shorted stock initially at 120. Stock went up, and then I was like, you know what? This thing is going to go higher. I feel like it's going to go. And I was like, let me sell a put. And I sold the front month put. That thing came in so quickly. It was ridiculous. It was like a quick $800. So that offset some.
Well, I mean, as long as you had
bought that back.
Synthetic cover on it.
Rolled that put further out in time to September, actually to October, because I couldn't get a September put. Right. There was really no strikes at the time. But yeah, that's how I ended up playing it out yesterday. So
yeah, I put on a short Walmart put spread. I mean, just because I kind of like to fade those numbers that come out.
Yeah.
So I like it. We'll see what happens with that today.
Yeah. I got long in there today. So that's another one I'm trading, Walmart. Right. Already had a position heading into earnings. Decided to add to it and get a diagonal. So I'm out in December now, actually. Long D's against it.
Well, I like it going out far, too.
I feel like it's just going to be a core position in the book.
I mean, the numbers were not good, but at like $7 doesn't seem like, such a, like they're taking it as seriously as maybe they should or shouldn't. But, I mean, and then plus the fact you're getting news about this $40 trillion deficit and everything. It's just, it's interesting. It's interesting times. And the bond move, as you said, as well.
Yep. $40 trillion deficit. I mean, that's the thing, right? Like that's why yields are so high, because there's just so much government spending. There's all these bond issues from all these big, tech names, right? Like going further out. So you're just adding more debt, and we're in an inflationary environment. You're seeing things move all of a sudden. I mean, let bond move yesterday. Again, bonds don't move like that, right?
Not like that.
It's a huge move.
All right.
Gold and silver are back at it again.
Right.
It looks like they're making waves. So, and now you got Bitcoin running. Bitcoin has been absolutely dead for like almost a year.
At 68,000 or something, did I see?
Yeah. It was low as 59 at one point, right?
Right.
But yeah, this recent move off of 68.
It was like the new number, like 50,000, and that, I mean, kind of aligned.
The new low? Or
Not new low, but like
the next,
like where you would look, where you'd love to own it. At like
guess.
50, I guess. If it's 68, you got to love owning it.
I imagine we're going to run into some resistance at 75K. We'll see. Yeah, see how it plays out. Good to have you on, man. Good to see you as always.
Pleasure, my man.
Thanks for taking some time out from a busy day. I know you're slammed over there on the desk. Appreciate you, bro.
All right, appreciate you.
Thanks for watching, folks. Please watch more content from Tasty Live. In a little bit here, we're going to have some trades of the day coming up, so you don't want to miss that. Check that out. See you soon.
welcome back to Tasty Live, everybody. We got trades from the research team right now, our wonderful research team, one of the most underappreciated parts of this company. These people do such great work, and I'm joined by the most famous Kai in all of media. I've never heard of Kai Cenat. Kai, how are we doing today?
I'm doing great, fantastic. How are you?
I'm good. I'm always good. Yeah,
that was an awesome intro.
Thank you. Yeah, big. Yeah,
Thank you.
I'm rejuvenated after this. This Alaskan trip I just took. I'm hitting the ground running, firing on all cylinders. So yeah, I won't bury the headline. We can dive straight into things here today. There's one company that I'm hoping to see along for today, but we'll see how things pan out. What do you got first for us on the docket?
Oh, you're not talking the MRDR.
No.
Which just doubled the price yesterday.
Yeah, incredible move in Moderna. I don't even. That's a tough one to even step in front of and trade. I might have tried to get some short delta going if I had been paying a lick of attention yesterday. But it's a scary spot to be in.
I know exactly. Pharma, bio, these are scary stories. It can have like any minute double or cut in half.
Oh yeah, the whole pharma industry is just test after test, result after result. What happens to pan out for you? Some of those, there'll be penny stock pharma companies that go from $1 to 20 in a day when their drug.
Oh, that's right.
It's hard to keep up with it all.
Yep, exactly. Okay, so I'm going to give you 3 interesting trades, all 3 with debits.
Okay.
All right. So the first one is a calendar, bullish calendar. So Walmart just announced the earnings, even though the earnings results is actually good, but the outlook is actually not very positive. So the stock was down like 9% at the bottom. Right now, I don't remember, probably 8 plus whatever percentage, and actually drags down the whole industry. Almost all the retail big box stores went down. I believe Target was down 3%. Costco was down 9% at the bottom. Oh no, Costco was down like 3.3% at the bottom, like down like more than $20. But right now they rally up a little bit. So I want to catch, but Walmart's still trading at the bottom. So I want to catch up to this kind of it's not even dead cat bounce yet, but the low implied volatility after the earnings, low price, almost touching whatever the support level. What is that? The 100 support level, I believe. So I want to try to get along some delta, but with less risky strategy, because the implied volatility is not that high. IVR 31% is all right. So I'm going to do 110 call diagonal with the November and September. So there's a 1 skip month to give us a little bit more time. So Walmart moves really slow. So we probably need to give it a little bit more time. So September, I try probably 22 delta, and in November, I select the same delta. Because if I move further out of money, then we're going to carry a negative delta. If I push it down to 105, it's going to be more expensive. The $2.54 debit, I think it's fits a lot of average traders' buying power.
Yeah, I like it. This is the company I was referencing. I was hoping to see some bullish Walmart come through. I align with the bullish sentiment in Walmart myself. This earnings report just wasn't that bad. I think it's interesting that you landed on the bullish calendar in this way. When I was on Morning Movers with Mike and Jermal this morning, and I mentioned I was going to get long Walmart on the open, Mike was like, "Oh, let me shop for a position here," and this was the exact position that he drew up as might be.
Oh, really?
Taking the calendar, taking advantage of that compressed IV. I really like it. I'm a big proponent of this.
Beautiful.
Not to spoil anything, but I'll be back in about an hour for trades of the day, and I might be doing something in Walmart myself. So. We're well aligned on this one. I love it. What do you?
I believe the price actually went down after opening, so it's probably the price should be even lower than the market open. Right?
Yes, it continues to sink. We're down just over 9% right now, just under $104 on the underlying itself. We've been as low today as 102.98. So has tested that sub 103 range as well, and maybe just a little bit of bullish momentum coming in off the bottom.
Yep. I put it in the trade like after market opens, like probably 30 minutes. And I see negative P&L, so I know the price went down afterwards.
Yeah, I did the same thing. My spot is 105.88 on my entry from this morning. So yeah, better entries to be had as well. But like you said, I mean, and I've also centered around the November 20th expiration cycle. But it's a slower moving vehicle. I have plenty of time on the contract, so I'm not gonna worry about not getting the perfect entry to the cent.
Ooh, look at that bar. Oh,
yeah, rough. It's an inverse Moderna chart we got going on here. No, not quite.
All right, next one. Next one, still the similar trade. It's now it's a bullish diagonal because I'm able to find more different strikes in this more expensive underlying VRT. So VRT, it's not trading at the bottom or whatever the support level. I don't know. It's actually, but it kept going down for quite a while. So I think this is the spot I want to test. So that's why I'm not super bullish, but I want to test with a bullish diagonal because the IV is still not very attractive under 30. And I'm not sure if it's touching any support level, though. So that's why I want to use a very small and slow moving strategy, which is time spread. This one probably is going to be too expensive for a lot of people if you choose November. So that's why I keep October, September, because this underlying, the debit is much more expensive and the underlying move fast. So we probably need to manage this much faster than the Walmart. So if you see any positive P&L, somewhere between 10 to 25% P&L, don't even hold it too long. Try to hold it to expiration, from month expiration, try to catch that beta decay. It's not the best strategy for any calendar diagonal. We used to have the study testing the IWM and the SPY. I think the sweet spot is somewhere between 10 to 25% ish of the debit. So it's going to be, if you're able to make $90 to $200, I think it's great.
Sure. Yeah, that's a great illustration as well for if you're, a little smaller trader and $910 of buying power sounds like a lot. It's not. We're not trying to squeeze all of those $910 out. Just keeping it close. VRT. Yeah, I like this trade a lot. This is a aggressive product. This is one of these ones where you zoom out and look at the chart and it's like, oh, this looks like a pretty normal chart, but then you squint and look at these ranges and it's like, wait, 380 and we're currently at 257 and earlier this year we were at $150. It's these ranges are big, so you can be directionally correct. The rewards are absolutely there.
Right. So this is a fast moving product. You probably want to move as fast as this product too. And I put the probability of profit in both of these trades, roughly 45% or 40%. You don't see these probability on the trading platform because of the time spread, which has two different expiration cycles. So there's no real probability of success or probably of losing. But 45% is roughly of try to generalize the probability for time spreads. It's lower than 50%, but the benefits of the calendar spread is that 40% whatever probability is for the front month. You still can roll to next month if you have skip month or even longer duration for the long call or long put. You actually have higher probability to be profitable. It's definitely more than 50%.
There you go. That's a great note as well. All right, we got about 4 minutes left with you here. What do we have third on the docket?
All right, on the very last one is still debit spread, but it's not a time spread. It's a condor. So it's a in the money condor, which I'm slightly bullish in Meta, but I don't want to use the calendar. It's too expensive, $500 and above. The calendar days cost you probably $15 to $20 to do anyway. So I try to keep it small, reasonable, $550 buying power in the money because we use in the money call. So it's my short strike is 570 and 580, and when I put it in the trade, the Meta was trading at 545 ish. So it really is the in the money call. So that's why I don't use the iron fly or iron condor. If you use in the money, we probably can just use all calls. So this turn this from an iron condor to a condor. So we use the same type of the call or put. So I used 570 as the lower side, 585 as the higher side. So again, this is actually a little bit more aggressive trade because it has negative beta right now. So the underlying price is slightly out of the break-even point to the downside. So you actually don't collect the beta right now, but you don't lose money anyway. So it's kind of 50-50 shot. So why don't we just use at the money call spread if it's a 50-50 shot? But because I'm not sure about the meta, so I want to add a very tight call spread to collect more premium. So even the market rallies quickly, you probably don't make as money as at the money call spread, but you have much more buffer to the downside because of the extra credit you collect from the short call spread.
Yes, very well put. That's exactly what I was going to draw attention to, is that you are giving yourself just a little bit more downside protection here, a slightly asymmetric condor from what we would
Oh, exactly. Spot. Yeah, I found that it's $25 to the downside and $20 on the upside.
Yes. So yeah, plenty of extra room there, and yeah, this is a real aggressive one as well, especially with a product that moves as fast as Meta, and Meta does not like to stay range bound by any stretch, but a ton of the volume happening right in that 570 to 585 wheelhouse there. It spent a lot of time right in the middle of that range over the past 3 months or so. So certainly a lot of promise on this one as well.
Exactly.
Well, all right. We I suppose that's all the time that we got here. You got any closing remarks for the people?
Beautiful.
All right. Sounds good. Thank you so much for joining us, Kai. Everybody, be sure to get those trades in. The research team does great work. This is all mathematically driven plus EV stuff that we're talking about here. I'm going to go out and put this Meta Condor on right now myself, just because I'm enticed. I need a little bit more risk in my life right now, so we're gonna get a little risky with that one. Thank you so much for joining us, Kai. Everybody, stay tuned for trades of the day coming up next. Jermal will be kicking things off. I will pick things back up there at noon Central Standard Time. We always appreciate you taking the time to watch. Do be sure to like and subscribe to the Tasty Live YouTube channel. We will be right back in 2 short minutes.
Peace.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
What's going on, everybody? I'm Jermal Chandler. Thanks for watching Tasty Live. This is Trades of the Day. Looking across the landscape here, I see a market that is weak and been weak for the last few trading sessions here, 3 out of the last 4. When we look at it, even after a big move to the upside, I think it's starting to consolidate just a little bit again after the big move that we saw coming out of the earnings cycle here. And this is kind of not what you want to see, honestly, when you're talking about fading from this consolidation. It seemed like we were taking the next leg higher on Monday of this week. Oh, was that Monday? Yeah, sorry. Going back to going back to late last week. It seemed like we were breaking out to new highs, only to fall lower. The story's gotten a little complicated, especially in the last 24 hours when you hear that the Treasury is going to try and stimulate some buying in the bond market by buying 30-year Treasuries to release some of the pressure that is on the bond market, seeing 30-year bonds as high as they have been since 2007. That's not necessarily something that you want to see. You're seeing a lot of debt issuance from companies that are doing these huge build-outs for AI. They are way out further bonds. They're basically borrowing money to fund projects further out in time. And it adds up. It takes a toll at some point in time. And you're seeing inflation in our environment. You've seen it mostly as a result of oil. We've talked about that a lot on here. We've seen oil prices stay elevated above 80, right? And that's led to higher prices at the gas pump. The American consumer can only take but so much. They only have but so much money. It's not like people are getting crazy raises. And so, therefore, we're seeing a lot of stocks start to price in some struggles. We see it this week, particularly when we talk about retail names. We saw it on earnings for Walmart today. Stock is down. And again, it's just their full year guidance going forward. They know there's going to be pressure on consumers. We saw it in TJ Maxx yesterday that also had earnings yesterday morning. And similar deal, moved to the downside, pressure on consumers. It's a thing. So, as much as I don't want to do it, Ross Stores has earnings coming up. Is it tonight, I think? It might be tonight. I can't remember if it's tonight, tomorrow morning, but nevertheless, it has earnings in the recent future here, in the near future here. And EPS estimate of 1.93. Also a revenue estimate of 6.1 billion. So obviously you would like to see it exceed those numbers. Comp sales guide of a 6 to 7% higher from a quarter ago. Last quarter it was 17%. So that's fairly low when you look at that. And then operating margin also, they're hoping to rise above that higher end of the range because that's also fairly low when you see that. So that's the landscape when you're looking at the numbers, but the environment is really what matters. We're in an environment where it would seem that there's a little bit of pressure on the American consumer. And again, you see one of the easier things to do, or at least attempt to do when you're constructing a trade around earnings, is look at some of the comparables. Look at some of the other names in the space, and you see Walmart, you see TJ Maxx have already shown how things are going to go. I mean, I always say this: if one of them sneezes, another catches a cold. They all deal with the same thing. They're all in the same space, and so you would imagine this one could end up tanking on earnings. At least that's the way I'm playing it for now. So I could have done this a couple of different ways. I didn't want to be too locked in on a bunch of different legs. Didn't want to do a super bear here. Didn't feel that right. I felt more of a diagonal spread in this situation. Getting long basically at the money to sell a little bit further downside. In this case, sold the 210, so $20 wide, 230 long in October, selling the 210. And again, I'm making a play as a result of the catalyst of earnings, but I'm not really using the earnings cycle to do it. I could have done that. I just felt like going further out in this case. I feel like this one could be a play that lasts a little bit longer, and it also fits in with the thesis, fits in with my portfolio, just having some short delta here. So, because I have long deltas already in some of these other names. I actually got longer in Walmart today. I have Costco, which is, similar space. So I do have long deltas in some of those and further out. Matter of fact, I went to Dees for the Walmart play today, long Dees and short October, I think. But I like having a short delta play, and I like having it further out. Again, this just works in an environment where, let's just say the stock does go down on earnings, or say it doesn't go down as much. We're still in an environment where I think this is going to become somewhat of an issue for retail players, for retailers in general. And so that's why I'm fine with going further out in this play. And it's not so much of an earnings play as it is more of probably a bigger macro play on what's going on in retail. If my Walmart and Costco don't work, then I probably end up being up money on this. So that's why I decided to do it. And again, when I see this environment where I see, bonds move up the way that they did on the news and then immediately fade, it tells me that they don't believe in the buying of the bonds that's going on in the back end of the curve from the Treasury. They don't believe it, especially when the date, I think that the date is signaled to start, I think, September 9th, but it's supposed to end the buying right around the time of the election. So it does seem like a very political play, and I think the market didn't buy into it much at all. Other things have, though. Bitcoin and gold have bought into it, and they're making big moves more recent. Again, it's not the same news for Bitcoin. There's other news as well as far as the Clarity Act, but I just feel like it also has taken this opportunity to lift off. So everything might not be, everything is not going to be knocked down as a result of this bond buying. But I think what it says is that this is a very expensive environment, and there's inflation in the system. And I think that's going to weigh down the American consumer to some degree. And I think you're already seeing it. Like, it's one thing to have a thesis on something that you think might be coming down the line and try to play it. And sometimes they always say, the people who are early are the people who are right are usually early to the trade. You're already seeing this trade play out. Again, we just talked about some of the earnings with Walmart, with TJX. And so I think we're already seeing this play out to some degree. Again, Target was a little bit different. It didn't quite go that way. It did fade initially on earnings, but look at it. It's at all-time highs now. So not entirely sure what they're doing different, but that's not my job to try and figure that out. My job is to try and take advantage of what I see happening currently. And in this case, it's happening that way with Ross Stores. So very simple setup here. As far as management, let's just say the stock goes up tomorrow. Say it does a target-like move. And let's say it gets back to, let's look at the chart here. Say it gets back above 245 or something like that, right? Say it's up $15 on earnings. Well, I don't really have to adjust much in this situation. So I did pay, I paid $9.62. This is the 20-wide dollar fly. I always talk about, a $20 wide diagonal. I always talk about how I like to buy less than half the width of the diagonal. So in this case, it's $20. I like to buy something that's less than $1,000. In this case, I did $962. That worked out fine. If this thing jumps up by 15 points tomorrow, I imagine I could be down $250 to $300. It's about a third of 30% of this premium that I paid for it. I'm fine living with that. I can deal with that. And will I reestablish or will I change anything? I don't think so, because this is October. I won't necessarily look to do anything in that case. The only way I would is if for some reason stock were to run up to, say, 250 or 260. Well, now my shot of making money is a lot further away, right? I mean, that's $20 to $30 away from where the stock is now. And the key to this thing is having the heavy delta on the long put that's in October, right? That's the whole key to this trade. You want to lean on that if the stock does go down. So in the sense the stock goes down, let's say tomorrow, stock is trading lower. Let's see, before we bring up the real chart to you, just showing you real quick. Let's just say stock is trading down to 208 or something like that. Let's just say we get like a $20 move to the downside. We can see I'm up $400 P&L Theo. I might close that trade. In that sense, if it's down to that level, say $20 and change, at that point, say it's down to 207 and I'm up $500 on the trade. That's more than 50%. I think we close that and that's a win, right? So that's how that goes. I don't see a scenario where I would. Let's see. Let's just say tomorrow the stock is trading, like I said, 260. I still think the story is intact, unless for some reason they say something wildly different than what some of these other companies have said. I still think the story is intact that the American consumer is going to struggle some. And so I think I keep the trade on, and maybe I adjust strikes, but I don't think I get out of it completely. But if it were to run to two, even if it were to run to 270, that's the thing about it. Like I put this on, I know exactly how much premium I'm willing to lose. I think about it in terms of that. Like, this is the amount of premium I'm willing to lose on this trade. And if it jumps to 270, I'm really out of my money. Well, I guess at that point, I just close the short put, and maybe I keep this on as a short delta in the book. I don't have a whole lot of those, so that would work out as well. But again, if this thing drops down to, I don't think it drops below 200, but it could easily have a $20 move, I feel like, tomorrow. Even though, let's see, does the expected move say that? Let's take a look real quick. The expected move for tomorrow is about $16. So yeah, I could see a $20 move in either direction, honestly. And we'll see if it plays out similar to Walmart, similar to TJX. That's part of my thesis as well. So yeah, let's give them the P&L graph here. I told you how I would play it, but the simple nuts and bolts of it all is we bought a diagonal spread put diagonal spread. I actually tried to pay $9.65. Gave me 3 cents of price improvement. How about that? $9.62. Again, this is a short delta trade. We do want the stock to go down for this trade, and that's where we make the most money. Again, you can see kind of the low side value on this, high premium, low side P&L on this, potentially $1,000. That's over time. Again, if we grind lower over the next couple of weeks here, heading into SEP expiration, then that's when you possibly see something like that. But I think about it in terms of extrinsic move on this potential day, moving after earnings. I potentially can make about $300 to $400 on this. Maybe that's a chance to take it off and just get out of the position there. Again, I paid $9.62 for this. That's the most I could lose on this. No more than that. And so that's kind of how I look at it. So a little play on the retail side here, given what we've seen from some of these retail names, given what's going on in the environment, given inflation, given what's going on with bonds more recently, you're seeing other areas of the market get interested as far as gold, silver, and Bitcoin. People are running to those now. Just when you thought they were not interesting at all, they've come right back. So that's my trade of the day, a put diagonal in Ross Stores, which is earnings adjacent. Again, it's not in those earnings cycles, but it's earnings adjacent. That's the move we're going to need out of that play. So Ross Stores, put diagonal. That's my trade of the day. Now I'm going to get you over to Mike for his trade of the day.
What's up, party people? Mike here with another trade of the day for you. And what a market we've got here this morning. E-minis down 25, NASDAQ down 150, Bitcoin up 4,200 at the session high, just continuing to climb higher. And I think if you are a Bitcoin permabull, if you're a hodler, if you've got diamond hands, or if you're trying to just buy into this rip here, what better time than now when you've had a $10,000 rally in Bitcoin futures and IBIT just ripping higher as well. So that's where I'm going. I think this is a great opportunity to get into a product that still has pretty low implied volatility, historically speaking. When you look at IBIT with a current IV rank of 28, and you look at an IV of 46%, if you overlay implied volatility on the charts, which you can do by just clicking on the indicators here and then typing in implied volatility, adding it to the chart. You can change the color of it if you want, but this is a way to see where implied volatility has been into big market moves. You can see we spiked earlier this year into this massive sell-off in crypto, but at the same time, Bitcoin is one of those products very similar to implied volatility where if you get these big moves to the upside that have a huge magnitude component to them, you can see implied volatility expand into those moves. So from just a few days ago, we were sitting at a really low implied volatility in IBIT, sub 40%, haven't really hit that or stayed there for very long. Now we get this huge rip higher. We were trading at 35, we're now trading at 41, and we're just gapping higher day after day. And you're seeing implied volatility expand into that move. So I want to place a trade that takes full advantage of a continued price move to the upside, but also an implied volatility expansion continuation, because that's really what you're going to see here. If you think that implied volatility is going to expand into a directional move to the upside, that is absolutely possible. We've seen it before. We'll probably see it again. I think MicroStrategy is another interesting example where you can see here from the low of 75% into the current price much higher, we're now sitting at 90% implied volatility. And another one where you see these moves to the upside and you can see implied volatility expand along with it as well. Especially here, when you had this move from 100 to 500, MicroStrategy obviously is way more leverage than an IBIT's going to give you, but the same story applies. If you get a big move to the upside that's way higher than implied volatility, you're going to see implied volatility expand into that move. So I went with a super bullish strategy, super bull setup. I went with a long-term position. I went out to December. There's a few reasons for that. But I went with a short put at 140 to buy 150 strike call out in the 120-day cycle, and I collected $170 in the middle here. So my expiration P&L, as long as everything expires worthless in this middle, I'll make $170. Worst case scenario is I pick up another 100 shares of IBIT with a cost basis of $38.30, And I'm totally fine with that because I already have 100 shares at 65. So if we zoom out here, my current 100 shares right up here at 65, not taking losses on those right now because I picked up $3,000 and change of extrinsic value premium in one of my year-long trades in IBIT. That was last year. So I'm profitable on those shares, but what better way to reduce cost basis on 100 shares at a market price significantly higher than what we're currently trading than taking another 100 shares of stock? I'm already trying to do that with a separate position, short put with a 35 strike in September, and I bought 2 calls with that premium, still picked up $100 in the middle, but that one still has 30 days to go, and we're trekking towards 45. Like, that could be a huge win too. But I want to double down here and just try and pick up another 100 shares in IBIT. And if not, I'm still going to benefit, right? Because I picked up a credit for this trade, $170. I picked up a credit for this other trade, $100 in the middle here. And of course, I have 100 shares at a basis of 65. But when you look at all of these trades holistically, I ultimately have a way to capture more shares to the downside. That would basically bring my break even here, right? If I pick up another 100 shares at 40 and then another at 35, like, my basis is going to be way down here. But either way, looking good for a continuation to the upside here. And if we isolate this trade, we can walk through a few scenarios. So this is your expiration risk graph, collecting $170 in the middle. This is a high probability trade because we're picking up a credit. We're not paying a debit, even though almost all of my profit potential is going to come from this 50 strike call up here 120 days out. I still have a neutral trade here where I can make money at expiration with just chop around this current price point. But again, I'm totally fine with picking up another 100 shares at 38. If you divide 65, if you add 38 and 65 together, you get about 100. And that brings my break even to both shares to about 50. So I would reduce my basis by 15 points if I take another 100 shares. So I'm really not worried about it. I can hold 200 shares of IBIT, no problem, at a $41 price point. So this is a really nice, efficient way to either pick up more shares or really benefit from an upside move. So let's take a look at some analysis here for this position in isolation. So let's flip it over to Theo. You can see your theoretical risk graph here. And if we were to just examine this trade at the end of next month, let's say we take a few weeks to get up to a super high level here. Let's go to September 30th, and let's just look at a few scenarios. So this position, if we rally over the next month from 41 to 45, this will be a $300 winner. Haven't changed implied volatility at all. I don't think I really need to because these options are in the same expiration cycle. And really, if we get a volatility crush, I'll get more of a flat P&L in the middle here, and we can mess around with this. If we get a volatility crush, which I'm not really seeing happening, but if we do, let's bring this down to the low of the year. And I think really one of the main reasons why I love having this implied volatility graph on the bottom of the chart is that you can clearly see where we've been in terms of the low implied volatility reading for this year. And it's around 39, 37. This one, we're looking at 37 at a low point. We've got 39 here. We've got 39, 39. So when I'm estimating where volatility could go on the low end, it has been around between 39 and 37. So when I'm looking at this theoretical analysis, I can crush this down to 37 and see where I would stand if we get a non-move. So if we do get a vol crush and kind of a non-move, we just chop around here, this trade will be a scratch. But if we do get that rally up to 46 or 47 or 48 or up to 50, this is still going to be a sizable winner because we're going to be gaining value in the long call and we're going to be losing value in the short put. And those work synergistically to give you a nice P&L to the upside. But like I said, if we get a volatility expansion, that's where this trade can really take off. So right now, if we get a move to 50, we're looking at a $600 Theo max profit. And that makes sense because I sold this put for $170 more than the call I purchased. If we get a rally to the upside, this call is going to increase in value and my short put's going to lose value. I'll be able to sell out of this package for about $600 net profit. But here's where we can get a real interesting reading. So like I said, if IBIT continues to the upside and we have a 5% move every day, 5%, 5%, 5%, we're going to see vol expand. Like I don't think there's a reason why we wouldn't expect that to happen in IBIT. MicroStrategy would be going through the roof too. Like we would get a vol expansion in this product that's been kind of just chopping at lows for a better part of this year, right? Chopping around the lows with no intraday movement and very little tight ranges results in volatility contracting. But now we're getting these huge moves to the upside. So let's mess around with this. With no change to vol, we're looking at a theoretical P&L of about $600 if we look at a move to 50 in IBIT, which is 4 more days of what we're seeing right now, right? We're seeing at 41. If we get another rip to the upside and we get up to 50, we're looking at about $500, $600. But what if I increase implied volatility? And let's go back to the chart here and see where these high points were into some of these bigger moves. So we got as high as 60% here. We got as high as 80% into the big liquidation event here. So I would say between 60 and 80% is where I would land. I don't think we would get up to this crazy level of 80%, but you never know. If IBIT rallies 10% each day and it continues to move to the upside, you could absolutely see an expansion to that level. But let's be conservative here and let's crank this implied volatility from 54% where it's at now. Let's bring it up to 60% because we've hit that a handful of times over the course of the last year or so, with only one exception where we had that big move to the downside where we got up to 80. So let's go back to the analysis tab and let's take a look. If we get an expansion up to 60%, that would be a 5% increase. Let's look at a 5 and 6% increase. So 59.5 versus 60.5. If we increase 5 percentage points and we hover over the 50 strike, we are looking at about a $600 move to the upside. So interesting. What about a 6%? Same story. A little bit more. So I think what's happening here is we're getting the expansion to the upside on the call, but we're also expanding the puts value. So that's offsetting some of that decay. But either way, if we get a delta move up here, we're going to be looking good. We're going to be looking at about a $600 move to the upside in terms of P&L if we get IBIT continuing to rally. But again, this is a high probability trade simply because I've covered the cost of the long call with the sale of the short put. I collected $170 in the middle here, which means my short put is $170 more valuable than my long call on entry. And obviously we're going to have asymmetric upside if we get that move here. But holistically speaking, if we evaluate at today's date and we get the whole picture here, I've got 100 shares, taking on 100 shares of risk to the downside, trying to get more shares, which is why you see this kind of slope getting more aggressive to the downside. But I'm fine with that. I can take 200 shares, 300 shares of IBIT. If I get up to 300 shares of IBIT at a basis of around 50, that's about a 15K notional exposure, but my buying power would be, $3-4 grand. And I would have the ability to sell 3 calls against 300 shares or 2 calls against 200 shares into some up moves. So happy to do it, but that is ultimately what I'm thinking for IBIT. I like the positioning for longer term. That's a nice thing about these strategies is you don't necessarily need to go to the near term. You can go longer term because really at the end of the day, if you're routing the trade for a credit, it doesn't matter what expiration you go to because your short put is neutral to bullish. Your long call is absolutely bullish, but the two together work synergistically to get value out of the short put and crush that value, add value to your long call so you can sell out of that call for more than your cheaper short put is. So you have this nice asymmetry to the upside, but in the middle, you don't lose money. I think that's the biggest thing, where if you're just buying long calls and you have a bunch of losers, you're losing that value that you paid up front because they're expiring worthless. You take losses on those trades. But if you're selling a put to finance the entire cost of the call, now all of a sudden, your losers, if you just bought the call, is actually a win in the middle. Or you're taking risk to the downside, but you have to want to take those shares or the risk to the downside anyways. But at the end of the day, it can really create asymmetry to the upside where if you have a big move that's an outsized move to the upside, you can make a lot of money on those trades. Coinbase was one we just closed a little bit earlier today, a Super Bowl setup, 120, 110 short put spread, 10 points wide in October. And I bought a 20-point wide 190, 210 call spread in the same cycle. And that was a $450 winner, and I collected 50 cents. So your value can really come out of that call side. But let's take a look at the graphic here. Long-term Super Bowl all the way out in December. I'm trying to get out into that longer-term positioning for some of these products, especially now after we've seen some life infused into the Bitcoin markets. I want to take full advantage of that if we get a continuation to the upside, and this is one of those ways that you can do it. But break even to the downside, 38.30. I collected $170 in the middle by selling the put for $170 more than the call that I bought. That's how you turn this long call type strategy into a high probability strategy. Max loss, 38.30 if IBIT goes to 0. I don't think that's happening. Unlimited upside above 50. But again, really, we're looking for a near-term move to 50. And this trade goes to a $600 winner, no problem. And we would love to see that. And that really can just be cost basis reduction against my shares that I already have as well, if I sell out of that trade and pick up some more value. But $1.70 credit in the middle. Downside break even, 38.30, out in the December cycle, and really just looking for a continuation in Bitcoin to the upside. And if that happens, I do expect to see implied volatility expand in IBIT, as we're already seeing happen. We're seeing it happen in MicroStrategy as well, but that's the trade. What better way to take advantage of a continued upside move than owning a naked call for a net credit by selling a put in the same cycle against it? That is a testament to cost basis reduction, high probability trading, but having that upside kicker, right? Getting that value out of the directional moves when you are really right. If you're really right, why not get paid for it in the form of a trade like this? But again, 100 shares of risk to the downside, so it's not for everyone, but if you have the ability to take 100 shares or you want to take 100 shares in IBIT, this is one of those strategies that can really take advantage of these moves to the upside. And again, if implied volatility continues to expand, we're going to see that call gain value into those rallies if we assume that the IV expansion is paired with a rally. So let me know what you think in the comments and the YouTube chat. But this is not the end of these trade ideas. We got another one coming your way with E right now.
What's up, guys? I'm Errol Coleman. No, we kicking it over to the wrong person there. Gus Downing here. I'm here to talk my trade of the day, and I will be transparent up front. If you've been watching all of the shows that I've been on today, if you've had the Tasty Live Network on all day today, you heard me talk about this trade 2 times already. That's the current situation. However, I was sitting there looking for different things to trade, and I decided, why force something else when my favorite trade of the day is right here, even if I've already touched on it. So I am trading Walmart today. I'm doing so in a very aggressive way. I have gotten long Walmart via a naked 105 put, expiring a short put, that is, expiring in the November 20th expiration cycle. We can see the position that I have on here. Currently trading with a bid of 530 and an ask of 545. You can get a much better entry on this than I did. I bought at a spot price of 105.88 on Walmart. We now have moved down to 104.20 as I speak right now. So there are better entries available. My logic here with Walmart is multifaceted. First of all, my favorite trades in all of the market are fading earnings moves. I love to do it. I feel the market often overreacts aggressively to earnings when a lot of the information is already priced in ahead of time. But also it's just, everybody wants to trade earnings. They want to react to these earnings calls. And I think that often moves become a little bit exaggerated. So we've gotten this down move in Walmart. This down move is entirely because their comparable sales growth came in at 2.6% and below the estimate of 3.5%. They beat revenue and they hiked all guidance. To be more specific, they raised EPS for the next quarter, EPS for the full year, revenue for next quarter, revenue for the full year. They raised their expectations for net sales for the next quarter and the full year, adjusted earnings, you name it. They're raising the guidance for everything. On top of all of that, Walmart also said that they expect $2.9 billion in tariff refunds, of which they've only received about $100 million to this point. So we're expecting a lot more cash to come flowing into Walmart's balance sheet that they thought was gone. This is like maybe we've got some Costco fans out there. This is like when you can go back to Costco retroactively after they change the price of something and they'll refund you the difference. They do the cost matching or whatever that's called. That's what's happened with Walmart here. This money was already spent. The price has gone down. Now they're going to get a refund on money that they thought would be gone from their balance sheet anyway. All of this is bullish information. The CEO spoke very positively about the company and what he expects for the remainder of the year and beyond. And I just think this move has to be a little bit too much. I think that this is a little bit reactionary. Now, I chose the naked put. We can do the full exercise here as well. A lot crossed my mind here. Initially, I said, okay, I want to do a vertical. Let's draw that up. Whatever I did, I was going to center it around this 105 strike. A vertical just wasn't that attractive to me. This is still a solid trade. If you wanted to do something to find risk, you can get $217 of credit, making your max profit $217, for $283 of buying power, obviously making your max loss $283 as well. I don't hate this at all. It's close to a 1-to-1 risk profile. My whole sentiment is just that I want Walmart, I want to say Walmart is higher in 90 days. That's all I want to say. I'm not going to pray for this entire gap fill. I'm not going to try to do something aggressively out of the money, which, I am prone to. If we look at this gap on the charts here, we're talking about a gap up to 114, basically. So my initial lean was to go with the 110, 115, and there is a semi-attractive risk profile on this. $130 of buying power for $370 of credit. Now, obviously, that is right at the expected move. I would need the full extent of the expected move to come through in the next 90 days for this to work out. And without an earnings report coming in the next 92 days, at least not to my knowledge, even though it's right around that time, I believe it's going to come just after this expiration. I don't know if there's going to be a catalyst to, send Walmart way higher, even though I wouldn't be surprised if we see this full gap get filled by that time. You guys know me. This is much more my style. This is pretty much a 3-to-1 risk profile here. This is what I usually like to do. But with a slow moving vehicle, a retailer like Walmart, I'm not going to pray for that aggressive of a move. So then I decided, okay, I just want to say Walmart goes up by that time, which led me back to this one I just talked about. Now 218 of credit for 282 of buying power. If you want to take this trade, go for it. I think that this is still a very attractive trade. It's one that I would put on. But I decided, as I thought more and more about it, that I wanted to be even a little bit more aggressive than that. So then I said, okay, I'll do a ratio spread. I looked at ratio spreads at this same price, and this is where the real differentiator came into play that forced me into taking this short put. If we do this ratio spread, we get $102 of credit, and it takes $1,200 of buying power to put on. That's obviously not very attractive, and particularly with a ratio spread where I'm trying to squeeze a lot more credit out. That's the whole idea with the ratio spread, but because we have $5 wide strikes available to us and no $2.50 increments in the middle, they're so far apart that the difference in price of each strike basically erases the benefit that you would stand to gain from doing a ratio spread in the first place, just posting up a bunch of extra buying power for no reason. So then I said, okay, what if I did a ratio spread, but I just took off the 2 and I just take that extra 1? And that was eventually what I wound up landing on here with this just straight up short put. Let's throw this on as well. Now this currently takes just over $2,000 of buying power, which I understand is a little bit heavy, $2,100 of buying power for all intents and purposes. However, we have a mid price of $535. So the profile is much better on this than if I were to do the ratio spread. Now, obviously, what I give up is the definition of risk that a ratio spread serves to provide you with, but I'm happy to post up an extra $800 of buying power anyway when I'm talking about something that is, this aggressive when I'm taking a naked short in the equation either way. I would much rather just post up the $2,000 of buying power with a potential $535 to get out of it, or $493 at the time that I put this trade on for slightly more buying power, mind you. But I'd rather be able to squeeze this $500 out of it than take a similar amount of risk, $800, I suppose. I shouldn't use the word similar, but take what is still a lot of risk to just get $101 back. This obviously is the much more attractive choice to me. Now, I'm not protected to the downside. I have a pretty strong stop loss in my mind at the $100 price on the underlying. If Walmart dips below $100 in the next, week or two, for as long as I have this position on, really, I'll be looking to get out of it then, or maybe cover it up. I can maybe just convert it. One moment. Apologies. Cough drop's not doing its job. I can maybe just convert it into a standard short put spread, but this is just really attractive to me at these levels. I'm fine with posting up this buying power. I was going to do the ratio spread anyway and post up a bunch of buying power anyway because I have that much conviction that I just think this moves us in the wrong direction. I don't think Walmart's going to climb too much lower on all of this. And there's only room for good news. When we zoom out, we're talking about year-long 2026 lows on Walmart right now. After, like I said, what I view to be a pretty positive earnings report, and I think that there's going to be really good psychological resistance at that $100 level. So when combining all of those factors, it makes me excited to get long some Walmart here, to the extent that I was going to do the ratio spread, but just seeing the widths, it just didn't make sense. The bigger decision came down to just the standard vertical or going for the short put naked by itself. I landed on the naked side. Now, this is a lot of buying power. Like I said, if you want a much less demanding position, you could totally just roll with the vertical. Let me throw that one back on here. If you play the 100, 105, just straddling the money with a vertical here, this is a very attractive, low risk, cheap way to get at this. Now, I'm not usually one to post up $2,000 of buying power for a single trade, but when the plan was to go ratio spread and already post up 1,200, it kind of becomes like, okay, let's throw that extra $800 in there and add $400 of credit, 5x the amount of credit that we stand to benefit from this. This that I have set up here is the low risk way to attack this if you just want some long exposure to Walmart and don't want to worry about having to aggressively track and manage this position the way that I plan to with the naked put. This is a very attractive way to go at it as well. And I might, well, you see, this is the whole thing here. Then after I put on this short position, I was like, what if I got even a little bit more aggressive with another vertical? And I looked at this 105, 110, but then I quickly realized, as any sharp trader would, that all this would do is close. It would just move my naked put. It would close out the short put that I have at the 105 strike if I bought to open one there, and suddenly I would just be holding the bag on a even more expensive naked put. Obviously, the buying power effect is a little bit skewed on my platform here because I already have that other one open. And then, like I said, the 110, 115, also kind of attractive to me. If you got the appetite for a little bit of risk in your life, I don't hate this because I think, as has happened with a number of these earnings fade trades that I've done over, well, the past few weeks for me, I understand that I've been missing for 8 trading days, but my past few trades of the day, a lot of them have been much more aggressive, much shorter dated, fading earnings moves and looking for the quick responses. I think Walmart opens like 107 tomorrow. That's what this feels like to me. I think that's in the cards. It's just screaming to me that we take a little tiny bounce on Walmart tomorrow. Now, I'm not necessarily looking to hold this one for max profit. Should we hold this level and do a kind of similar thing to what we did for the entire month of July and month of August to this point here, where Walmart just picks a level and wants to bounce around, and if I find that the 105 level is in the middle of a similar range like this, I'm content to just get this off whenever I see a 10, 20, maybe 30% profit present itself. But should Walmart open at 107 tomorrow, suddenly we have a giant head start. And if it wants to just do steady growth from there, there's no reason not to hold this for max profit with no other earnings report happening in the middle of this. And there shouldn't be any other binary events, even in a world where Walmart, the worst case scenario for them is kind of tariffs. That's what makes them have to jack their prices up. Consumers don't like that at all. They basically have a $2.8 billion free roll on tariffs right now because they have $2.8 billion in refunds from other tariffs coming. So even if we somehow find ourselves in a situation where we go Liberation Day again and start firing off a bunch of tariffs, I think they're pretty protected from that as well by the synthetic $2.8 billion that they're basically sitting on here. Personally, I haven't shopped at Walmart in a little while. Let me know in chat if you're a frequent Walmart person. When I lived in Texas, I go to Walmart all the time. I was in a small town for high school. You guys know what we do in small towns. We hang out in the freaking Walmart parking lot. Maybe we go in there and walk around a little bit, okay? So I got no shortage of Walmart experience, but I'm not personally aligning their balance sheet. Make of that information what you will. I like the prospects here. That's just, even earnings aside, if you give me any established company that's too big to fail, such as Walmart, that is at your long lows, that's always going to be something of an attractive buy, provided that there's nothing else going on in the ether that could continue driving them down. The only thing that we have to drive them down is this poor, which again, it was good, earnings report that they just had. Comparable sales slipping a little bit doesn't really worry me all that much. And there's a 1% miss in comparable sales possibly justify a 9% decrease in the share price. I'm having such a hard time making sense of this. I'm getting myself worked up right now, and I got myself similarly worked up earlier, and it's why I landed on the naked short put and posting up this much buying power, because I have this much conviction that this just has to be too big of a move. Walmart dragging down the entire brick and mortar retail space alongside it today. I mean, let's look at a Target, for instance. Oh, Target actually has recovered. I'm giving out 2-hour-old takes here, and suddenly Target's back in the green. Target, sidebar, Target doesn't exist in 20 years. All right, I've always been tempted to short some Target shares to zero because I just don't see where they fit in the market. But that's beside the point right now. Had dragged down the entire brick and mortar retail space aside it, and in fact, it even makes me more bullish now that the brick and mortar retail space outside of them is showing signs of life. I don't see how you miss comparable sales growth. That's the other thing too. It's not like they said, it's not like the expectation was comparable sales to grow 1% and they came in at a decline in comparable sales. They grew by 2.6% instead of by 3.5%. I just don't think that hurts the underlying as much as the market is acting like it does here. So I'm happy to fade this move. Just banking on Walmart to be higher than it is right now, 90 days from now. That feels like plenty of time. And like I said, tight stop loss at $100. I'm not going to play around with trying to cover this or trying to get too cute. If we see those prices, I'm just out. That's what you have to take sometimes when you do an undefined risk position such as this one. But the IV did collapse a little bit following earnings. However, the put side skew is still very prevalent, very attractive premiums to take advantage of on the put side here with how much downside we're seeing in this today. And I'm content throwing myself at those premiums, and I'm content posting up 4 times what I stand to make to extract a little bit more out of it. I just have a hard time seeing how this move is this detrimental to Walmart. So there's the recap. You see the full trade on the screen here. I made this one easy on Luis, who makes these graphics for us. Shout out to Luis, but just selling a put. It's a little bit reckless. It's a little bit more buying power than I would usually post up. It's undefined risk. I understand all those things, but I just don't see why Walmart is taking this down move. And I think it's likely. I guess I wouldn't say likely, but I think it's incredibly likely that Walmart is higher than it is right now in 90 days. And I think that there is a very reasonable chance that this gap up to 114 is completely filled in 90 days from right now. I just am not seeing what part of this earnings call justifies this 9% down move. I can't wrap my head around it. It makes no sense, especially when they raise all their guidance at the same time. Isn't guidance all we care about now? The most 2026 thing ever is disregarding the EPS and revenue numbers and only caring about guidance. And yet we've issued amazing guidance for growth into the next quarter, into the rest of the year, and Walmart just not reacting to that news at all. So that's going to do it for my trade of the day. Very happy to be long Walmart off these levels. Love fading earnings moves in general, and I especially love fading earnings moves when I cannot make sense of why the move even happened in the first place. So that's going to do it for me. Now we will kick it over to the real Errol Coleman, just outside this studio here. Errol, take it away.
What's going on, guys? Welcome back to another trade of the day. I know we just saw some Walmart trades. I was pondering on Walmart. I know we have a pretty big gap down and a continuation sell-off to the downside. But I'm also still looking at a lot of these memory names. So let's go through the portfolio. Let's look at some of the trades that we have on, and let's get on a new trade here. So as we jump into the Tasty Trade platform, we can kind of see how aggressive these memory names have been, right? I mean, right now we had a little bit of short delta on in Micron. It's nice to see the pullback. But for the most part, a lot of this momentum so far has really been holding up in some of these memory names. So I want to be cognizant of that. But we do still have the same bias to the downside on these trades. And we might even do 2 trades of the day today, because I was also taking a look at Walmart, was debating on getting on maybe a long zebra on in there. It was going to be about $840 worth of buying power from which we were looking at. So that's something we will consider. I don't remember the last time I've been to a Walmart. I see some guys in chat saying that they use Walmart delivery, all that good stuff. I mean, I honestly have not had a good experience ordering groceries. I think before that, I was ordering groceries from like Mariano's. There's a different couple of grocery stores in the vicinity, and I would order them, and usually it was Kroger delivery that would come and bring the groceries, and that was actually a really good experience. And then they had taken away or taken off Kroger delivery, and I had to start Instacarting the groceries. So it's like, don't even try Instacarting any type of produce. Like, you're gonna get the most beat up tomatoes, you're gonna get the most beat up produce. So when it comes to that end of things, I have really not had the best experience. But maybe this Walmart trade will turn things around. I haven't used Walmart delivery myself, but it looks like they have a pretty efficient process going on over there. But just looking at the zebra here, this one is gonna be in the 29 days to expiration. We can also look into a shorter duration, like the 15 days, see if that's a little bit more attractive. This is a very directional trade, so if you're not comfortable getting on some very directional exposure in such a deep sell-off in a name like Walmart, I would think twice about this one. But this is a pretty directionally, aggressive trade. And with the zebras, I don't like to do anything less than 2 weeks, because it is a synthetic stock position. We don't have to worry about theta decay. We don't have to worry about volatility. We don't got to worry about extrinsic value, which is really nice. But we have to take into account that we don't own these shares. So if we don't get the move that we're looking for in the time duration that we're looking for it in, we could be in some trouble. So looking at selling the at the money, if we buy two of the 70 deltas in the money and sell one at the money, that's going to give us near 100 positive delta on a zero extrinsic back ratio. And in this case, this one's going to be about $300 less than the zebra in the 29-day cycle would be. So that's something to consider, right? You got a couple different options in terms of how much buying power you really want to put up on a trade like this. And then you could also ask yourself, like, is the extra 2 weeks going to be worth it for a zebra trade, right? We don't have to worry about, the gamma risk per se. We don't have to worry about theta decay. We don't really have to worry about those variables. But how much buying power do we want to put up given the time duration that we want to be in this trade potentially? So if I sell this at the money and then I go and look for 270 deltas, or at least closest to 270 deltas, that's going to give us about $848 worth of buying power. So that's going to be one trade we're going to consider putting on some long delta into Walmart. I know, even Chris has been talking a lot about a lot of these consumer stocks right now, but I think Walmart's just too big to fail. So when I see that type of volatility to the downside, it becomes really attractive. Another name that we've really been eyeing lately is SanDisk. And I was just looking at this 29 days to expiration. All of the strikes are $10 wide. It's really a testament to how volatile this specific underlying has been. But looking if we can get something on $10 wide, maybe collect, a third of the width there. Most strategies are pretty expensive in these memory names, right? Because we only have $10 wides. We only have $10 wide strikes. And then to sell a naked put or to sell a naked call in there, it's going to use up a decent amount of buying power. So that's something to consider. But just looking at this, the 1660, 1670, that's going to give me about $3.80. And on something like SanDisk, I want to go out as far as possible. I want to make sure that I can still collect a third of the width, but I do want to give myself as much breathing room as possible. If I was able to set up the strikes near the all-time high, I would love to be able to sell a call against that 2300 level, but that's just going to be way too far out. So this previous swing high at around 1829 will do. That's really what we're going to keep an eye on. And again, maybe we get a pullback. Maybe we don't. I think what's going to be interesting about these memory names is just see if we can at least take advantage of potential consolidation. So we're essentially betting on the fact that the momentum is going to stop for the time being at least, right? Not that we're calling for a reversal, not that we're calling for a full-on correction in SanDisk, but seeing a little bit of a slowdown in momentum is going to be nice. And I think we can take advantage of that. So looking at the 1710, 1720, that's going to give us about a $3.40 of credit. If I go a little bit further out, that's going to give me $3.10 of credit. Where was this swing high at? This swing high was at 1827. So if we can get as close to there as possible, that'd be great. And I think we're going to go with the 710, 1720. We're going to go with the 1710, 1720 because that $3 on order entry that we would collect, we can add that to our break even. So we could imagine that's going to be a little bit further out. So I'm going to actually go ahead and send this one through. I'm still going to entertain the Walmart idea though, because I think getting a trade on in Walmart, again, given the volatility it's seen in the last 24 hours, I think it's worth it. I think it's worth putting on some risk in there. Maybe we collect $3.35. See what we can get. We'll go down to 330, lowest. It looks like that mid price is fluctuating at around 330 right now trading at 325. See if we can catch a fill. We'll go down just 1 penny below that, but if we don't get filled here, we're going to be patient. There we go. We're going to fight for price. Got filled at 329. A little bit more short delta by selling an out of the money call spread on in SanDisk. Look, again, not calling for an entire correction. I know a lot of people are long these stocks right now, but I'm essentially just, again, looking for that momentum to slow down a little bit there, and then we're going to manage the position and go about our day from there. But if you are just joining us for Trade of the Day, some of the other trades that we had put on were things like Apple. We sold an out of the money call spread there. Not too much movement. We have 29 days left to expiration. We were able to collect $1.98. So we got about $300 for the max risk on that trade, but we're not going to risk the entire max loss. And then App 11, this one's been doing a little bit better on the day. Pretty wide markets. It is a $10 wide spread. We collected $335 on this one. So the max loss is going to be sitting around $665 on this one. So I want to pay attention to that. This was one where it felt like we were catching a little bit of a falling knife. But that sentiment has changed due to the consolidation that we've seen over the last about 4 or 5 days in there. IBIT was a position we put on yesterday. This was one where I'm thinking about potentially rolling up that call side, right? We got another leg to the upside yesterday after that initial move in the crypto market. So debating on rolling up this put side. I think we could do some pretty good management in this one here. So let's see if we can roll this call side up, because now, right, our put side, which is the untested side, is, at our 1 standard deviation whenever we look at the options chain, and it's sitting just outside of that expected move for this cycle. So we want to see how much we can collect since we've seen more upwards momentum to the upside, right? If we pull this closer to the expected move or at the expected move on the put side at about 37, we can collect an additional 50 cents of credit, which is attractive. But, we reduced that range on the strangle very significantly just by rolling it up 2 or 3 strikes, right? And this isn't something that I want to go inverted on. So that's something to consider. Maybe we get a little bit of a pullback. Since that call side isn't being directly tested yet, I'm going to leave this alone so that we still have a nice range to play with. So just in case we get that continued rally to the highs in Bitcoin, even if we see some type of pullback, we could use that as an opportunity to maybe take it off the table, take some profit off the table, maybe redeploy the capital elsewhere. That's kind of how I'm looking at IBIT right now. Bitcoin has been one of the most interesting, I think, assets over the last couple of days here. I can quickly check out these Bitcoin futures /BTC. And you know what's so funny? So over the last couple of weeks, I was going around asking everybody their opinion on Bitcoin, right? I think Glenn came by, asked him his thoughts on it. Q came by, asked him his thoughts on it. I always ask Gus his thoughts on it. I asked Chris his thoughts on it, Jermal, Mike, all of them. Just because I want to get a gauge. I want to get a sense for how people perceive this crypto market right now. Like, do we finally get the pop when it really slides into the land of irrelevancy for most people? Maybe, that Trump tweet also helps. But again, was pretty shocked to not see more excitement about this product, given that it was trading around, 60,000. And, whenever we were trading at 120,000, 130,000 on Bitcoin, it's like everybody was ready to sell their left kidney to take part of some of the action here. And now that it got chopped in half, it was crickets. So it's always interesting to see how that human nature and the cycle of emotions always play out. But Bitcoin right now is sitting at about 72,800. Will this hold? I'm not too sure. I know Trump, again, was in a press conference yesterday talking about the crypto markets. He mentioned Hyperliquid by name. Like, imagine being the CEO of a company and you got the president name dropping your company. Like, you know what that means. So anyways, it's going to be interesting to see the press, the media, the new headlines around crypto. I think that's going to give us a better gauge for where crypto is at in its overall cycle, right? We've been hearing a lot about these 4-year cycles in crypto. So we could be on the cusp of the beginning of a new cycle. We'll pay attention to it. But with that being said, we do have a strangle that we sold in IBIT. Got a lot of volatility to the upside. And it's so funny, right? Bitcoin is consolidating for like the last 2 to 3 months. Like, you know what? Let's go ahead and take advantage of this consolidation. Let's go ahead and sell a strangle, undefined risk, get a little bit more credit on order entry. Less than 12 hours later, we got Trump on the news talking about Bitcoin going to be the new reserve currency. He didn't really say that, but that's what I heard. So semiconductors doing a little bit better today. These are some other pretty markets. Look at that. Our SanDisk position, we got $9 in profit, $14 in profit, guys. All right, we could go ahead, scalp this, take that off the table. Now we're going to be patient, but SMH semiconductor position, $5 wide. We collected 220, right? A little bit more than we typically do on a $5 wide. This has about 3.5 million shares traded on the day, 37.5 IV rank. This is another one where the markets are pretty wide, but the market hasn't really made a decisive decision just yet. But I do think whenever we get SMH, whenever we do get a bigger pullback to the downside, I think it's going to help out some of these micron positions that we have on here and things like SanDisk. So the portfolio isn't necessarily, very diversified right now. Maybe we can get on some Walmart and change that perspective. Again, I'm going to be careful catching a falling knife, but if I am going to get involved in Walmart, I don't hate the zebra idea. I think this is something to entertain, especially given the fact that it's Walmart, right? Walmart is way too big to fail. And after you zoom out over here, you can just see how Walmart's been on a steady incline. Get this to load here. What we got going on there? There we go. Yeah, Walmart's been on a steady incline. There's times like in early 2025 where we had seen some pretty decent drawdowns from 104 all the way down to a low of 79. Now we're getting a drawdown all the way from 135 all the way down to a low of about 102. So regardless, I think Walmart is still pretty attractive. We can get on the zebra again for not too much buying power, but we just want to pay attention to how many deltas we're getting on there. But because this is a zebra and we want to stay away from catching that potential falling knife, I don't hate doing the 29 days till expiration. Maybe we get the pop within 2 days, 5 days, and we could have said, oh, we could have chose the 15 days till expiration, use a lot less buying power. But since the buying power isn't going to affect the P&L of our position, right? Just because the buying power is going to be a little bit more for the 29-day cycle doesn't mean we have essentially more profit potential. It's the same exact profit potential. Again, just going 29 days out gives ourselves about 2 extra weeks to allow the stock to do whatever it needs to do, depending on what side of the market that you're on. So I think we're going to take that extra $300 worth of buying power, use the zebra, give ourselves an extra 2 weeks instead of just 15 days, just in case maybe we consolidate at these lows and then we finally get the pop that we're looking for. But that's going to be Walmart, SanDisk. These were a couple of trades that I already kind of wanted to put on today. So I was like, you know what? We save this for the segment, get it on during there. I know the market hasn't really been up to too much today. It's been pretty boring, I got to say. It's been pretty quiet. It's been pretty choppy. Pretty much the same story as yesterday. We got a lot of volatility in the morning. And then after about that first hour of market open, it seems like that volatility is dying down, getting a lot more choppy markets. So if you're somebody scalping the markets, the one thing that I would leave you with is don't be afraid to take your profits a little bit early, especially whenever you see that kind of changing character, changing behavior over the overall market, because these are going to be one of those markets that will frustrate you until you don't want to place any more trades. And I mean, just by looking at this barcode action, I think you get a good sense for what I'm talking about. But trades of the day today are going to be SanDisk and Walmart, right? We got a zebra on in Walmart. We just got out of our zebra by the skin of our teeth on bonds. I didn't expect bonds to be getting this volatile, guys. I thought bonds are supposed to be smooth sailing. We got a lot of volatility to the downside on bonds, a lot of volatility to the upside on bonds. So bonds are moving. Bonds are back. I think that could be a show segment. Bonds are back, baby. But with that being said, I appreciate you guys taking the time. Be sure to stay tuned. We have Chris on the other side of this call. He's going to be presenting us with his trade of the day idea. So be sure to stay tuned for that. And let's see what Chris has for us.
These are my trade ideas of the day. I'm Chris Vecchio. You're watching Tasty Live. What's a sector that's holding up here in this tape a little bit better than others the past few sessions? It's been rough for stocks, particularly for tech stocks. The semi stocks have been pulling back a little bit here. It's been those software names. Software's had a decent bump here in recent weeks. We can point to the move that we had in July, mainly when semis were going down, software was rebounding. The question is, has it run too far too fast, or is there still more to go? Either way, I don't think that matters here because I'm looking at some short iron condors in both ServiceNow, ticker now, and Salesforce, ticker CRM. Both trades are short iron condors in the September 18th expiration, 29 days to expiration for now, and literally NOW. The trade is the 110, 115, 145, 150 iron condor for a 172 credit. For CRM, the trade's a 175, 185. 230, 240 iron condor for 313 credit here. So same strategy, slightly different widths, credits, but basically the same idea here. Software, while having been beaten down, it's rebounded enough. It's not trading like a clean leadership group anymore like it used to. And I'd rather sell the defined range than make the next directional bet on whether or not this rally is going to continue or we're going to roll over at levels where the market has found resistance previously. We can go to the chart here. Ben, IGV had a peak just north of 105. Call it 107 or so back here in May. And while we haven't scaled that yet, there is the possibility that this recovery ultimately does continue. But how have we been able to recover so much ground quickly? And why was this thing even down earlier? I suppose the backdrop here, maybe these aren't names that you've traded before and you may be interested in learning what happened. Well, we have this thing called the SaaSpocalypse, SaaS-pocalypse, software as a service. It sounds dramatic because it's dramatic, right? This is not the apocalypse. The old software model was simple, though. You sell subscriptions, more seats, you raise your prices, you bundle more features, and you keep your gross margins high. So investors were willing to pay you for durable cash flows, effectively in perpetuity. It was recurring revenue that was on the books because mega companies were continuing to use things like Salesforce or Workday or what have you. That was the entire business model, though. Sticky customers, predictable revenue, high margins, and long duration cash flows here. AI really changed the debate with some of the models that came out at the end of last year going into this one. So the bear case is that AI can eat into these economics of software, right? If a company can use AI agents to build out internal frameworks, automate tasks, build out bespoke software, replace point solutions, then why on earth do you need to pay a company like Salesforce for all of this? The number of seats shouldn't determine how much your usage is. It should be determined by how much tokens you use or how many tokens you use. The old model looked bulletproof. All of a sudden, it looks like it's dying. The seat-based pricing was really vulnerable here. This was the big point of conversation at the start of this year, and much has happened, so may not remember this. But the CIOs were starting to ask why they need 5 different tools. Why do I need a tax system? Why do I need an HR system? Why do I need a sales management tool? When can I have AI sit on top of the workflow and do all of those jobs cheaper infinitely? So this is where that February report, going into March, we have this Citrini report that came out, which obviously not the cause of the market decline, but it certainly best articulated what was happening at that moment, right? The concern was moving from AI helps software companies become more efficient to AI is compressing software margins, it's reducing seat count, and quite frankly, it's going to turn just some of these full-on applications into features within a broader LLM. AI throughout 2025 was a tailwind for software, increasing efficiency, helping with margins. In 2026, that just wasn't the case here at the start of the year. So yes, since the Citrini report, this thing has rebounded meaningfully. It's up over 33% from its lows when you're looking at IGV, the software sector ETF. So the market's trying to figure out where we are. And quite frankly, where are we? We're basically at the midpoint of the lows and the highs. Okay, so where does that put us for these two trades here? Salesforce and ServiceNow sit at the center of this debate here. These are some of the bigger names in the SaaS space here. They're large enterprise platforms at the end of the day. They have real customers, real revenue, real cash flows, and real strategic importance in the broader like Fortune 500 business world here. But they're also the businesses that investors are stress testing in terms of where AI can disrupt them the most. How much of their workflow and their business model is actually a moat that's defensible is really the question that's going through everyone's mind. Do they have pricing power in perpetuity into the future? Probably not. They probably don't deserve to trade at the same multiples they did back in August, September, October of 2025. But even when the companies are feeling high quality, it's all of that noise and nastiness in the background that makes these stocks feel like they just trade heavy, even on those up days here. So I'm not looking for a directional call right now, right? I'm thinking that this thing maybe has run its course. Perhaps that's a bet on semiconductors itself, that a semi's up, software down. Either way, though, I'm not looking for a directional call right now in the short term here. I don't think they are necessarily going to explode higher. I don't necessarily think they're going to break down significantly. I think we finally got back to kind of an even keel point where maybe the ships have steadied on the water and we know which way the wind is pitched. So this is where the iron condors come in for both of these names. All right. With an iron condor, we're selling a put spread below the market, a call spread above the market here. On the downside, we want to sell the put closer to the stock price and buy a lower strike put for protection. On the upside is the exact opposite. We sell a call closer to the stock price and we buy a further out of the money call for protection here. Our short strikes in these iron condors help define our range. The long strike defines the damage. The total credit is the maximum profit. So the trade works out best when the stock stays between the short strikes and implied volatility comes out. And that's really the whole playbook whenever you're using iron condors here. So that's the backdrop for the fundamentals. That's the backdrop for, rather we'll call it the industry, the sector at whole. So let's just go through the actual trades here. ServiceNow's iron condor at 29 DTE, the September 18th expiry is based around the 145, 115 short strikes here. Going out $5 wide on either end, selling the 145 and then the 110, the 145 call, the 150, take us back, selling the 145 call, buying back the 150, selling the 115 put, buying back the 110 here. And so when we're talking about a $5 wide strike, since the standard option controls 100 shares, we're talking about $500 of potential risk here. And on this particular iron condor, I was able to receive $1.72 of credit at the time it was put on. Right now it's in at $1.77 here. So with that $5 wide strike, thinking about where I've entered here, that means I'm risking $3.28 or $328. So it's a nice little risking 2 to make 1 at a 60% probability of profit, sitting just around the expected move. 115 is just at the expected move. You go out to 145, just on the other side of it here. pretty wide range for 29 DTE, right? ServiceNow can move around a good deal here. If it drops 10%, for example, from where we currently stand in the next week or two, I'm still going to be above my short strike. If it rallies 10% over the next week or two, I'm still going to be below the short strike here. And so $1.72 fits the bill for a $5 wide strike. We usually talk about how you want to go, for a third of the width of the strike there when you're looking at something that's short premium. And sure enough, what are we looking at right here in these risk defined trades? $5 wide, at least $1.67, $1.72, $1.77. Right now it's back to $1.72. It fits the bill. So if we get any more upside move, it feels like relief rally. I'm less worried about this thing moving aggressively higher than I am it reverting back to the downside if semis rally or there's some new open AI model that comes out. I should say open AI as in not ChatGPT, but an open sourced AI model like a Kimi update or something with DeepSeek here that really changes the conversation again. So yes, bounces have been violent, but looking for more than a 10% swing in either direction, that doesn't need to happen here. And because we don't need this to go down to zero to enjoy the benefits or reap the benefits of this potential trade, we're looking for a decay down to, we'll call it 86, 87 cents or so, half 50% profit of 172 there. So if we get another week of choppiness, a little bit up, a little bit down, time runs off the board, volatility comes in, we could easily take this off at half profit and not worry about a 10% swing during that 29-day window. It could go down at like 22 days, 21, et cetera, et cetera, et cetera. So we can go over to CRM now because it's the same exact concept effectively. The Salesforce Iron Condor, though, is a little bit wider. Instead of going for $5 wide strikes by virtue of what the market makers are offering here at 29 days to expiration with 230 and 240 strikes, no 235 or 225, I decided to make this a $10 wide. We're looking at the 175, 185 put spread side as well as the 230, 240 call spread side here. Credit received was 313 when this was put on. Right now it's trading in at 310. So with a $10 wide strike, since a standard option controls 100 shares, we're looking at a potential risk of $1,000 here. But because of the credit received, we are now looking at overall 1,000 minus, we'll call it 313. That gives you $687 of total risk on the position, or $6.87 before fees and slippage here. So the lower break even, 185, you subtract 313 from it, you get to 181.87. For the upper break even, it's 230 plus 313, and that's going to give you to 233.13. So there's our CRM map right now. The best zone for CRM is between 185 and 230, and it has some wiggle room again. At $206 right now, it can go up 10% or so, or down 10% and still be sitting within the insides of the short strikes here. Salesforce is also a little bit of a different backdrop than ServiceNow, which is why I wanted to give a little bit of a wider strike here. CRM is definitely a major enterprise platform, just like ServiceNow, but the investor debate around this name is a little bit more mature. They've seen significant waves in their history in recent years of margin pressure, activist involvement, growth skepticism, AI repositioning. Investors have been going at this company to instill discipline, really fiscal discipline, if you will, for a while now. The company being forced to have to clean up its balance sheet and really justify the way that it's making money, this has been a constant talking point for the current management team. So whereas the other software companies, they're kind of just getting it. When you look at Salesforce, this has been part of the cultural zeitgeist, the financial zeitgeist. If you turn on CNBC or Bloomberg, look back 5 or 10 years, they're constantly getting knocked about whether or not what they're doing is sustainable. So we're trying to figure out right now is CRM different than ServiceNow? Sure. ServiceNow is more of a growth company. If you want to think about this in different terms, CRM is more of, I want to call it value, but it's more mature, right? It's the IBM, if you will, between the two. So maybe this is why the Iron Condor makes sense. The stock still has some room to react here. If it jostles around in its recent trading range, it starts to break out above 209, 210. This begins to look a little bit more like a bottom, especially if we can clear out that high that we had here in May. And at that point in time, because we'll just be moving through the midpoint of the trading range, 230 is a while away. This could be lifted, removed, taken off without any significant damage done. But I'm going to be cognizant of the fact that it does appear that software is trying to maybe put in a bottom. If there's a place for it to continue higher, this would be it. Otherwise, it's a nice place to find some resistance here. So yes, choppy price action. It has been happening, general drift to the upside, but it's thanks a lot to what we're seeing in the news flow. mean, every single day we get an AI piece of news. This displacement, data centers, this, data centers, that, expanding supply, Chinese competitors. We've heard all of it, everything. And yet these things continue to just do what they're doing. That's one of the reasons with all this noise out there, I'm not really keen on these naked directional bets right now. So let's allow the argument to continue here. The broader market can debate ServiceNow, CRM, figure out what's the value of these things. Is SaaS apocalypse real? Is it overstated? Is it just a fun report that we read about in Citrini, which if you read about his report, a lot of what he's saying in terms of what would happen for the economic consequences, we're kind of moving down that path already. So again, good thought exercise. I'd encourage people to go check it there. But let's just take a step back. What are the actual trades? Iron Condor in now sold for 172. We're looking for a reasonable profit target, around 50% of the threshold there. So we'll call it 86, 87 cents or so. If we're looking at CRM, the same idea applies here. If we sold it for $3.13, we're looking for maybe $1.55 to $1.60 in profit as a turning point before we can take the trade-off here. In general, whenever you're short premium, when you get to a 50% target threshold, as research from our own research team has showed, Julia Spina is actually tweeting about this the other day. When you get to 50% profit before you get to the halfway point of your decay curve, you get out. There's really no benefit for sticking around much longer. The pace of gain slows down and you start to bear a lot more gamma risk. So for now, 115, 145 are your precious points. For CRM, it's going to be 185 and 230. That's all we have. Software names, Iron Condors. We're done here. They'll be up on the follow page shortly, but you're going to continue watching Tasty Live. Follow me on Twitter at @CVecchioFX. Stick around though. Ilya Spivak up next.
Well, the Treasury certainly had the impact that they were looking for. The amount that they offered up wasn't even that big, doubling their buybacks of off-the-run, tiny, illiquid, old, stale bonds, where a difference from $2 billion per operation to $4 billion per operation actually makes a difference because they're terribly illiquid, is nothing like moving the entirety of the bond market, at least at the long end. Certainly, the numbers don't add up mechanically. We've got something on the order of 1.2 trillion that trades in the cash treasury market, never mind the hundreds of billions in the futures, and another 4-5 trillion in repo every day. So these are not big numbers, but the essence of what the Treasury was trying to telegraph, that certainly caught the markets. And we can go straight to the charts here. Of course, the trade we've had in precious metals has been working extra well in this context. Obviously, we did not think that the Treasury was going to do this. Who could have known? But the market is ever wise and the price action ever telling. So, of course, the logic we've been following here is since July, precious metals refused to fall in an environment where real interest rates were surging. And we've been looking at the TIPS ETF here as a way to say, well, look, here's July. This is that move at the end of June. And then all through July, you have this strong fall in the TIPS ETF, that's a basket of real interest rate securities or Treasury inflation protected securities, if you want to break apart the acronym, across various maturities. And you can see that there's a strong rise in real yields, which, of course, as you would with bonds and yields, looks like a steep decline in the ETF. Now, that's an environment where precious metals should feel horribly because they yield nothing. So when real rates are surging, they should be deeply unattractive. But then all through July, they pointedly did not do that. And so what we're seeing here has found a catalyst, but what we were looking for was the larger story that really rates were probably overcooked to the extent that the market was over extrapolating Fed rate hike potential because the economy was already starting to weaken under the surface. And of course, the economic data that we've been seeing really since the beginning of August has told that story. Growth expectations were coming in, rate hike expectations were tellingly coming down. And so the price action here started to make sense. And then what the Treasury did, of course, was essentially job owning in a way that introduces action, but the action is relatively small relative to the intent and the signal of that intent behind it. So what we've just seen clearly had strong reverberating effects across markets because they understood what the Treasury was trying to say and ostensibly decided to follow on. So at the very least, they heard and said, right, well, you can't force us to move markets with this pittance of an amount, but we do understand what you're saying the day after the long bond yield jumped to the highest in 19 years. You're going to try to signal to us that this is untoward and you don't want it, and you could lean in and you're willing to do that. So, in a sense, Treasury Secretary Scott Bessent showed his stripes and said, look, here's what we're going to do, and we're not going to be shy about it. And we could ostensibly do more, but what you've learned here is that we can come out of left field and do stuff and catch you by surprise. So the market's heard. Gold had a massive rally, as we can see here. It continues to extend. We've been adding to this position on the way up. So when it broke here, we added. When it broke here and then held this former support, then turned resistance, now turned support again, we added some more. And then yesterday, when it took out these highs, we added some more. Now, it back tested here a little, but as we can see, it's holding relatively strong and seems to be unwilling to have much of a correction. There's, of course, the story in the bonds themselves, where we can see we've had a little bit of a pullback after yesterday's jump, but for the most part, the move is holding. And of course, here was that pop in yields, again, inverted of the bonds, to the highest in 19 years. And it couldn't even hold in today. And that was, of course, the signal that we were looking for to say, well, if we can't even hold the break, and we got positive RSI divergence here suggesting momentum and the down move is fading, let's explore the top side. And so we put on a TLT call vertical here, still sitting on it, plenty of duration in it. Let's see how it goes. The spot where we can actually tweak some things here is in silver, because unlike gold, which had itself a little bit of a pullback as we saw today, even though it's not especially holding, we have a much more convincing extension in silver. And if we look here, I mean, it's basically the same story, the story of diminishing support for yields. We can see here, as gold was holding in its range, so too silver was holding in its range through July. And the same logic that might have applied to gold selling off when real rates were surging, virtually the same thing applies to silver. Now, we're looking at these levels as they start to kind of stair step and present themselves on the way higher. And today, just zooming in on the price action here, we can see here was this digestion. And while silver didn't have the break higher that gold had yesterday, now it seems to be doing it. And looking at the 4 hour, just to give ourselves a sense of extension here, here's the test of the range and the break. On the 8 hour, it looks even more convincing. So here we have it. This looks like a place to add, and so that's what I did. I have this exposure through SLV, through call verticals, and we can see here, there's SLV, looks very much like the very same breakout here. There we go. Here's our former resistance, break, holding as support, and today a further break. Now, a realistic target here might be something like our initial trade, we should say, had an initial target of 65 for the top part of the vertical. So that's about right here. So somewhere in here is where we're targeting the initial vertical. The next one on the ad could probably aim a little bit higher. And so I'm looking for this next shelf here at 70. And so the way that I've structured it here is, you can see here's the two positions, one expiring in 41 days, and this is the one that I added here, 57 days out, looking at essentially coming in at market and buying the call here, the 62 call, and selling the 67 call. And as we can see here, if we structure it this way, we can get a sense here that, and of course, it's not going to line up perfectly because we already have the trade on. So it's going to think that we are attempting to neuter it. But when you put it on, you end up with slightly better than 2-to-1 risk rewards, or something like 2.8 to 1 reward versus risk. So if you had to put it on here, here's a comparable setup. You can see here you're a little bit better than 2-to-1, and of course, if you shift it up here, you'd have slightly different pricing, but the general risk reward setup would be about the same. So that's the trade that we've added here, going into the rest of the day, because it does look like the story has continuation. So as we look at what else might be on the board here, because this isn't the only thing, if you're looking at the dollar's expression of all of this, needless to say, the dollar sold off aggressively on the back of this news. Here's the dollar index, and we can see here was a level of former resistance turned support right here. This shelf, we broke through that. We're holding a bit here at this underside, but it looks like we're struggling, as by the way with gold, to even have any degree of correction. We look pretty soggy here, just pinned at these levels. Some of the major crosses have made their initial move. Others are still holding back. And perhaps the most interesting one on the menu currently, and we're going to look at a spot chart here, but you can just as well look at 6S futures. And when you look here, it looks like a very clean head and shoulders pattern. Ultimately, the name of the pattern is kind of irrelevant, but this is what one would call what we're seeing here: shoulder, head, shoulder. And this is its neckline that sort of confirms the break. And whether you want to call it a head and shoulders, or you want to call it just, oh, look, here's a horizontal level of support, you can clearly see how markets are responsive to these levels. So we came in here, it acted as resistance, we came off, we come back here, we retest that, So these are kind of very straightforward levels in here. And we can clearly see we diced through it, and now we're retesting the underside. So if you wanted to put this on as a spot position, this might look like a short. If you wanted to do exactly the same thing on the futures side, here's 6S futures, it would be exactly the same thing, only of course, because what this is the CHF USD future. So the other one is USD CHF, dollars in franc terms. This is francs in dollar terms. And so you would look at this as a buy right here. So here's the break. And then as a reasonable target, there's a couple things you might do to measure it. And the way that you might approach it here is just take a simple measure of the distance from the neckline up here to the tip of the pattern. And then you can extrapolate this higher and say, okay, on this, you would be going back up to about 128, just a little bit above it on the futures. And so testing this underside. We did the same exact thing because you wanted to do it in spot. And for the record, I am doing it in spot because the sizes are a little bit smaller and so a little bit more forgiving for position management. Take exactly the same measurement, and lo and behold, you're right into these lows here at about 78, just under on the spot. And that could be a way to add exposure to this short dollar idea, all of which kind of stems from the same general narrative. Same as long gold, long silver, same as long bonds. And that's what we're doing for today.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV range.
Mike, what does it mean to be assigned? When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately, has turned into 100 shares of long or short stuff. What does a green scratch mean? Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1, and Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
Good afternoon, Tasty Traders. I'm Tom Preston, 1 p.m. here, Central Time on Thursday afternoon. And let's do some trades and check out the markets here. Okay, just really quick. Okay, nice little sell-off. Well, yeah, okay, they're down 0.62%, but I'll take what I can get. It's SPX is down 48 bucks, 47 and a half. Let's call it 48. Let's round up and be generous with the sell-off. Interesting, it's just kind of this risk-off environment. Let's just check out gold, for example. Let's check the futures. Gold up again. I do not have a position right now in either gold futures or GLD. I was going to put one on. Maybe I'll do one today just to get in the game. And I want to do the D's, or no, excuse me, the V's here. What are those? The Octobers or whatever they are, or the Novembers. To trade, to get in the right cycle with these things. But in any case, looking at gold here, what's the VIX doing? The VIX, come on. VIX has popped up a little bit, almost at 16. Almost at 16. I'm short some put spreads in there. Let's check where the future's at now. Future was at about 1780 when I checked it earlier this morning, about 845. Let's check it now. Let's go into the 17F strike again. Buy this, sell that. Buy the 17F call, sell the 17F put. What it does is create a synthetic future price. Again, just when we talk about synthetics, that's the old trading term, option trading term. Before we had calculators or option pricing computers, used to base all our pricing off of put call parity. And that is the theory that keeps arbitrages, option prices in line with each other, or at least across strikes, calls and puts. Boxes do in between strikes. So higher to lower strikes, that's a box. Spread that keeps those in line. The calls versus puts at a particular strike, that's kept in line through the put call parity arbitrage, conversions, reversals. So if I just buy this 17F call, sell the 17F put, that is synthetically, that will act just like the P&L wise, just like the long September future. So what I do is I take this debit here, 37-cent debit, add it to the strike price, 1787. So it's a little bit higher. The futures are a little bit higher. It takes, well, let me restate that. A big move in the VIX results in a smaller version of that move in the future. The way the VIX typically responds to a change in the market, the spot VIX, the cash VIX, which is based directly off the SPX option prices, moves, as I say, first and fastest, right? So it will respond immediately and will go up $1 in this case, right? So the cash VIX, which you can't trade practically, okay, and you can't really do that. The cash VIX has to spike higher, and then all the further out stuff like the futures, the September futures, the October futures, the Novembers, Decembers will all move up. Most of the time, they'll move up, but less. So this is up $1. This future is probably up, I don't know, maybe 50 cents, something like that today. You can actually look at that. Let's actually look at that. Let's do VX, Schwartz, VXU26. It's up 29 cents today. So I was wrong about that. So the spot is up $1. These are up 24 cents. How about the VXVs? Do we have the VXVs up? The Novembers are up 4 cents. You see what I'm getting at? VXZ26 is unchanged. That is the nature of the VIX complex of products, okay? So that's one way of looking at it. So let's get back into the SPX. Let's do an SPX trade. And by the way, I have, point picture, background should be more of a rancher. So the production team, they're trying to make me look good, which is really hard. It's, they have to pull out all the stops to make me look presentable. And, it's okay. And we pulled in some people that have backgrounds on Madison Avenue, working for the big publications like Vogue or GQ, stuff like that. And they said, oh my God, we get a challenge for you, Tom Preston. They all shook their heads. But anyway, they're doing the best they can. I could take some images of around here as I'm looking at the ranch. It's attractive, but it's a little bit hard to manage video wise. In any case, here's what I have. I have the, you want to take a look at Dell, Crystal? All right, let's take a look at Dell. And while we're doing this, while we're chatting with this, I have the YouTube channel open and I can see your chats. So don't say anything mean because I can see it. And if you have any questions, I'd be happy to try and answer them. If you have anything you want me to take a look at, trade-wise or otherwise, I could do that too. So, Crystal, you want to take a look at a Dell trade? Let's do it. Let's take a look at a Dell trade first. But right now, I'll put this out to you. What do you think towards the close? Do we want to be bullish or bearish on the SPY or the SPX? I've had some good luck with whatever you guys all come to a conclusion with. And I pushed that on Twitter a couple of days ago saying, yeah, you guys came through with another winner. So let's see. I'll wait for that. Let's take a look at Dell, Crystal. Dell Computer, 71% IV rank. Earnings coming in September 1st. Let's check the skew. Let's see what we get for one day. Let's see what the kids will give us for one day. A lot of open interest, Crystal, in Dell. So 1,800 contracts, 2,000 contracts, 1,400, 1,900. Decent liquidity for a 400. This is the context, right? $433 stock, 72% overall vol. I don't blame the market makers for keeping these 420 puts 10 cents wide. So would I. Okay. Especially for an individual name. So let's just try. What do you think? Crystal, do you have any? Crystal, Crystal's bearish. Thank you, Crystal's. All right. So Crystal has the one and only vote for the SPX right now. Bearish. Might have to go with Crystal. But Crystal, what do you think? Any opinion on Dell? 433 stock price, right in between 432.5, 435, very convenient. Down 2.5, up 2.5. The 430 puts at 520. The 437.5 calls at 530. Pretty even skew. What do you say, just for kicks? Let's do an iron condor at the edges. There's a little bit more skew in the upside here at the edges of the expected move. 2.5 points, 5 points wide, 80-cent credit for that. So 2.5 divided by 3 is approximately 80. So that's a decent credit for that. I like that. Let's ship it. Crystal, what do you think? Iron Condor, let's do it. Less talk, more trade. Filled at 83 cents. Filled at 83 cents. Not bad. All right, let's go back and wait for anyone else to weigh in on the SPX. And let's just see what we're getting. If Broken Wing Butterfly, SPX, oh geez, SPX. Crystal going for the challenge. Broken Wing Butterfly. Well, here's the deal. Okay, here's the deal. Let me set up the put butterfly. Put Broken Wing Butterfly for you, and we'll see what it looks like. Here's the regular butterfly, 40, 45, 50, right? 1 by 2 by 1. I'm going to drag this down one strike. 50-cent credit. That might be an interesting trade. I like that. Normally, I'm not getting that. Let's take it down one more strike to see what they think of my little strategy here. I just did something wrong. First day with the new hands. Sorry about that. Let's do this. Quantity 2. Get off of there and then buy this one. 20-cent credit. I don't like that because here's what I want to do with these broken wing butterfly things. What Broski's bear, Cynthia's bear. So here's the thing. I manage this by buying back the embedded vertical, and it's tough to buy something back when I sell it for 15 cents. This, a little bit more reasonable. Let's just see how the call side's doing. Just for the sake of argument. Come on. Clear trade, buy. and you got to click on it again to highlight it. See how it's highlighted? See how it's grayed out here? Now that controls only that strike. And I click on it again, and I change the quantity. Then I click on it again, buy that call, 75 cents, try it, 60-cent credit. You know what? Let's do both of these. Let's do it. I can't do it. I can't do it all as one. Let's do the call side. And we're going to have one winner, right? Hopefully. Let's do this one. 30 cents. What's it right now? Yeah, 30 cents. Review and send. Come on. Let's do it. Let's do. I'm not getting it. Let's do the put side. Let's buy the 50s, sell 2 of the 45s, and buy 1 of the 35s. Let's do this 30-cent credit. See if somebody wants to play. Come on, kids. Yeah, pause embarrassed, which means it'll be. Yeah, no kidding. Isn't that the? Hey, take a fill. Told it for 30-cent credit. So here's the deal. I'm going to be watching. And if anybody needs an explanation why, I'd be happy to explain it right here. I'm going to be watching the 35-40 put spread because that is the embedded short vertical in this broken wing put butterfly. Okay? In this broken wing put butterfly. So if the regular butterfly is the 40, 45, 50, but I pulled this down, that is the embedded short put spread right in there. So I'm going to be watching that. If I did this unbalanced butterfly for a 30-cent credit, if I can buy it back for less than 30 cents, in other words, if I can buy this 35-40 put spread back for less than 30 cents, I'll try maybe 15 would be ideal. Then I'll have the 40, 45, 50 put butterfly for a credit. Means I can't lose on that trade. So that's what I'm going to be watching. In fact, just to show you, I'm going to buy this, sell that as an order, 65 cents. I'm going to route this at, let's say 10 cents. I'm going to see, in case I get filled while I'm not looking, just so I can see what the price is. So what I did, so right now it's trading at about 70 cents. So I'm away for that. But if time passes and this thing doesn't sell off, might be able to do it. All right, let's get back into it. So did we do anything on Dell? Filled on Dell. Let's go back into some other stuff that I'm looking at. Netflix. I haven't traded Netflix in a while, but I've had some pretty good success with Netflix. And I was did a video today for the YouTube channel. If you're not watching that YouTube stuff, if you're kind of new to options or want, see how long-time traders view markets and stuff like that, go to our YouTube channel and you can pause things, rewind, watch again, that sort of stuff, if you want a little explanation. So it's up today. Market's down. Netflix is up. Apparently people are watching videos again. Stock is, has been pulling itself up off this. This is when earnings happen. Stock's been on a steady uptrend. Let's look at the skew. Charts don't mean a whole lot to me. If they do to you, that's great. I look at the volatility skew. So I was on earlier with Chris Vecchio doing confirm and send, and he pulls out all these cool things in the charts, moving averages, channel, blah, 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 levels, this, that, and all this very cool stuff. I don't understand it. And that's okay. There's room for both of us, but we both arrive at basically the same trade. A little scary, but 80.5 right here, in between 80 and 80.5. So here's how I look at skew. Take the out of the money put. That is, I look for equidistant out of the money. So the same number of points out of the money. So let's say down 3 points, 80 to 77. Ask price and ask price to ask price. 177 puts are 191. 81 calls, 3 points out, 84. Yikes, that's a pretty steep skew. So the equidistant calls is 84 from the equidistant to the 77 put. 77 puts $1.91, 84 calls 240. 240 is greater than 191. Skews pointed to the upside. Let's look at a put spread. Volatility is relatively high in here. Not great. 27% IV rank. That is a place to start. That is right on the edge of viability for short premium. Individual volatility, 34%, about 2 times what the VIX is. That's one way of thinking about this. Let's go to the chart and look at this line here. This is the volatility line, and this is when earnings spiked, volatility spiked up with earnings, then crapped out, dropped, the number comes out, stock drops, vol goes down because the excitement's over, the uncertainty is over. When there's uncertainty, volatility goes up. When there's more certainty, volatility comes down. And right now, volatility has been fairly stable recently. Even the stock's rallying. Skews pointed to the upside. Let's try a put spread. So what I do to start, I have the OTM percent loaded up here. These are probability of expiring worthless. Okay, that's what that number is. So I start with about 65 to 70%, that around that area. Let's do the 77s. Sell that put. Now the problem is if I just sell that put naked, $1,200.57 of buying power. I don't want to do that. It's a lot of money. It's too much money for this put. I don't like Netflix that much. And notice I'm not really using the expected move out to 43 days. I don't use the $6 number. I rely on the probability numbers here. If I go down and buy this put here, the 75, 70, 77, I get 58 cents. I like to collect a third of the width of the strikes. That's right on the edge. Let's take this down to the 36 days. And see, I'm not really giving up a lot of credit by doing that. Let's do this one. 29 days, buying the 76 put, selling the 78 put in trader lingo. That's the 76, 78 put spread, selling it. 61 cent credit. What are my metrics? What are the numbers that I care about? 76% probability of making half of its max profit. Max profit is the credit I sold for, 61. So half of that's about $30. 76% probability of making $30 on this trade over the next 29 days versus $140 of max risk and capital requirement. $30 divided by that is pretty high. Okay, that's a pretty decent return on capital, positive theta. Let's ship it, 61 cents. Filled. That's how I find trades. Do I know anything about Netflix? No, I just look at the skew. That's it. And I do defined risk trades because anything can happen. The stock could sell off. I don't know. I don't want to take massive amounts of risk on a bullish trade in Netflix. Let's go to the watch list. Let's see what we have. Let's check out silver. Silver, I did a cherry bomb yesterday, and it was up overnight. I was going to sell a put vertical in there. I was going to, and if you're not signed up for the cherry bombs, go to tastylive News and Insights. And sign up for the cherry bombs and cherry picks. I do the cherry bombs every day. Send those out with just a trade idea and the rationale for doing that trade and the relevant metrics, just like I'm doing here. The cherry picks come out once a week. So I was going to sell this. The problem is, back when I was looking at this last night, I was getting 60 cents for it, 65 cents for it. Silver's up, obviously, so the credit of this thing dropped. I still want to get in here. So $61, excuse me, $61.33, right in between here. Let's just check the skew. Dollar down, dollar up. So 61 to 60, 230, the 60 puts are 233. 62 half calls are 267. The skews to the upside. So if I want to get a third of the width of the strikes, I'll pull these strikes up until I get it. So the 56 half, 58 half gets me there, 61 cents, kind of close. How about the 59, 57? A little bit better. So this is just a 2-point put spread. I had to drag my strikes up 2 full points to get that credit. Volatility came in a little bit. But again, 27% IV rank. Okay, it's right kind of in the low end, but 48% overall volatility. And it's not a stock, but still it's 3 times higher than the VIX. So if I sell this, 74% probability of making half the max profit, $35, $36 versus $133 max risk. That's how I look at the metrics of the trade. Let's ship it, see if it get filled. ETF, Netflix was elite by 2 weeks ago. Oh yeah. All right. So Crystal, here's what I did. Everybody's coming in, bearish trade in oil. All right. Let me take a look at that, Sea King. See, I like, this is what I like. It makes it easier for me to find trades when I know what you folks are interested in looking at. Sometimes you send me something, tell me something that's like, I can't trade it. It's too illiquid. That's the only reason that I wouldn't trade something. And if you guys have an opinion, bullish, bearish, neutral, let me know. I don't care. It's as good as mine. Right? I'm no kind of, it's not like, oh yeah, look at all these numbers and I think it's going up or down. I don't do that. I look at the skew. I'm an option trader. Okay. So silver, filled on silver. Let's do, what is the idea? Let me go through this stuff. Yeah. So Crystal, what I did was I rolled that 8-day. Let's take a look at love. And here's what I did. So I had this put on, this 45 put. It was killing me. I sold it. Stock collapses. This is anybody wants to look at this. I sold the put here. It crashed on me. Okay, I stink. Okay, whatever. Okay, it's a losing trade. So what I did, here's the metric that I look at. It's a losing trade. I get it. I don't need somebody to say, oh, TP, you're losing on the love put. I get it. 45 puts, the extrinsic value is basically 0 on these 8 days. This is the one that I was short. So holding that put, it was all intrinsic value. I wasn't getting any positive theta from that put. So what I did was I rolled it out to this one with 29 days. And I sold the 45 put here. Why 29 days? Because now those puts, the extrinsic value is about 34 cents. That generates theta. Let's look at the theta really quickly. So now I'm generating $1.77 per day on that short put. I'm okay with that. And yeah, I've got some deltas to it. Okay, fine. And maybe, I'm still bullish. And then what I did against it, and I know I said, oh, you never do this. Yeah, I did it here. I sold a front month call against it. So I'm treating that 45 put as long stock in a way, right? It's got enough deltas for me to think of it as long stock. And I'm just selling it out of a money call against it with 8 days. So that, Crystal, that's why I'm managing it. Dr. on TV, those Vogue people got you looking debonair style with a military grid. Yeah, these are these shirts that they're very lightweight because it's 100 frickin' degrees outside. I don't go outside very much, and so I am grateful that I'm a trader and I get to push buttons inside all day. But when my wife says, hey, go check something outside, take the dogs out or whatever, it's brutal. And these shirts are they're lightweight and they're relatively inexpensive. So if I get dirt on them or whatever, I don't really care. But thank you. I'm trying. I've got my tuxedo at the tailor. We might be seeing that in coming up here. So let's see. What else? Netflix was a leap buy weeks ago. Yeah, I mean, you could buy. Buying a leap call. So what you could also do in Netflix is the volatility is relatively, you could go buy, 57-day call out here, the 70 call or something like that, and then sell, a 22-day call against it. So you could do a diagonal like that. You could certainly do that. ETHT. What is ETHT? ETHT. Yeah, that's a lot. ProShares Ultra ETF, Ether. I don't know what that is. What's the liquidity in this thing? No, those markets stink. Let's do those. Cry out for a bearish trade in crude oil. All right, let's play. Let's go 0D to nothing in the zeros. It's probably, is it closed now? It might be closed. Let's do 86 right here, down a point, up a point. Yeah, the skew's tough here. It's right on the edge. Let's give ourselves some room. Sell this, buy this. And this is a big product. Okay. This is a big product. Let's see if we can get something in USO. It's a little bit easier for people to manage. Let's see if we get this. Buy this. No, I'm not getting anything in there. Volatility is too cheap. Let's go here. I'm not getting, let's go in here. Let's buy the 36 put, sell the 34. What are the metrics on that? Negative theta. I don't like that. I'm gonna have to play around with crude oil. I'm gonna have to Sea-King, I'm gonna have to play around with crude oil. Maybe we'll check it out tomorrow. I was not thinking about doing it today, so I didn't have anything set up. I'm not trying to dodge it. It's setting up the trade for me. The trade is more important than my opinion. Oracle, I wanted to do a trade in Oracle. Walmart, I was also looking at. Let's check a trade in Oracle. Oracle's been just a dog. It bounced up a little bit. I'm thinking, let's check the skew in here. I had this trade loaded up to 141.82. So let's call it 142, down 2 points, up 2 points. The skew is to the upside. I was loaded up the 33.35 put spread for 56 cents. Let's pull it up one more strike and see if we get 60 cents. Yeah, let's do a 15-day trade in Oracle. 34.36, 72% probability making half max profit of about $35. No, about $32, $34 versus $133 of max risk. I like it. 67. Oracle. Nothing. Loading BE on the dip. Bloom Energy. Why not? Can we get anything for one day? We can. Let's do this. Let's buy the 90, sell the 92 half. I'm going to take 40. It's not as much as I want, but let's try Bloom Energy. Let's do it. I like up and down. 42. Filled. I'm joining you with that. Let's see. TP, what is this high dispersion? Core 3M where 90-day aspect volatility goes up and how do we trade this high dispersion? So I was looking at Core M. And I don't have a lot of time to do this, but it's the whole idea of volatility dispersion is a measure of volatility of individual stocks versus the S&Ps. I think that's what Core 3M is. I'm gonna have to look more closely at that. There's all these indexes, and I can't remember what it is exactly. But the whole idea of dispersion is where the risk of the individual components is higher than the index that's based on those components, and you're seeing risk packed into the stocks that isn't being reflected in the index. At least that's the way I interpret it. Dr. Onan, I got to sign off. They're pushing me off this show because my makeup is starting to fail. But let's talk about that tomorrow. That's a good topic, and I do like it. And I know I've talked about trading individual stocks to capture high IV. So with that, we got some trades done today really quick. Let's see. We got filled on Bloom Energy, a working Oracle, filled on silver, bullish trades on silver, bullish trades on Bloom Energy, bullish trade on Netflix. Filled on our SPX, filled on Dell. Good work, folks. We got a lot of trades. Thank you for the trade suggestions. None of this is a recommendation. If you do decide to trade this stuff, you're doing it on your own, and please don't take any more risk than you are comfortable with.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
We're back to the futures. I'm Chris Vecchio. He's Ilya Spivak. This is Tasty Live. You're watching Back to the Futures. New show here. We're going to do this 30 minutes a day now. We got Gus back, Ilya. Finally. Yes. Yes. A little bit less of me in the afternoon, a little bit more of Gus, which is what everyone wants, including myself, which is good news here because stocks.
Hashtag gains by Gus. Thank you.
Very much. Rough day here for stocks. Treasury Secretary Scott Bessent is back at it, Ilya. Did you see that?
I did, and I was very encouraged. Here's why. Not because of what he said, but because he came out and said, yeah, we weren't trying to do anything to twist the market's arm. We wanted to present a signal. We wanted to show the market's intent, which is, of course, exactly what you and I were talking about. We're like, $4 billion. What's $4 billion? Just the cash treasury market does 1.2-ish trillion a day. What is this? Who cares? Mechanically, this is nothing. But the market's obviously paid attention and obviously reacted. And Bessent came out today and said, see that job owning I did there? That's what that was. Way to go, guys. You figured me out. So I liked that, but the actual things he said, I mean, it was more of what the statement was telegraphing. Did you find anything new in there?
He said, we will assess current conditions to determine if more action on U.S. bonds is needed and emphasize the importance of fundamentals. What are the fundamentals right now, Ilya?
Well, I mean, apparently he's talking about, and I'll borrow from his language, fiscal consolidation. What exactly about this is fiscal consolidation? I don't quite know. In my mind, the words fiscal consolidation speak to reducing deficits, but I don't know that this does that. It seems, and again, not the action, the signal, because the action is whatever. The signal seems to be that they want interest rates to get managed away from the highs at the long end. Ostensibly, what they're trying to do is retire some of this weird off-the-run long-term debt. On the other side, what the Treasury is doing with their other hand is they're issuing primarily bills and by a huge margin. Almost, by the way, a 10-to-1 margin. Almost, not quite. But the issuance has been overwhelmingly skewed to the front end, which is, of course, exactly what Yellen was doing before. The strategy being, we're going to issue debt at lower interest rates. We're just going to have to refi it more frequently. And I guess that's fiscal consolidation in that we're reducing the run rate on interest expenses, but we're also incurring those expenses more frequently at the shorter maturity. So we're kind of exposing ourselves to interest rate risk more. Does Besson have the right bet here? I don't know. I think we're kind of in a structurally inflationary scenario over the longer haul in a 10-year view, in a 5-year view. So I'm not sure this is the bet, but we'll see.
Funny you say that. 2-year yield is unchanged from yesterday. 5-year yield is higher than it was yesterday. The 10-year yield is higher than it was yesterday.
I mean, in fairness, they're all kind of in a range.
They're all still ranging. Middle portion of the curve has given back whatever gains they saw, which I think is noteworthy. And you go out to ZB and it's halfway there. It was a little bit worse this morning. Ilya. This is obviously
percent of the move erased. I mean, if you were looking at this as like I think I sent you a screenshot of a fib from the bottom to the top of the move. The past 2 days, we've retraced about 50%, give or take.
About 50%. ZN's gone though. ZF's gone though. ZT hasn't really done anything though. But like, here are the two things that I'm focusing on with Besson, because if yesterday was a meaningful realization of the conspiracy to just facts that the federal government right now under Trump for the next few months, because of the election, it's as politically brazen as we've seen. They're going to try to manage the yield curve to a certain degree to prevent yields from blowing out for what Besson is calling, not reflecting underlying fundamentals. He points to 3 specific things. He's pointing to August liquidity. He's pointing to heavy corporate issuance, which is tied to the AI build out and the Iran conflict.
Yes.
Those are all fundamentals of the market.
Sure. I mean, okay. Heavy corporate issuance is probably the most interesting part of that, because essentially the government is competing with these massive corporate issuers. It's an interesting thing.
I thought higher interest rates are supposed to crowd out private borrowers.
I'm saying it's an interesting thing to want to say, you know what the problem here is? The problem is there's all these corporate issuers and they're flooding the market with all this debt. And what we're going to do is we're going to make it more attractive for people to give them money than the treasury money by managing our interest rates lower, or at least spooking the market in that direction, job owning the market in that direction, because God forbid we crowd out them. Wait, what? I thought you were in the fiscal consolidation stage here, Scott. What are you doing?
Yeah, so like there's what they announced yesterday, the vehicle, the mechanism that they're using is getting some of these off-the-run treasuries at the end of the curve out to make the market a little bit more liquid fine. And if Besson had come out today and said something along the lines of that, like we're taking out the illiquid off-the-run securities to make the market functioning a little bit more smoothly, fine, whatever.
I mean, that makes sense.
But there's a very clear read-through now, which is when he says that yields are too high to the fundamentals, he's effectively saying that there's a line in the sand. They've already increased purchases. We're willing to increase purchases to defend this line in the sand. It's not yield curve control, but you're starting to see that Treasury is beginning to get a little bit of an informal reaction function here, Ilya.
Yes.
Right. And it's interesting to me today.
And the dollar is showing it really cleanly, as are the metals.
But it's really interesting to me today that the market's saying, oh, your reaction function may be in the 30s. Well, we're still going to punish a part of the curve. And so that goes out.
Pick the part.
So it goes out into the 10s, which is then going to beget the question of, if 30-year yields stop rising sharply, then does the market push up 20s and 10s? As like, it's going to need a relief valve somewhere.
No, there's a whack-a-mole element to all of this.
There is. And then does the Treasury force to come in again? Now, what these are early days. There is going to be a psychological component to all this, right? And this works with the yen intervention as well. If an intervening body, right, if the market sniffs us out, oh, they just intervened when we got to 108. The market starts to go down to 108, we have to get a bigger response immediately to push us back. But if we see that Treasury defends that line in the sand aggressively, like 1, 2, or 3 times, when the market starts to get closer to 108, folks are going to start to flip positioning sooner to try to ride the wave of Treasury doing this. And all of a sudden, the market's going to start doing the lift of the lower yields for Treasury. So this could be I think that we could be looking at a little bit of violence here at the long end of the Treasury curve as the market battles Besant, because if he's saying focus on the fundamentals, the Iran war is part of that, right? You can't just ignore the fact that there's been significant material supply disruption. And when you look out to the distillate markets and the products of oil, you still have gasoline, which is sitting yesterday, it was or 2 days ago, the second highest close that we had seen the year. Today, we're going to be at the 4th or 3rd or 5th, somewhere in that neighborhood, right? You can see it through heating oil as well. Heating oil is going to be giving you the highest close for the year today. So the fundamentals aren't fantastic right now.
They're not.
I see a lot of folks bragging on the administration side as just a flex of how the naval blockade is working, that there have been 0 oil exports from Iran recently. Karg Island, that place from Battlefield 3 that we loved invading as children, which now the administration's talking about, that's had no activity at it. There's been no oil exports from there in recent days. So, squeeze. The fundamentals keep pushing higher. This is a pressure cooker, Ilya. Maybe ZB.
So what you're saying is we've been invading Karg Island.
I guess so. I mean, I still have the same game plan for oil. For north of 88, I'm out of the short iron conduit. I'm flipping to exclusively long oil, looking for a more significant move to the upside. Tank levels are going, they're not in great situation. SPR is down, and we're still draining all these distillates. We can't refine enough things as the proxy, crack ETF, PSX, MPC, Marathon, Valero. The refiners still are in, making it tons and tons of money. So that's not good for the inflation pressure in the system. It's why the long end of the curve remains pressured. And I think the market's realizing today that there's not many options to ward off a higher cost of capital at this point in time.
This is the essence of what I have
stocks
been banging on.
Stocks down since Besant gave those remarks.
I mean, this is the essence of what I've been banging on for weeks now. Why was I long gold and long silver and short dollars into yesterday's Besant bonanza? Is it because I knew he was going to do that? Of course not. How could one know?
You have to work for the administration and be inside.
You got to work for the administration.
Be an inside
you got to
trader.
do it. Yeah, and frankly, you got to do it through prediction markets or some such thing. That seems to be their favorite vehicle. Maybe crypto.
I don't know. You could do it through futures. Hillary Clinton got away with trading cattle futures in the 1990s.
And she did. But the interesting thing.
I'm serious. People should look at the Hillary Clinton futures trading scandal.
That's right. That's right. So you look at this and you go, okay, well, why would you be in these positions? Who could have known? Well, that's not what you had to know. What you had to know was already in the beginning of July, there was this disconnect where metals and the dollar started to go, wait a minute, what is that we're smelling? Wait, so they want how many rate hikes? Yeah, that doesn't make any sense. No, that's not going to happen. And so real rates were surging, but gold, silver, dollar go, no, we're not doing that. And so going into this, you already had gold going up, silver going up, dollar going down. And that was not because of what Besant coulda, mighta, shoulda done, or that anybody knew that. It was because Fed rate hike expectations were fading already since the beginning of this month. It's been 3 weeks that they've been fading. Why have they been fading? Everybody's been running around going, well, the FOMC minutes were hawkish. No, they weren't. They weren't hawkish at all. Look at what they said. The people that wanted that rate hike, the 3 dissenters, why did they want it? Because they were aiming for an extrapolated rate hike cycle? No. They said, well, if we hike now, that means we can hike less later. They wanted to pull hikes forward, not do more of them. Okay. What was their constraint? The majority said, we might have to do some hiking if inflation keeps going up. What has inflation done? It's come down. Why has it come down? Well, halfway it's the oil adjusting, but halfway it's core services weakening. That's the consumer. Same thing with PPI, only more intensely. Again, the consumer. Retail sales numbers terrible. Again, the consumer. Consumer confidence numbers terrible. Again, the consumer. On and on and on and on it goes. The consumer is 68% of the economy. You wonder why the markets go, you know what? You're not doing these rate hikes like this.
Walmart was perhaps the one of the bigger tells of that today.
Yeah,
we had
we were looking for the retailers to give us a little confirmation. Here we go.
Target was up. Home Depot chopping around a little bit lower. Lowe's chopping around sideways here. Those all worked out. My Walmart trade got blowed out. I was sitting I was short the iron condor for the expected. This was my trade of the day idea on Monday was short iron condors across the retailers. Yeah. And it worked out for Lowe's and Home Depot and Target. And then here comes Walmart and it just goes right beyond the expected move. And I got out of it immediately at the market open. Not in that game. And
nobody's trying to hold this back now.
Well, I mean, I got out literally right at the market open. It was still, it was trading in like the 106s. So I'm glad I did. And it was 1 day to expiration. But like that, you see Walmart down today. You see what's happening with the rates. You see what's happening with the banks down here, KRE, XLF. Okay, starting to roll over. So higher yields, but not for reasons that the banks are going to enjoy, which is usually problematic because banks like a steeper yield curve, Ilya.
Well, and this is where you get the Besant gambit, right? Scott Besant is a macro trader. Let's just be clear. So as a
imagine Ilya in charge of the Fed, in charge of Treasury.
Beware. The day you get elected president, I'll come knocking because I can't be. I wasn't born in
a homeowners association.
I mean, hey, why not? You need a Treasury secretary too, but I'm going to have to do it remote. I'm not moving from the West Coast if I can help it.
We're out in Palm Springs in 30 years. I'll let you know.
Yeah, San Francisco, paradise on earth. You heard it here first. I'll stand on that all day long. But the situation that Besant then might be looking at as a macro type of trader is, right, so I too can read the tea leaves on what Fed funds futures show and on what the data shows and why there is a perfect parallel between the diminishing city economic surprise index and the diminishing Atlanta Fed GDP Now model and falling rate hike expectations. It's all lining up. It's all in tandem. It's really clear. Like, this is like macro page 1. So you look at this and you go, right, I'm Scott Besant. I know these things. Let me check the bond market here because once this economy weakens, it'll do the thing by itself. It'll start pulling yields down. I just need to buy myself a little time. I don't need to have an expansive vision. I need to bet on lower rates because this economy is already weakening. So the trade I am making is I'm going to refi at the short end because the Fed is going to cut, not hike. Not this year, and maybe not as the next move. But the direction here is toward cutting because the economy is choking on all this stuff. So I'm going to bet that I'm going to refi better later. And I'm going to essentially bet on rate cuts by saying, President wants them. Warsh is clearly not attempting to jump out the window on hikes. Neither is the committee. They're hedging this way and that. They're sounding real gung-ho, but they're not doing anything, nor do they sound like they want to do anything that's bigger. Some people want to do their little bit sooner. That's it. But then less later. Okay. Just wait till they see the third quarter GDP number, you might think. That's coming out late October on the eve of this buyback expiring in early November.
So you think if we get another shot, I just want to put this. I mean, I'm of the mindset here, Ilya, that the market's going to keep getting checked. I'm glad I.
No, they're going to check it again. Yeah,
they'll check it. They're going to have to check it again. But
they're going to have to check it again.
Is the market going to pressure Treasury before
they're going to test him again? Now? Yeah. Well, I mean, you know how this works.
I said, Ilya, this is exactly
an official
what I said yesterday.
Tells the market we're going to do X, and the market goes, "Oh, is that what we're going to do, big man?" And then they stress him.
Chasing individual names and like this is I think fundamentally different. When Trump name checks a name like Scott's Miracle-Gro, which for some reason he has several times this week.
Does he mean the fertilizer or does he mean best?
No, fertilizer. Yeah, well there you go. That's actually pretty good. Maybe that's what he's referring to. No, but when you think about how when he name checks a single stock, it's a small market.
Yeah.
Right. Market cap of maybe like a few 10 billion, maybe 100 billion or so. And Intel, a Dell gets up there, and Nvidia, perhaps a Micron when he was here in my congressional district.
Conspiracy writes itself. Thin liquidity, easy to push around.
Thin liquidity, easy to push around. But that's not the bond market here.
Right.
And like there's a whole thing called there's nothing called like a semiconductor vigilante. Ilya.
No, not yet.
Not yet. But there's a bond market vigilante. Sure. And if you read around the unanimity of the reaction from market participants here today, okay, JP Morgan came out and said Besson's bond market intervention will view Treasury as lacking credibility moving forward. So like that if that's what the country's biggest bank is putting out to the public as like a signal, hey, by the way, private sector here speaking up, public sector, this seems like a really dumb idea. It seems like the market may get tested again. But then the question is, if we get a dip below 109 to the 108, is it something that we buy in anticipation of another intervention, right? They're going to have to keep
I'm
scaling.
staying long.
So you're staying long. I got in short yesterday when this got back in 110. And so like, I'm just looking at the scope and scale of my positions here because of how this is moving. Yeah, the 108, 107 is not doing so hot, but it's not what it was doing yesterday. The 110, 109 long put spread, that's working out great here because that's in ZBZ6. And ZBZ6 at 22 days to expiration here, Ilya, we are trading in at 108.30, right? So what I'm thinking about the way that this market's evolving right now, the way that I'm particularly structured and have been trading around these things, I'm comfortable playing this game of holding short right now, at least in ZBZ6. Now, it does dawn on me that there's been more selling pressure in other parts of the curve today.
Yes.
Because if Treasury's saying right now that it's the 30s that are bothering them, well, you're fighting against someone with effectively an unlimited balance sheet because they could always tap the Fed on the shoulder and say, remember the Fed Treasury Pact? We have to and then they would get towards yield curve control. And I'm not, Ilya, I mean, like I'm really of the mindset that we're heading towards yield curve control. Now we're taking those steps down the path. Even today,
I don't think we are, but okay.
I know that, but today is another brick in the path where he says like, we're willing to step up interventions because we think the market's disconnected from fundamentals, which means he thinks yields are too high. Right. So then there is a level of yield in his head that is within an acceptable range that is tethered to the fundamentals.
Well, that's the trade we just talked about, right? He's making the trade that he's going to get lower rates. Now, how is he going to get them? Is he going to get him at the long end? He's only going to get him at the long end if the market concludes that the economy is turning. Only then. Only then is he going to get the full curve shifting like it did at the start of the war.
But Ilya, if he's keeping the long end of the yield curve artificially suppressed and the market's not going to apply a greater premium to corporate debt, which as it stands right now, when you go to the BBB OAS swaps, corporate rated debt in BBB land, the lowest grade of investment debt, is still only about 100 basis points above treasuries. So like all of a sudden, if you're anchoring treasuries at the long end of the curve, then these companies can continue to borrow at artificially suppressed interest rates, which prolongs their capex cycle.
I mean, it's a confidence game, right? It's a confidence game. He can't keep rates suppressed at the long end.
They can't.
Nobody can. I mean, Japan tried and had to abandon it. And this is Japan, where they have much more control of the structure. We have much less control.
Okay, so we need to wrap this up here in momentarily. 1 month moving average today here, Ilya, is 76.80. If we're not above that in the close, I'm cutting out my MES position. It's a damn shame that it was trading north of 7,800 a few days ago, but it's got to go.
I'm looking very closely to get back short.
One of the good things is, though, about all of this, despite MES coming off, not matching dollar for dollar, there was an earlier short iron condor that was put on where we had basically got a max profit on the short put spread side. So I took that off because I hold on to it. But I retained the short call spread side because it had moved too quickly to max loss. And I'm getting into the whole Thelma and Louise territory. If it's in something like ES, I might as well hold it because I'm not too worried about assignment risk 11 days out. So this now has gone back below my short strike because of the vol expansion here. It's still underwater. It's still about, $2.32 more than what I paid for it ultimately when I sold it, I should say. So I don't want to buy it back yet, but the way the market's evolving here, I can hold on to this for a little while longer because it's helping ultimately will insulate the ES H7 position, which I still want to hold here though. But the worst thing in this space for the futures for me today is the Russell, which down 1.4% right now. Still at 22 days here. We still haven't touched the short strike, but wow. Ilya, this all of a sudden went from being something that was earlier this week in the money, even though I'm not testing the short strike, it's now quickly under pressure. A close below 3K today might knock me out of this. I might wait until the 50. I'm going to have to look at the broader market, but big volumes today and bigger pullbacks. But you and I will reconvene in about an hour. Up next, we're going to get Tim Knight here on the network, the Slope of Hope himself. He's going to take you through the next 30 minutes of this final hour of trading as markets slip. And then at the bottom of the hour, I'll be back with Jem Karsan. We're going to be talking a little bit of continuation from what he was discussing on Monday here. We're now through Vixpiration and into the monthly OPEX tomorrow. And stocks are falling, which seems to be fitting the plan. Stick around for more Tasty Live coming up next.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Hello, Tim Knight here with the charts, of course. That's what we do every day for half an hour. Talk about what's on my mind and show you some charts and tell you what I think of them and where I think what I think they mean and where I think they're suggesting we're going to be going. It was a troubling day yesterday and a worrisome night last night. As you've probably divined, I tend to be kind of a libertarian bent. I prefer organic markets to inorganic ones. And by organic, I don't mean like gluten-free and approved by a certain board. Obviously, I just mean, just a natural confluence of buyers and sellers, supply and demand, natural cycles that nature has provided us. And that began to disappear in a huge way after 2008, thanks to Alan Greenspan, and got much worse. Well, actually, 2000 is when it really began, and then severely in 2008, which I guess was more of the Bernanke era, and then really went out the window with COVID in 2020. So more and more, the stock market has become this ever-growing beacon that has to shine brightly all the time for the sake of the political class, and they just keep feeding the beast, because if that thing enters a bear market, things are going to fall apart exceptionally fast. We have been in a bull market for 18 years. There have been dips along the way, but there hasn't been an honest-to-goodness bear market since 2008/2009. And sooner or later it will come. The later it comes, the more violent it will be. And not necessarily physical violence, but chart violence, so to speak. And so I definitely bristle when, as they are wont to do, the government pokes their nose in to the market, because the cold fact of the matter is that if they had done nothing at any time, this market would be a lot lower, but it'd be a lot healthier fundamentally, as with the economy in general, because this is basically a fake, and it gets bigger and faker all the time. And the latest of the thousands of things they've done to goose this thing was just yesterday, with the Treasury Secretary pledging to at least double the size of the Treasury buybacks, and the whole world went crazy with elation and excitement and high-fiving and all the rest. And that sucked, because I'm short, and I'd give back some of those juicy gains from the day prior. But it wasn't too bad, but it was really annoying. And as modest as the loss was, I was really bothered, because I always think, when is this going to end? When is it? And you know when it's going to end? I actually have an answer. Is it going to end when it doesn't work anymore? Because they won't stop, whoever they are. They won't stop trying to do whatever needs to be done to keep the bread and circuses going. But at some point, it won't work. And then they're out of tricks. And then all holy hell breaks loose. So it was a bothersome day. And a nervous night, because it's like, what's going to happen now? What's going to happen on Thursday? Are they going to have another announcement, or are the effects of Wednesday going to bleed over more? And it seemed that it would, because yesterday afternoon and evening, tech was pretty strong and everything was green. It's like more of the same. How joyous it was to wake up to see red across the board. Now, it's not like, we were down 20,000 on the Dow. That'd be nice, but we were down some. It was red. Every single quote was red. And that's interesting. But here's the cool part. It was red in spite of Scotty Bessent prancing out and saying, I'm in at least double. I can make it bigger. And he's made it clear how big he can make it. And then the 33% guy came out and said, now's the time to buy stocks in crypto, because America's going to take off like a rocket. Okay. And that sent crypto flying higher for the moment. But in spite of Bessent's pledge about just how large and big and impressive he could make it, and Trump's encouraging the public writ large to buy stocks out of the goodness of his heart, the stock market is like whatevs, and has been slowly leaking lower all day. So this is, it's not like this is it, but it's a little taste of what it can be like for the most powerful men on the planet to come out and make these strident demands, and for the market to make a deliciously obscene gesture at the both of them. And that sort of thing times 1,000 is what the actual top looks like, if and when it ever comes, when it just doesn't work anymore. So Bessent can get bigger all day long, day after day after day, right through Election Day, which, as I said, this program ends the day after Election Day. Ooh, isn't that interesting? Coincidence. And it's like, Earth doesn't really want to buy treasury bonds anymore, and you're going to eventually be the only buyer, kind of like Japan. And it becomes like the snake eating its tail. Was it Ouroboros? Something like that. In any case, I am pretty short, 30 different positions, virtually every single one going the right way. And I hope we don't have to just toggle, up one day, down the next, repeat. It'd be nice to get like a trend in place here. But the cold fact of the matter is that as of a week ago, it looked like the bulls were completely in control of the market. Things are breaking down. And this is in the context of all this manipulation and all this fear tactics and demands that now's the time to get into the market cheap, when in fact, it's never been more overpriced. And as far as America about to take off like a rocket, I've got some videos that I would align with that, but I don't think in the way intended. So that's kind of where my perception is right now. And let's look through the charts to kind of see why I'm saying what I'm saying. We begin with a spider here, and it's down fractionally, down about 0.75%. Fifth red bar in a row, right on. And the lifetime high was back here on an intraday basis, and we've been slipping. As I've said repeatedly, unless we can pierce into that green rectangle below, this is all just smoke. If we do lumber down through that green rectangle, then things get a little more interesting because we've got a seriously failed bullish breakout. And just to make it a little more precise, let's just lay down, boink, a horizontal right there in terms of what would constitute a failed bullish breakout. Bonds are off a little bit. Here's the ZB. And this merits a moment because the man isn't saying how big it's going to get, but it's at least double. And so how many days and what's the coefficient going to be? But we're talking about tens of billions of dollars at least being deployed out of thin air to buy bonds that nobody else wants in a desire to get interest rates lower. So what did all those billions, tens of billions, maybe even over 100 billion, we're talking about $1/10 trillion. What did that pledge get the man? It got him a big green bar right there. Bang, got him a big green bar. To prices not seen since 4 days prior. And today we've given up half of that. At one point today, the entire pop was reversed. But as of now, we've given up about half of that. And as I mentioned this morning with my car allegory, it would be the equivalent, I won't walk you through the whole thing again, but it's basically the equivalent of buying a car to impress somebody, and you're in debt because of that, and you wake up and the car's been stolen. You still have the debt. You don't have the jingle jangle anymore. It's gone. And that's what's happened right here. So, bonds are probably kind of doomed. And I'll say it for the 500th time. After the election day, things are going to get really interesting in a big hurry. And God help us all from my show during that instance. So try to behave myself. This is the 1% of me, so it gets a lot worse. Here's TLT, and this is down. It's basically completely thrown away yesterday's gains. And yay, that's good. It's sinking. And there we go. That's the wonderful world of bonds. So it ain't working, Scott. And he talks about his he's into size here quite a lot, kind of a size queen. So we're talking about his big toolbox. He's got a big toolbox, and there's gonna be more tools. So I'm sure there'll be other things announced. Maybe they'll make it illegal to short bonds or something, God knows. But we live in interesting times. As far as the diamonds go, these are hit pretty nicely. Goodness gracious, look at this. So here is the tippity top, our shooting star friend right there, back on the 5th of August. And except for these two peewee little fellas, red bars every single day. Boing, 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 down we go. And so we basically have wound back the clock to the end of July on this. So kind of net, no change on the Dow for the month of August, roughly speaking. Overseas, EEM, this is actually up a little bit. But so long as it doesn't violate this price level, it's still an intriguing short. It doesn't tend to move that dramatically. So that's the stop loss on that. EFA is down a little bit. It has tended to be stronger than EEM. And it has its own price gap like so. And interestingly, this is like the 10th red bar in a row. And you know this already, but I'll just say it again. Red doesn't necessarily mean it's down. It simply means the close is lower than the open. And so it's a weak day. It can, you can have a red bar and close at record highs. That's absolutely possible. It simply illustrates the difference between the relationship between the opening price and the closing price. And as far as FXI, which is my obsession, China, down just a touch. I haven't quite teased out the relationship between their market and FXI. Honestly, it's weird because I was watching it yesterday and, the Hang Seng Index was up like over 1%. I thought, well, add salt to that wound, but we're actually still down on this. So my best guess is that I guess it's trying to anticipate what China's going to do. I don't know. There's a bit of a lag there, but it is down. And I'm not buying any more. I don't think there's any more puts to buy, but I'm not going to buy any more puts on this. But it's the March 2027 $37 puts. And it's like I am the open interest on that. So God help us all. As far as precious metals go, another strong day. Silver has broken its trend line. It has broken its descending trend line. We're up on silver over 2.5%. Nice. That lines up with the bullish, precious, bearish equities theme that this show is all about. And let's not even make that red. Let's just change that to blue because it's basically pierced it. And, it's going to be a rough ride to new highs on this. It's going to take a long time, but I think we'll get there. Gold is up just a little bit. It's up about 1/3%, and it has not filled this price gap. This is very vulnerable to reversal below that price gap. And like I keep saying, I'd love to see this weekend off so I could buy more of it. But I don't know if I'm going to get that chance because the US dollar and the treasury bonds and such are becoming so issued by the world that they're just embracing precious metals. Miners are up 2.25%, approaching their own price gap. It has been an almost uninterrupted blast higher. Very powerful run for the miners. I see a lot of gold bugs out there just high-fiving and just really loving this. You can also see the obliteration, which is taking place with dust. The triple leveraged bearish fund, lifetime lows on this. And this shows how rapidly these things can move. And it also illustrates the strength and consistency of the miners' rally. Because on July 17, a month ago, this was about $73. And today it's 32. So was that a 60% wipeout in a month? Pretty dramatic. And long term, of course, this thing's pretty much done nothing but go down. There are blips on occasion, but it's just they'll have to reverse split it yet again. Obviously, that's how these leverage funds go. However, I'm short XME. Down. Cool, huh? We've talked about this. And just imagine that. Silver blasting higher, gold blasting higher, miners really blasting higher. I'm short miners. That should be awful, right? No. Down 2.14% because of the ratio chart we've talked about. And I've just talked about that endlessly, so I'm not going to bother with repeating that. But this is, not only is it down, but when precious metals takes a breather and sells off some, this will really accelerate, I think, because I'm not getting any help from the gold miners here, which is a component of this. So I thought that was pretty righteous. Now, as far as crypto, crypto is crazy today and yesterday. I am delighted to say I have almost nothing to do with it. I did enter a new short in MSTR today. During yesterday's show, I was sort of like ogling it, but luckily I waited till today to do anything about it. But Bitcoin let's just review this. I was chatting with the fellas this morning about this phenomenon I'm seeing, which is a trend line which ends in the creation of a reversal. So it's happened here. So trend line, reversal, plunge. Trend line, reversal, plunge. Trend line, reversal, plunge, trend line. That's what we're doing right now. We are ascending into what ultimately will be the creation of another reversal. It could be weeks away. I'm not doing anything aggressive at all with crypto because, look at this thing. It has moved up from, 62,000 to 72,000 in just a few days, most of which was just today and yesterday. And it had been basing for a while at around 60, and it has had a tremendous move higher. As I said, the only thing I'm doing about it is a MSTR short. That's it. But, I think before the year's out, this will crack to new lows for the year. I just don't know when. But and I guess this was all promulgated by Mr. 45-47 praising crypto and saying, hey, everybody go out and buy some. That was enough. So interesting. Big move. As far as strategy goes, this is STRC. This is their high yield instrument. It's up a little bitty bit. This looks exhausted, weary, tired. Throw in adjectives, Mad Libs time. I don't think we're going to get much higher than this. It is almost completely recovered from this disastrous wipeout. And Saylor's tweets have been getting a lot, whenever things like bounce, he gets really saucy and strident, and he's back in that mode there. But strategy, STRC, exceptional recovery here. And as far as MSTR itself, it's up almost 7%. But that is a very impressive top. Very impressive. And so I'm short it, and I've got to stop at 117, I guess. Not a big position. And I'll get out if it doesn't go well. But we're going to give it a try. This is the best looking crypto chart I see on the short side. Ethereum has also been participating in this mega rally. Look at this, just an explosive move higher, getting close to what I think is pretty decent level of resistance right there, but just an extraordinary pop on that one. This trend line's kind of been rendered meaningless, so let's just toss it. It has its own kind of strategy equivalent, which is BMNR, Bitmine Immersion Technologies, which is Tom Lee's gig. So yeah, that's crypto. As far as energy goes, looking at XOP, I have for the first time in months tiptoed into the bearish waters for energy only by way of this position. It's a cool little shooting star pattern. I've got a short position on this. End of story. That's all there is to it. Maybe crude pops $30 tomorrow and I'm wiped out on this. Who knows? But for a short-term trade, I decided it was worth a try to short XOP. That was my favorite amongst the energy opportunities. In tech land, as we look at the cubes, these are off about not even 1%, 0.82% at the moment. To review here, this was our lifetime high, lower high, lower high, did not have the energy to tag the trend line, and then gapped down. So the gap down was between Monday and Tuesday, very big day. Even with the aforementioned Besant bond extravaganza, didn't care. Bearish engulfing pattern yesterday, and that has followed through because we are below all of that today. And that's with a generally strong market. And so tech perhaps is leading the way lower. Hope so. So that's going the right way. I remain short the cubes. I also remain short SMH, which annoyingly is up a little bit, a few hundredths of a percent. I don't know if it's just been so beaten that you're getting some dip buyers or something. But it's still quite a bearish looking chart, and I don't think it's ready to be covered until we tag the lower trend line of that channel. So still short SMH, tight stop on that. I'm not in this, but I just mentioned that FNGS, the FANGs, also has a nice, clean price gap right there. Although I think this is quite, exceptionally thinly traded. I think there's like 2 guys that trade this, but I just wanted to point that as a mildly interesting chart. In terms of individual positions, as I said, I've got 30 different bearish positions, 27 of them just simple short sales, 3 of them options. The options are long dated. I'll just tell you what they are. I'm not going to show you the charts. I'll just bang through them. There's Sienna, CIEN. There's Centene, CNC. And there's China, FXI. And they don't expire. 2 of them, FXI and Sienna, don't expire until March of next year. And CNC doesn't expire until the following, like January or something like that, 2028. That's how far out I'm going. So kind of conservative in that respect from a time perspective, because I've got a feeling a few things are going to happen between now and 2028. And what's remarkable to me about the FXI is that it seems the way options are priced for the FXI seems to be postulating that between now and March, nothing's really going to happen. And it'll only take one nice swoon to make these like insanely profitable. So I don't believe we're going to flatline from now until March. But those are the options. But amongst the 27 regular short positions, here's a few of them. One is Axon Enterprises. This is the Taser guys. And I got into this one yesterday. Stop loss is right here. This has had a tremendous recovery lately. And as you can see, it's rather high in that channel. But I got into that yesterday. So we're down on that, a little more than 4%. There's Old Faithful here. Bloom Energy, BE, down again, almost 3%. And so, I spend a lot of time just lovingly going through all 27 positions and making sure the stops are updated to try to mitigate risk. Dollar Tree, DLTR. I got into this one today for the first time in a long time. This is, of course, the deep discount retailer, and that's looking sweet. Echo, and those who've been watching recently know that I've got a sort of a penchant for rocket shorts, not in terms of fashion choices, but that sector. And so this is Echo Star, and we're down on this one 2 1/3%. Blue Owl, the hyperscaler financier, also down about 2 2/3%. Planet Labs, there's another rocket company, PL Planet Labs. And there's the stop on that one. For you space nerds out there like myself, there's a YouTube video I was watching this morning that shows, I guess, the 20 or 30 minutes of the Apollo 11. Was that the first one on the moon? I think so. Landing on the moon with Buzz Aldrin and Neil Armstrong. And it's beautiful because they have the audio and it shows the angle of the spacecraft, I guess it's the LEM, and the altitude and all this. So it's even, it's going to have a happy ending, but it's just captivating to watch all this go on and to just imagine the tension, the excitement, because this is 1969 technology, just a notch above stone knives and bear skins, and they were putting their lives on the line for this. So it's a fun watch, and I think foments a certain respect for the brave people who did that. IonQ. See, with half an hour, I got to pad out my time with these anecdotes sometimes, but it's worth doing. So here's IonQ. They're down over 4%. I think that's quantum related. Royal Caribbean. Finally, this stock used to drive me batty, and maybe it hasn't stopped, but it's doing well these days. But I've been surprised by this and disappointed by it so many times. But for the time being, is working well. So this is down almost 5%. I got a good price on this. I just tightened up along the way, those stops, and so RCL doing quite well. Another ship company, here's a Rocket Lab, RKLB, also down over 4%. And over the history of this company, you can see, IPO, reversal, long base. This was the amazing time to get long this thing when it was like $7. It went from 7 to like 150. But along the way, we've had these darling little tops, which have produced varying degrees of success in terms of what followed here and here. Very modest drop here. And then so far, we've got this pretty nasty slog going on that one. Yet another one. This is the last one of these. Viasat, VSAT. Obviously a satellite-related company. Sloppy top on this one. But there's the stop loss. And then finally, and this was the one of the options, I mentioned Sienna, CIEN. And there's a couple, I'm not a sophisticated options trader at all. I'm just a dumb old bear. I just buy puts and hope for a big directional move. But this is representative of the kind of underlying that I like to own puts on for two reasons. One, it's nominally expensive. I don't want to buy puts on a $12 stock. With something like this, which is about $400, it's within the realm of possibility it could go to 200 or 100 or some big fat number. And the other thing is that it's very, very high. This was an exceptionally sharp and explosive move. And given that there are hundreds of days to go between now and when this thing expires, again, I think there's an opportunity there that at some point this thing could get smacked down. And the risk, in my eyes, isn't too bad, because what would constitute a surrender flag on this one? Well, if it pushed below this level here, then I would just give up and take 10% loss, 15 maybe. But the opportunity is for like a 100 or 150% gain or something really substantial. So yeah, that's Sienna, and sort of, as I say, representative of the kind of thing I like to buy puts against. So just to wrap up, here's the ES. From this distance, you can see we're sky high. I don't think we're about to take off like a rocket. I think we're about to descend like one. But as we zoom in here, we do have a nice little breakdown going on. And as I said, we need to break this level, I guess it's 76.29, to raise the failed bullish breakout flag. We are not there yet. The week's not over. We could get something going tomorrow. And as far as the NQ goes, this has been kinder to the one or two bears left on the planet, but not that kind, because as I've mentioned, things were still exceptionally clean until the end of July. And once August started, boy, it just stank up the joint. And this bar in particular. But we are undoing this. We have undone most of this rise. And in this instance, what would constitute a real failure would be a push back below this, this blue level, like so. We're not there yet either, but we're working on it. Okay. Oh my goodness, it's exactly the bottom. All right, well, I will see you later, and we'll close out the week tomorrow. And hopefully we'll get, 2 red days in a row, right? So I'll see you then. Bye-bye.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Every time he explains something to me, I ask him the same question.
He always asks me the same question.
What's the trade?
I'm not always sure that's the right question.
It's the only question. Retail traders don't have a thesis on in their portfolios. They have positions on.
And if you don't know why it's moving, the position is a good guess.
And if you never get to the trade, the reason has no meaning.
Same market.
Different question.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
We're back. You're watching Tasty Live. This is Last Call. I'm your host, Chris Vecchio. We're going to be joined in a few moments by Jem Karsan over at Kai Volatility as our Thursday, guest here as we wind down this trading day. A trading day that's sitting down near the lows. S&P 500, 76.71, just a few ticks off that session low. Same thing for the NASDAQ, but the real loser today is the Russell, down 1.3%, back down to the round 3,000 number here. Stocks about 2% off their all-time highs that were set last week, large part because of some of this government intervention perhaps that's going on. Besson's been back on the wire here today. But we're through expiration now. Monthly OPEX is tomorrow. And this is a curious time of the year. It is a midterm election year, right? 2026, 22, 18, 14. Some specific things happen around these calendar dates. 3 midterms in a row, as Jem has pointed out previously, that we've been down 10% within a few days of these expirations. What Jem told Karsan on our last visit, let's leave it to him. Go play the video.
But if you go to the last 3 midterms, right? The last 3 midterms, which is 2022, 2018, and 14, right? All 3 of the last midterms have had a 10% decline or bigger that started.
Jem, so the question really isn't that, whether or not it happened, because we just got through expiration yesterday and now we're the day of that and the market's down. OPEX is tomorrow. Jem, welcome back to the show. Let's just pick up from right there. This seems a little bit too on the nose for me right now. Who are you and how did you engineer this decline today?
Precisely on schedule. For those that follow me, they'll know the reference. Look, what was the first thing you kind of started to say, right? Like, why are we down? Everybody wants to know, why are we down? And there's always a narrative. Why are we up? Why are we down? We're going to come up with a reason after the fact. Yes. The truth of the matter is the macro and the big picture stuff matters, but it matters over much longer time frames, meaning a year, multi-year basis. In the middle of that is flows. And flows are the bigger, most important effect in the context of all the other things going on. Over any period that's shorter than a year. I'm talking not just days, weeks, months, quarters. These are the things that matter the most in this context. The macro matters, but the truth is we've been talking about, and by the way, 3 months ago, we started talking about how Hank Paulson came out and pretty much told the world that they were going to prepare that a coming treasury crisis was coming, he told you, and that they needed to prepare a facility to backstop the treasury market. What do you think's happening? Exactly that. That's what the yen intervention is. That's what is doubling the buybacks of treasury long end is, and eventually this will be a hard cap. There would be a big facility on the back end of this. They told you it's coming and they told you what's going to happen, but nobody really talked about it till the market went down. Now we're talking about it, right?
He made that pretty clear today. He said that we were disconnected from the fundamentals and we're willing to increase purchases if we have to. It's not a price target or yield target, but like that's stepping closer to it.
It's QE infinity at the long end of the curve. I've been talking about it for 3 to 4 months now. It's coming. They told you it's coming. Wake up. But that is actually just the inflationary part. And that's why I said about a month ago, you better start buying gold and you better start buying crypto again. And guess what? Now the market's waking up to it. It's not about the macro story. The macro story has been clear. It's just the market's waking up to it. And the market's not just waking up to it because he did it. Percent is now having to do this stuff because of the flows, and the market's starting to push back because of the seasonality and the realities of vol compression in the summer versus what happens here going into the fall. And so you have to kind of look at this, not just in terms of the big picture macro, what's happening and where are we and what is the administration going to have to do as a result, but you then have to look at it in the context of where are we in terms of flows and pressures.
So when we talk about the 4 billion number, I mean, that's not really the important thing here in terms of Besant's announcement. You're probably more interested in the fact that the Treasury is reacting to the longer term portion of the yield curve whatsoever. And this whole supporting liquidity operation, that's just a kabuki theater.
It's a signal, right, to the market. I want to be clear. I've talked about this before, but one of the most important things that people can take away is how big markets are and how reflexive they are to outcomes. What do I mean? The equity market in the US is about $75 trillion, globally about $150 trillion. You add in the private businesses that are all priced in, whether it's private equity or venture, off of these numbers, and you have a number that's closer to $250 to $300 trillion. When the market goes up 20%, like it did at the end of March to the end of June, we have an increase of $50 trillion of collateral. I want to be clear, $50 trillion of collateral. All of the QE that we did in response to COVID was less than $10 trillion. All of the fiscal spending that we did going out 10 years of past is less than $10 trillion. In 2 months, market went up 20%. That's $50 trillion in new collateral. The market has become so big and is so dominant to economic outcomes, to liquidity itself, that the Fed and Treasury are details. Their role, and the reason we have a hedge fund manager as both Treasury Secretary and now as Federal Reserve, is their role is to signal to markets and to move markets, because markets are the ones driving liquidity. All of the CapEx, why do you think this earnings have become so narrow and so focused on CapEx, all CapEx? Because if the market goes up $50 trillion, what happens to that $50 trillion? That $50 trillion, which has primarily gone to the Anthropics and the SpaceXs and all of the growth area of the market. What happens, do you think, when Anthropic goes from $380 billion valuation to $2 trillion in 6 to 9 months? What happens? What happens to that $1.6 trillion? Rhetorical question. That goes straight to CapEx, right? That CapEx is a direct impulse of demand, right? And that's why you're seeing massive earnings growth. It is a circle, because whoever bought those companies, then and those companies' valuations are going up, are now getting the benefits, right, of this CapEx. Now, that's not to say that it's not real. This is going to drive real investment in infrastructure to build out the AI race, yada, yada. But it is fragile and it is narrow, and it is almost one-to-one correlated with the market itself. So what happens? We talk about the macro. Sorry, last thing, Chris. We talk about the macro like it exists, and the markets just reflect the outcomes of the market. That's where we're always trying to put a narrative on this move happened. What caused it? I'm here to tell you the market's move is the primary thing that causes the outcome going forward. It's a reflexive loop. And the flows that are non-correlated with that, which are very much structural in a lot of ways, have dramatic effects on the market. And so those flows are actually very predictive themselves of the future outcomes. And that's really the important point.
Yeah, you brought up the Benjamin Graham framework the other day of the voting machine versus the weighing machine, and macro is on the weighing machine side. The flows are part of that voting machine side of this market here.
Yeah, but the big point here, more than ever, the voting machine determines the path of the weighing machine and can even change the total outcome of the weighing machine if big enough. And that's what we've seen in the last several years. We have seen such a dramatic flow of money flowing into the space. I would argue some of it is very intentional and driven through, administration and governmental focus on this as well, and signaling that we are seeing an acceleration as an effect of growth in that area and earnings growth. And it's not that the earnings growth precedes the upward move. And you better believe if we see now a 20% decline or 30% decline over multiple months, that the exact opposite would happen.
Jem, I'm thinking about the financial repression trade that you were discussing in June, because right now we're seeing a bit of a reversal in real yields. I can use TIP here as the TIPS bond ETF as a proxy for this, but we've gone through a period where real yields shot up. But if the Treasury, at best, the Fed, or they're ultimately moving down this path towards suppressing nominal real yields, it feels like we're being engineered towards an outcome towards, yes, we're engineering negative real yields here. If we're going to repress the nominal
yields. What does that
yields
do? And what do negative real yields ultimately end up doing?
Well, I'm thinking of that asset inflation for scarce goods right
inflation,
now.
Period.
Gold,
period.
Yeah, Bitcoin. I mean, Bitcoin and gold to me are that alarm bell going off the past 2 days.
It's actually less asset inflation, in my opinion, and more broader inflation, like hard asset.
The worst kind. The worst kind.
Correct. This is economics 101, candidly. Now, if we weren't the U.S., and we didn't have the exorbitant privilege of the U.S. dollar, this would be a one-to-one correlation with the currency crisis, right? This is how a loop with inflation always happens, right? But to your point, this has been engineered. Yet the U.S. seems to be okay with this. Why would the U.S. be so okay with a run-it-hot negative real yields environment? Because it actually solves the major pressures that are being forced on the U.S., and we have the ability, for one reason and one reason alone, to go down this path and have it be a net positive. That's because we have the reserve currency status exorbitant privilege of the U.S. dollar. This will drive investment, as it already has, to strategic businesses, which allow the U.S. to compete with China. It has a catch-up trade to make because China's been directly investing in these businesses without a profit incentive for a decade, right? And so the U.S. will be driving this through doing this through the capital market channels, through the free market channel. I've said this before, but China about 15 years ago said, we are going to adopt free market enterprise with Chinese characteristics. What we are moving towards in the U.S. is the opposite. We've been on the free market side. We are going to move towards, again, I don't mean to use a word that has a lot of negative connotations, but a socialism of some kind with American characteristics, with free market characteristics. It is this
I call it state capitalism, communism.
Yeah, it's state capitalism. But it's exactly the opposite. It meets us in the middle with what China's been doing all along. We're just doing it through the free market channel. And that free market channel is going to drive greater and greater investment. And I've already said this to people. I told people before, they weren't listening, that this repression on the long end of the curve was coming in spades and coming soon. They told you that, but I'm telling you now what's happening next. And that's after the midterms. Expect a massive amount of buying through a sovereign wealth fund from the U.S. once we have a market decline. That is what's coming next. We are going to be printing money at scale to hold the long end of the curve lower into an inflationary move, and we're going to be on the decline in assets once they let it come down. We are going to be buying and taking equity stakes of not just buying, but taking, like they did with Intel, 10% ownership, whatever, through a sovereign wealth fund and eventually through those Trump accounts as well. That is why they are building that infrastructure. This is what Japan did. Japan owns 8% of the Nikkei. They did it through the Japanese central bank directly. We will do it more like a Norway sovereign wealth fund. Looks much more legitimate. We will, that sovereign wealth fund is 2.7 trillion. If that's the size of the Norwegian sovereign wealth fund, how big do you think Trump is going to have the American?
Gotta be at least 2.71.
It's exactly. It's gonna be huge. It's gonna be 5 trillion plus. And it's coming, y'all. It's coming soon. Prepare yourselves, but it's not all equities that they're going to buy. They're going to buy strategic equities that allow us to compete with China. That'll also begin to close the loop on populism, it'll take a while, but it'll be popular on both sides of the aisle, because if you're buying corporations on behalf of people and you're taking tech equity share, that's going to be really popular. Because why? Because you're taxing the rich in theory, but it's also going to help and not hurt the rich. It's not going to be the same as taxing the rich and giving to the poor. You are operating through the free market cycle. You are short-circuiting the owners of assets versus the non-ownership of assets. So it's going to be very popular. Populism will they're hoping will be kind of short-circuited through this process, more medium to long-term, compete with China. It'll support the market that I just told you is too big to fail. And last of all, it's going to cause an inflationary loop, which is exactly what they want. Because how else do you get rid of the debt, which is unsustainable?
We'll talk a little bit more specifically about NVIDIA and Jackson Hole next week, but let's just give a broad roadmap here as we wind this down between you and me here for this Wednesday. OPEX tomorrow, NVIDIA Wednesday, Jackson Hole immediately thereafter with Kevin Morris's speech, which, we're going into this. I know the VIX is up here in recent sessions, but index volatility is 16 is still pretty low. This is where we were at the start of August.
Yep.
But we now get direct treasury involvement here going into all this. Where's the greatest asymmetry still?
Yeah, what did we say at the beginning of August? We said buy calendar spreads. This thing, VIX itself at 14.5 is too low. You really want to be owning the vol though. Post midterms, that midterm vol is too cheap. Why did we say the VIX is most, the best way to kind of play this, or not the VIX, but longer term vol? One, current short term vol is going to continue to be on a realized basis relatively low. These aren't big realized moves, and they're very, very tick, very controlled moves, as you'd expect during OPEX, okay? So this is a manageable kind of short vol decay situation that you can pay for the longer term vol with the risk accelerating. Why is this vol likely to accelerate? The exact reasons I just told you, right? There's a massive set of idiosyncratic risks happening under the hood, massive moves. This would normally only happen during a big financial crisis, the type of stuff we're seeing. No, this is very, very active, big issues. And underneath meanwhile, the index has been pinned because of structured product issuance. We've talked about this before, but as volumes go down during the summer, we get the summer of George effect where, because volumes have come down, the structured product issuance and the structured flows that compress volatility, that sell volatility to dealers and dealers that have to sell it to the market, that compression at the index level has been very firm. And as you get through August OPEX historically, this is why we highlighted those 3 midterm elections, right? And one crisis. As you get through this August OPEX cycle and move into the September, and sometimes it starts in August OPEX, sometimes it starts in September. But the reason we get volatility in the fall is often because this vol compression now dissipates and vol expands, right? Which then frees the market up to move around. Yeah.
Sorry about that.
No, all good.
But you still have Ben Jem Karsan. Jem, in a week from now, we're going to have NVIDIA and Jackson Hole right on the doorstep. And so how this market looks a week out from now, it could be completely different. Maybe a VIX is in the 20s. Maybe we've seen a bigger unwind. Maybe we're still pinned here. Who knows? But you've called this out for a few weeks now, at least from when you and I have been talking about how this would be the turning point. And the turn has started. So you didn't answer at the start of the show. I don't know who you are and who you work for and how you engineered this, but we're going to have you back to discuss again.
Yeah, we have a time machine that sometimes we use to predict these things, but I don't think you need a time machine to do some of this. You just need to understand the flows.
Yeah, well, there you are. Jem Karsan, Kai Volatility. We'll see you next time. Folks, we have more last call to get through here. Just about 10 minutes left to go in this trading day right now, and stocks are still sitting at those session lows, as it were. Vol's creeping up here right now, 76.69 here on our screen on the S&P 500. The Nasdaq's down 0.6%, although it is still holding around former swing levels near that 29,300 level. The Russell, the worst on the board, down 1.3%, although slightly again off of its lows here. The volatility component of all of this is really what's driving perhaps this move, where we've seen the VIX jump up back towards 16 or so here over the course of the session. It's up $1.12 right now. And across the curve, by the way, when you take a look at what's going on in the VIX futures, we could go to, say, VX, the front month here, VXU6 right now, up 19 cents. Go out a little bit more of, say, VX V26. This is only up 1 cent. So what's happening with our vol curve right now? A little bit less contango today. It's starting to flatten, a little bit more fear coming into the equation. Jem points out that this may be a midterm episode, as it were, because over the past 3 midterms, we've gotten these 10% declines heading into them. This also seems to fit the volatility time of the year. We've shared this volatility chart, the seasonality chart of vol, thanks to our friends. I call them friends over at equityclock.com. And this is a great chart that's free for public use, which is why I share it here so that you, the viewer, could also find it yourself. Middle of August onwards, this is when vol has historically taken the jump to the upside over the past 20 years. Data goes back 20-year range ending December 31st, 2025. So if it's seasonality, flow add on top of that, or seasonality on top of the flow, you get this nice little mix where there's a little bit of a pullback here. So what do I need to do here today? I really got to say, I'm not a fan of how ES is behaving right now. Not a fan of how we're getting ready for a close below the 1 month moving average. If we do, I'm going to cut short my MES position. I'm going to take a small gain here off of the 7,600 entry, but we're certainly at more than 130 points off the high, and that's a bit of a bummer. The other side of this is, though, that there was a short iron condor that I've been operating in, and maybe other folks were too, from a few weeks back, where the short call spread side of this was 77.25, 77.50. The speed with which we saw this break through the upside, because I was playing for inside and up when I had the MES position plus the iron condor, we had blown through the top side part of the range. I took off the short put spread side when we got up towards 7,800, because when you're looking at a $25 wide strike and it's trading for a few bucks, I wouldn't sell it there for $1 or $2, would you? No, of course not. When you realize 85% plus of your profit in a short premium trade, it should have been out the door a while ago. So I got rid of it. But the long call spreads to me, the short call spread side, stuck with it. It went from being a $600-something loser now to only about $200 or so. I'm willing to ride this out a little bit longer, because if the market is really breaking down from here, when I take off MES, I'm going to want to look for a deeper pullback. And this is a pretty ugly looking set of circumstances right now. Maybe we could go a little bit lower from here to find some support down towards 76.30 before levels of concern really escalate and pick up. I point that out because the NASDAQ here, it's breaking downish, but it hasn't broken those key levels yet. It's still holding up at the 50, and it's not issuing that screaming concern, although there is considerably greater volume here today. 1.2 million S&P 500s traded relative to that 900,000 or so that we had seen in so many recent sessions. The Russell's given me the most indigestion, quite frankly. I don't know about you guys, but I was sitting in that 22 days to expiration. This thing, it might be coming off for a small loser now. It was a minor winner a few days ago because we were still looking for a little bit more extension, but that break below the 1 week, so much for 2 days of holding at the 1 month. We're now cratering back down to 3K. This is where it needs to hold for me, for what it's worth. 29.75 short strike here. So are we below it yet? No. It's why this would be a manageable loser, just 40, 45 bucks. That's like, it's less than the cost of the pizza I had delivered to the house last night. Pizza, garlic bread, plus tip. I think it was like $55. That's with the DoorDash and Uber Eats discount. That's crazy. Yeah. So yeah, that's why the bond market's pricing in all this inflation, by the way. I told my wife I'll go out and get the pizza. Pizza pickup with that order would be like $33. Don't know what you're doing, Uber Eats. Okay, less than the cost of Uber Eats pizza. There you go. That's what the loss would be. Elsewhere, though, this is the big thing with what Besson's doing. I mean, I faded the move yesterday. I bought the put spread here out of 22 days, the 110, 109. And so we're sitting in at 10. And we need to go to ZBZ6 here because that's where this contract sits out at 109 and 29 ticks. So fine with the 110, 109. I'm going to hold this for a little bit. What the administration is making clear to me, as I just discussed with Jem earlier in the show, if you missed it, is that we're now looking into a set of incentives that favor holding scarce assets. Functionally, if they're pinning yields along into the curve, the market needs a relief valve, and that's usually through currency destruction. And yes, we have exorbitant privileges, the United States, but it doesn't mean the dollar can't weaken, and we're not even at the yearly lows yet. So why wouldn't the market continue to push that out if we see more signs of inflation building? To that point, gold, Bitcoin are things where I've recently put longs on, and with the moves that we've seen the past 2 days, it feels like the right place to be. Bitcoin more than anything else, though, because Bitcoin here is having another banner session of 6.2% right now. I was talking with the folks this morning, TP here, actually, from CoinGlass, a report. In terms of the rolling 24-hour liquidations for Bitcoin shorts, this is the largest Bitcoin short liquidation that we've ever seen. And that was the case this morning at around 11 o'clock in the morning already. So the record keeps going up. Bitcoin's now up 6.2% right now. Ethereum up 10.6%. I'm looking at these charts. I saw a juicy entry for an opportunity up towards 45, 46. We're breaking the downtrend here. And Bitcoin, by the way, is a great technical asset to trade. It is far more technical than other things. The closest thing it comes to is probably currency. Currency is a very technically driven market because the macro influences are much longer term. So as Jim points out, voting short term, weighing long term, flow short term, macro long term. So currency revolves around 2-year rate differentials. That's macro, central banks. So how does the next move in currency? Like you get a lot of folks piling in for technical reasons. Bitcoin, similarly, there are no fundamentals. You can do on-chain analysis. You can look at node transactions, but I've been watching this industry since its infancy. There's still no agreed upon set of fundamentals like you would do with like discounted cash flow analysis or looking at coupon rates or yada, yada, yada. So what I'm saying here is that we have a major swing level. That's the point. 46 or so, low of 46.68. You have highs here back in May. I'm in at 29 days to expiration now, the 45.50 long call spread here, which could monetize it for a whole quick penny there, which is nice. Paid 43, now it's trading at 44. But Bitcoin may be in squeeze territory again. Those massive short positions being covered, coupled with this treasury shift, has me more aggressive on some of the hard asset type things, these scarce asset type things, and I've been feeling in a little while right now. Silver exemplifies that the best. This was put on when we started breaking out back in mid or earlier August, I should say, the 72, 73 long call spread. No reason to get rid of it now when it's doing numbers here today. Now could be flipped off for about a $345 profit. So that's the real good news about some of the positioning here. But I'm still going to lean short bonds. If this Treasury Department wants to do what it's doing and volatility is going to be this low, we get bounces, we can take some scalps and look for downside swings. If we get below 108 in the ZBU6 contract, get down below maybe 107 in the ZBZ6, the Treasury Department would probably want to step in again. You could take it off, right? It's kind of like with the yen. If you're riding long dollar yen, once you get up into the 161, 162 area, you're kind of picking up pennies in front of the steamroller. It comes off. And then you can try to reload. So maybe being too clever by half here. But right now, bonds gave it up today. That is the big story of the day for me. What happened with notes now going to close lower than where they were yesterday. And that is a tell. That is a big tell here. So cost of capital going up. The Fed, the Treasury in conflict perhaps. Fed's not hiking rates, right? So long end's blowing out. Treasury is trying to pin the yield curve there because we're detached from fundamentals. I'm just trying to take a step back. If Yellen or Bernanke had come out and said, we're intervening in the Treasury market because it's attached from fundamentals, like what would we be saying? It's just nuts. All right. Whether it works or not, I'm going to bet on the side of it's not working right now in the short term. So we have stocks here going into this close right now, 76.65 here. Down near the session lows right now. We do have NASDAQ that's off by 0.7%, but it's your Russell, your Dow Jones that are taking it a little bit harder. The interest rate sensitive things having a rough recession. Before we close this out, Ross Stores, I saw a comment earlier, which is down 2.5% today, by the way, talking about some of these earnings that are due out. Listen, we're at the Thursday afternoon close here. So it's Ross Stores and it's OSIS, OSIS. Ross Stores is looking for a 1675 expected move. I don't have a position here. Walmart decided to take me out of the game today. But that gives us our close here in about a few seconds time. It's going to be 76.62 or so here on ES, 29,299, 300 here on NASDAQ, and a Russell at 3,000 on the dot. Bonds here, they fade Besant, 109.14. Notes are lower than they were yesterday. Gold's up, Bitcoin's ripping. It's bizarro world because the guy who's coming up next is someone who, as long as I've known him, which has been about, I think, 18 or 19 years now, you couldn't pay him to get long gold or Bitcoin. And he's been having a wonderful week because of those things. We'll be back in 90 seconds. Overtime up next.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
You bring it, we match it.
Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Stocks down, rates back up, Bessent's losing control. This is Thursday, August 20th, 2026. This is Overtime. You're watching Tasty Live. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, here to take you through the final 28 minutes, at least of this hour, or the first 28 minutes of this hour. But we're getting through the final bit of this trading day here either way.
Whatever.
And we can't even call it that soon because apparently we're getting 24-hour trading according to the NASDAQ in just a few months' time, which is absolute delight for people whose job it is to live trade and present content for folks. So maybe we'll have a night show here, Ilya and Chris after dark, which will definitely
buy me a helmet.
Maybe. We find ourselves in a place where treasury yields are back up, and Scott Bessent's warning the world that they are ready to keep stepping up their intervention because you see the government has a very specific model for where yield should be based on the market fundamentals, GDP, inflation, all these things. And the Treasury Secretary says that we've been very bad boys and girls. We've actually pushed this beyond the acceptable range of the fundamentals, right? The Iran war, short-term problem. August liquidity issues, well, that actually is a short-term problem. And doesn't that happen every year around this time? Oh, and the AI debt issuance, well, that's new and unique too, getting crowded out of the market by hyperscalers. So we're going to have to just keep intervening here, Ilya. You and I disagree over this. It's unfortunate because you're wrong about it and I'm right. But what really matters is that I can't understand why other people aren't seeing this as clearly as I am. I'm getting a little bit of a Cassandra feeling here, like the Oracle of Delphi curses me and I can see the future and I'm powerless to stop it. So why am I wrong that Bessent telling us today that they're ready to increase purchases to defend a level that he has in his mind at the long end of the curve because it's disconnected from market fundamentals is not a step further closer towards yield curve control?
Very simple. It's not yield curve control until it's yield curve control. Yield curve control.
So you're either pregnant or you're not. You're never kind of pregnant.
Well, no, you're not. And so yield curve control is a specific thing, right? The words yield curve control describe a particular policy. In order to have yield curve control, you must have a level you're controlling. There must be a target. You have to go out there and communicate to markets, here's my target. Now, you might say, well, do you really need a target or do you really just need to show intent? Well, that you don't have a target tells you what the intent is. And so the intent, as Bessent explained to CNBC today, was we're going to tell the markets that we are going to check them here and go, whoa, 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 slow your roll. But whatever level he has in his head, I'm sure he has one. He's a macro trader. I'm sure he has a level about what, or there's some idea of what the level ought to be in his mind. I think he's not announcing it. He's not making it policy for the very simple reason that Treasury couldn't do yield curve control on those terms. This is not Japan. And by the way, Japan failed. But this is not Japan. This is not a place where interest rates are expected to be zero until the end of time when they did this. Not now, of course. Things have changed. But at the time, what was Japan doing? It was saying, well, yields on everything in Japan are zero. So we're just going to commit to zero. That wasn't shocking. It didn't require a lot of work. It didn't clash with what is possible. The Treasury can't manhandle the entirety of the 31 trillion Treasury market. It can't tell it what to do unless the signaling is being embraced by the market. And we talked about this yesterday. Besant comes out. He says, we're going to go into a woolly corner of the market where, by the way, they've already been. It's not new. They're increasing a program they've already been doing. And comes out and says, hey, we're going to go into this woolly corner of the market. We're going to buy $4 billion per op instead of $2 billion. That's not even a drop in the ocean for a market that does over $1 trillion a day in volume.
Oh yeah, the framing here that the market is disconnected from the fundamentals because of August liquidity is crazy.
It is crazy. I'm not sure that's what he's saying, but let's take him at face value. He's saying rates are too high relative to the fundamentals. What does that mean? Considering rates are going up everywhere. In Japan,
what does that mean?
What does it mean?
I'm asking that question. I'm asking that question to someone who's worked in financial markets from a little yield intern, green behind the ears at 18 years old. I lectured at Duke Law School. I have CFA charter holder. You know, you talk about these things, Scott Besant. I have no idea what the hell you're talking about.
I mean, I sort of think that if you take that at face value, who knows if that's what Besant is saying, but if you take it at face value, what he's saying is rates should be lower because the fundamentals say they should be. Well, if the fundamentals say rates should be lower, that means the economy is weaker than the market thinks, right?
$40 trillion in debt. Deficits are going up. We're eroding our tax base. We're insulating our economy from our allies. We're making ourselves less competitive. We now have this massive AI data center revulsion trade going through the system on the politics side. It's extremely populist right now to be anti-data center, as it were, right? Mm-hmm. You have the Republican governor, Tom Tiffany, the nominee over there, lambasting data center David Crowley, as he's calling him, the Democrat who won the Wisconsin governor election, right?
Yeah.
The Republican is attacking the Democrat for being pro data center.
Yeah.
Right now. Like that's how far this has shifted.
Well, this is what I'm saying. If in Besant's mind, again, let's take him at face value for a second. If in Besant's mind, rates should be lower with all of that, there must be a disinflationary impetus that's stronger, right? What is that disinflationary impetus? Only the economy.
It's so funny that AI is going to cause a recession and provoke massive government austerity in order to keep financing rates low enough so that hyperscalers can still go to the market and issue debt.
I saw a really great meme today of a very, very, very sad, I forget his name on Succession, but the elder son on Succession. And the tagline was, the CEO when he realizes that tokens are going to cost him more than the people he just fired.
Interesting. You know, I got tapped for something recently. You know, Texas, the way that they tax their oil is 4.6% per barrel or 4.6 cents, whichever is higher. So if oil's at like $99, they get 4.6 cents. If it's at $50, they get 4.6 cents. If it's at $100 or more, then it's 4.6%. So they capture more of that. Folks around New York are talking about implementing the data center, undoing the Hochul data center moratorium with trying to treat data centers and tax them in a way. And this is legislation that's going to go up the chain federally here. So the public gets clawback on the data center build out, right? If you treat tokens the same way that you treat oil, like every 100 million tokens, the government taxes 4.6 cents, right? Then it goes right into the public coffers, which is why Texas, for example, as they grow their oil industry, their public finances stay in great shape.
I mean, this is the Kuwait-Saudi model, right? Like, we're going to control the great resource, but you all be cool. We're going to give you a cut.
Yeah. And like you look to Loudoun County, Virginia right now, which is the wealthiest county in the country. Per capita also has the most data centers in the country.
Yeah.
Per capita has had the most data center build out in the past 3 years of any county in the country. Also has a lower unemployment rate than the nationwide average. It's added more jobs over the past 3 years than the average county. It has higher relative income growth relative to the rest of the country, excuse me. The people there that are working in the existing communities are getting higher raises, higher wages. Louisiana, they're giving paybacks to teachers because there's so much money coming into the coffers right now. So like it almost, gosh, in an era of like decimated state finances, it speaks to an argument that you and I have long had, where ultimately like marijuana legalization was inevitable, just like gambling legalization was inevitable.
Because taxes, baby.
Because it's taxes, and governments are, they're losing tax base. A state like New York, California, Illinois, right now, like we need more. We need a bigger tax base.
I mean, we saw this with the farm bill. There was some pushback against the hemp industry, and then Republican governors came back and said, whoa, you are not going to mess with this because we need the taxes.
We need the taxes. Yes. So it's something that I'm working on in my free time here to see if we can figure this out. I think that we obviously, if you're anti-data center, I think that your concerns are a little bit too narrow. I understand the cultural reasons. I understand the artist perspective. A lot of my friends who are against data centers right now are really like in acting. They paint, right? They're worried about this loss of human connection. And there's a legitimate reason for that. Why do I even read something that anyone writes? Because I know that another human being took the time to actually spend their life conveying those feelings, emotions, thoughts. They put it into paper and they gave it to me. And if we're commoditizing words where all of a sudden all my emails are automated by AI and all I have to do is show up to something that they're scheduling for me. Oh, you have coffee today with Brian at 4 p.m. Oh, you're getting drinks with Emily and Dave tonight at 8 o'clock. Like, oh, I am? Okay. Well, so then conversation
I'm going to take more time crafting my emails to you. I didn't realize you were taking them that seriously. I might start watching for typos at least.
Give me typos, and I know you didn't automate it. Right? It's like, please show me a typo in this email. Like, oh, there wasn't a space in the title. I know that someone actually wrote this. But so I hear the artist perspective, but like the way that the government is treating this on par with national security, energy. We're racing China to build the digital god. Whoever gets to AGI first is going to rule the planet. In their view. I don't necessarily think so. Maybe Ilya,
I don't think so either, but okay.
But you know what? This is the worldview of the people with their hands on the power lever. Kind of teaches you about how things are structured and incentivized. So
they certainly seem to be thinking that if anybody is going to build a digital god, it's going to be incumbent upon them to be first. It's like that great. It's like that great scene in Margin Call where Jeremy Irons explains how you succeed in finance and said, there's only but a few ways. You can be smarter, and I'm not that smart. You can cheat, and I don't cheat. Or you can be first. Seems like everybody's trying to be first.
Well, we have a lot of people piling into the hard stuff here today, Ilya. Gold's up 0.7%. Silver's up 3.6%.
I'm mad at it.
Bitcoin's up 6.3%.
I added some more to silver today because gold was a little soggier, but silver kept going. So I bought a little bit more. Added another call vertical in SLV.
Yeah, I got some Bitcoin today myself through iBit. Bought 10 calls.
iBit's been the vehicle. I like iBit only in the sense that as a trading vehicle, it's very friendly. It's liquid. It's easy to get in and out. The pricing's good. The spreads are narrow.
And it's not as much capital. If I'm going to Bitcoin futures, right? Let's just say I wanted to play just for the one, it's 8 days to expiration. That's the nearest expiry. I wanted to play, and at the money call spread here, that's the minimal $250 wide. It's still going to be nearly $1,800 of buying power.
Yeah, it's really expensive.
With iBit, for example, if I wanted to do the same thing, buy the 41 and a half tomorrow, I could scale up here off of $210 of buying power, which means like, I don't know, Ilya, if we wanted to go to the same position size, so to speak, right? We could buy 80 of these contracts.
Solid risk reward too, by the way.
Yeah, well, I'm now sitting in at the 29 days to expiration here, 45.50 here in 10 contracts right now, because if this is a bullish falling wedge and we have those major swing lows near 47, 46, right? Back last year in November, here swing highs in May. Bitcoin has, I think, a place to aim for in the short term. So
yeah, I mean that's the top of my vertical. I'm in the 39.45 vertical. I got 57 days to expiration though. I'm putting lots and lots of duration in here. This was really the story of why duration is important. I had to sit in Bitcoin for 44 days for it to wake up. And with 12 days to expiry, we get this. So when I was rolling it yesterday, going, you know what? I'm going to give myself lots of time. I'm going to dilute my delta exposure. Let's not run away here. There's always time to take things off. But for now, I'm going to give myself lots and lots of room.
So we're back in breakout territory, huh? The metals?
Sure looks like it.
This is going to...
Calling Mr. Hunt. Come in, Mr. Hunt.
I'm going to enjoy this a lot more than you are. Let me tell you.
I know you are. I know you are.
Oh, gosh. 3.6% higher. There's your silver, left shoulder, head, right shoulder. We broke out a few days ago in August. Now we're finding immediate continuation here to the upside after flagging on the other side of that move. So the downtrend is dead. We're getting close to it, but we could be looking at the first time the 1 month is back above the 50 for some time since late May here. Gold already did that today, by the way. This is a full bullish flush now. What a beautiful bounce off that 1 week moving average here in today's session. This is just clean.
I was so happy today seeing this that I added still more yesterday. I've tripled my position at this point since when I started getting in.
Yeah, I mean, I have something that's expiring here that's going to be at max profit in a few days. I'm
just buying the 1 ounce futures and just scaling them.
No, Cowboy. We've got places to go. Mouths to feed kind of thing. So what do we have here? So one is going to go off in 6 days. That's going to expire because it's the put butterfly down there, $160 winner. Good. The 42.30, 42.35 short put spread. This was our 5 futures trade for CME last week. So we caught this, and that's now up. Going to play that. I'm sitting long the out of the money, which is slowly creeping into the expected move, by the way. Long 5,000, long 5,050. I'm building into more though, Ilya, with a little bit more price improvement here. And I'm thinking that we can go further. Like if I see a 46.35 tick tomorrow, I think I'm going to lay out some even longer dated. Like,
I mean, to me, the bogey is 5,000.
I'm going to go further than that. I'm going to go out to like 5,100, 5,200 call spreads here. And like maybe
a cowboy, ladies and gentlemen.
No, that's what I'm saying. I think like I was being facetious. But this is kind of like the ring the alarm bell situation. I mean, I can't believe that we're seeing the Treasury. Yeah, there's no yield curve control until there's yield curve control. But the path to hell is paved with good intentions, my friend.
Sure.
And this is a brick in that path.
I don't know that it is. It could be. It could be. I don't know that it is. I think what we're looking at is Besant going, look at, if the economy is weakening to a point where there's going to be disinflation coming from the cycle itself, then he's got a bet to make. He takes a bet and basically says, look, I'm going to get to refi at the short end at lower rates because since the beginning of August, the markets have already sniffed out, we got to take these rate hike expectations down. Okay, so if you're Besant, you go, okay, market, I see you. I'm going to get better rates on my bills issuance. Let me chin check the market here. They're not going to fight me in an elongated fight. I'm not going to need to get into it with them. If in a few months the economy starts to be unmistakably rolling over, not in a way where we're having to kind of look under the surface, but in a way that starts to scream, third quarter GDP is coming up late October before this new effort expires. If Besant has to come out there and go, see, now you're just going to have to not have any Fed rate hikes. Now you're going to give me cheaper financing on bills. I don't need to say anything else.
Well, Ilya, I know I seem worked up about this. And that's fine.
Rightly so.
Rightly so. Last night after our little spiel yesterday, just for the sake of this, maybe it's because we're all, establishment shells, which is totally possible. Jay Barry and Jason Hover at JP Morgan, they're rate strategists. They put out a note with a few conclusions here that I think are just worth sharing with some folks.
Yes.
The Treasury's larger long end buybacks address the symptom, not the underlying fiscal problem that we have right now here in the United States.
Clearly.
They are arguing that there's no observable market functioning problem requiring Treasury to suddenly double the long end buyback. So what Besant's saying about illiquidity and spreads too wide with off the runs versus on the runs, nonsense. They point out that the U.S.
he's talking out of both sides of his mouth. He told
he
CNBC today that this was a chin check of the markets.
Yeah. So the U.S. is still running roughly a 6% of GDP budget deficit near full employment right now. They point out without genuine fiscal consolidation, the intervention risks damaging Treasury's credibility and raising the term premium over time.
Sure.
Which then pushes yields up.
That's if Besant gets into an elongated fight. I think Besant's gamble is he's not going to get into a long fight because the market is going to go his way. And by the way, the markets went his way. They heard him.
They expect the effect on long end yields to be fleeting unless the debt trajectory changes.
Facts. The question is how long? And is there a weakening of the economy in between? The debt trajectory has been the debt trajectory for decades.
It's worse now.
It's worse every year for decades.
What has been happening in the market was that widening of the 210 spread, the 530 spread, Ilya, over the past several weeks, right? Especially after the FOMC meeting in July. The 210 spread before the FOMC meeting in July was sitting at 32 basis points. It hit a peak the other day of 55 basis points. I'm rounding up. It's 54.7. Yesterday, it dropped 5.2 basis points.
It got smashed in.
And then today it went right back up. It's back up 3.5.
If you look at the twos 30s, because obviously they were acting in the long end here. If you look at the twos 30s, they've moved a little, but not by much. So if you look back 17th, so 3 days ago, you were looking at a spread that was sort of at the peak of it. Let's call it 113 basis points. We're down to 100. We're maybe 23 basis points up from where we were yesterday. Or 2.3 basis points, excuse me. So hasn't recovered all that much. But obviously, where the curve started to steepen is all the way back in June. So lots and lots of ground to cover.
Lots and lots and lots of ground to cover. No Alexander Hamilton is this Treasury Secretary.
Alas.
Okay. So then going into the next few days, I mean, were there earnings that are out? I could point out to Rostors here. Rostors, ROST on the charts. Down
Not
here,
great.
228 before the close, but we did have earnings out. And that's going to bring us back to 240, which unbelievably, if you played for the Iron Condor at the start of the week, you're probably walking away okay. If you did it today, maybe not. But if you did it at the start of the week, at the Monday close, we're right back to where we were on Monday. So right between the Monday high and basically today's low. Rosters earnings themselves. Where did we land here, Ilya? I'm not sure if you saw them, but I'm going to have them pulled up my screen in 5, 4, 3, 2, 1. Are they there? They're loading. Raw stores came out. No, they didn't pull up. Interesting.
Hold on a second. Let's see. Do we not have Ross yet?
Okay, 6.3 billion versus 6.15 billion.
Here we go.
In revs, 266 on their EPS, including a 60-cent benefit from IEEPA tariff refunds. That's nice. We, the consumers, got to pay higher prices, and then the companies are getting the tariff refunds. That's
Great.
fun. That's fun. Some comments here. I mean, they're increasing this is why this is good. Despite facing significant more challenging year-over-year comparisons to the back half, we're raising our outlook for both the third and the fourth quarters. Based on our strong first half results and our updated second half guidance, we're increasing our 2026 fiscal year earnings per share projections to be in the range of 861 to 877. So not bad, right? Good earnings, guide higher, income's up year over year. They get a little bit of a tariff refund, stocks back up, erases the losses of the past 2 days. We're still down on the week. But Walmart's the one that really got smacked around here today. This was a bad trade for me, Ilya. Where was I in WMT? Walmart here. I put this on for 35 cents at the start of the week, and I was able to get out at 90. Woo, that's bad. Wrong direction. I was looking for decay, not growth. So it was outside the expected move, and then I sold it near 106 and change. So I got out right when the market opened, but that was not a good one. I'm out of anything.
As I was writing my email to you overnight yesterday, one of the things I pointed out there was that Walmart over the past 2 quarters has hit basically in line with the numbers, but the price moves have been way outside the expected range. And we get it again here.
We get it again here. Dollar down a little bit earlier, bounces back. I'm keeping an eye on Bitcoin and gold more than anything else right now. Stocks feel like they're about to be cooked.
I sold. I got a little short in SPY here into the close. Sold some calls, baby little vertical, just to test the waters.
Well, I don't like that. At least we'll see what happens with MES and the ES short call spread tomorrow, Ilya. So like the the $500 or so the MES position's down. I've gained back clawed back $400 or so from the ES call spread. So it's like, okay, that's the whole reason why I kept it on in case the market pulled back while we were still in the expiration window. I'm not thrilled, but rather than taking that thing off at full loss and keeping the MES position running, and then all of a sudden MES comes down and I'm pulling my hair out that I pulled out of a trade too early when I had intended to keep it there the entire time. So tomorrow, Ilya, I think there's a little bit of a change of schedule because I'm not in tomorrow. So you're going to be covering last call. You'll be doing some more of the midday stuff. I need just to get a day off. I need a vacation day. I need to use my vacation days. Otherwise, you don't use them, you lose them. So I'm using it. Monday, also afternoon, I'm not going to be here. I'm doing some filming things in New York City for the company. So I guess you'll be taking last call again and overtime. Well, no, there's no overtime on Monday. So Mondays, I should say that. Tasty Crumbs, Mondays, 4 Eastern, 3 Central. Jim Karsan, Jermal, Chandler, they go at it. I talk with Jim on Wednesdays on last call. And then overtime is back Tuesdays through Thursdays, 4 Eastern, 3 Central. So what's been an interesting trading week so far, we will say adieu here on overtime. For Ilya Spivak, I've been Chris Vecchio. Join us again next Tuesday here on overtime. Until then, good luck trading. See you in the morning.
What's up, Tasty Nation? Welcome to the show. We got a crazy day in the markets for you today. It is